gentlemen, a warm welcome on Business Today Television. This is the start of a fresh week. On Monday, you see the Nifty and the Bank Nifty in a consolidative phase because breadth was overstretched last week, and of course over the weekend you have the US President Donald Trump again threatening to bomb Iran, even though peace talks and ceasefires are being discussed in Switzerland between the Vice President of the US and of course the Iranian Foreign Minister. Now the Nifty and the Bank Nifty are likely to remain flat to weak given the overall theme of a bit of strength in the oil prices. I'll request the PCR to kindly show us the chart of oil still below 200-day DMA but looking up from a 3-month low. So that's the broader structure. GIFT Nifty is pointing to a 30, 35, 40 point uptick. We will take that very happily. But the action, ladies and gentlemen, is in the mid cap and the small cap space. I'll request the PCR to show us the charts of the Nifty mid cap select 100. You have a fresh breakout happening there. The Nifty mid cap 150 index, the small cap 50 index, and of course the mid and small 400 index. This is where, ladies and gentlemen, either all-time highs have been hit or breakouts are impending. So please keep an eye out on these. Of course, in the sectoral space, you have strength coming into Nifty chemicals, India defense sector, as also infra logistics. Please keep an eye out on these. Apart from that, individual strength in stocks is seen in 3 or 4 pharma counters where lots of breakouts are possible. Look at Laurus Labs, strength in Biocon, and anti-malarial drug maker Ipca. Apart from that, you have Fortis Hospital, Marico, as also Usha Martin and NMDC from the metal space, which are the strongest stocks that I can make out in the 750 stock universe. Apart from that, let's move to defense. There is a lot of strength that is likely into Astra Micro, Bharat Forge, Data Patterns, Paras Defense, as also BDL. Within the small cap space, you can look at Aegis Logistics, from the broking space Anand Rathi, from the back end space CDSL, and of course IIFL. So these are the stocks that are in strength. We will shortly be joined by Ms. Vaishali Parekh, VP for Technical Research and Analysis at Prabhudas Leeladhar. Apart from that, the infra logistics space is in strength. Vaishali is with us. Good morning, Vaishali. A very warm welcome to you, ma'am. And a start of Monday. What are your prognosis for both the Nifty and the Bank Nifty, and what could possibly happen in the broader market?
Very good morning to you and all the viewers, Shelji. So I think, well, we are quite well in the trend, and in spite of all the news that we are facing, I think GIFT Nifty is indicating a positive start. We are currently showing 100 points up. So I would say technical resistance comes at 24,200, but we would observe a range. Now we elevate our support levels for this week to 23,500, and we would look at a near-term resistance at 24,200. Beyond that, of course, we have open targets of 24,400 and so on. Bank Nifty still continues to show strength as compared to Nifty, and I would say it's consolidating at 58,000 levels, but I would say once it crosses 58, we are looking at higher targets. So Bank Nifty also, we elevate our support levels to 56,500 now. So that would be the range as far as the major index is concerned. But besides that, we are seeing new round of momentum, of course, setting in the metal index. So also is the case with defense sector on the whole. We are seeing good strength. So yes, we are getting opportunities to look for a buy side.
Abha is with us. Over to you, Abha. Good morning.
All right. Good morning, Vaishali. You know, Shell was talking about a lot of the broader market indices looking stronger at the moment. But I just want to take a look at the index as well, because while everyone's been talking about India sort of being resilient in the overall setup in terms of what's happening around the world, we're still really massively underperformed, as we know. And we're halfway through the year right now. So I mean, what would you advise for the second half, and especially since we don't have clarity over whether or not in the second half we're going to continue to see the kind of FI outflows we've been seeing, how the rate hike scenario may pan out, so on and so forth. So would you avoid the index altogether right now, the Nifty?
Well, Nifty, the trend continues to be. Of course, I would wait for a dip if I have to make a buy strategy. Because as I said, the near-term resistance comes at 24,200. But I would still prefer stock specific.
All right, so that clearly seems to be the underlying theme. Lots of stocks on Shell's radar. I want to pull up defense as a theme, and then we can also pull up some of those specific stocks that Shell pointed out as well. But defense as a theme, for instance, was one that did see a strong move last week. Is that something that you expect to continue, or any specific names within that basket, given that they're already fairly expensive?
I don't think so. Actually, there is still scope for a lot of upside. In fact, as a disclaimer, we did start with recommendations in BDL, Garden Reach. So also is the case with Zen Technology, Paras Defense, so many, in fact, BEL. So all these stocks, I think they are quite good. So technically well placed. And I see there is a scope of further upside.
Okay, ladies and gentlemen, let's also look at some other parts of the market where you have strength coming in. This is the infra logistics space. Look no further than KPIL. This is Kalpataru Power. Very strong breakouts happening there. From the MNC space, you have Schneider in strength. This is now touted as a data center play because it makes a lot of back-end racks as also electrical equipment needed to set up data centers. You have Tejas Networks and you have Suzlon Energy. Let's get Vaishali's views on strength that she sees either in Tejas Networks or Schneider Electric. Vaishali.
Both these stocks look pretty good. Tejas also we saw on Friday gave a good bullish candle. So bias still continues to be positive. Near-term target is 650. Above that we would be looking at 720. So Tejas is on a good upward trend. And so also is the case with Schneider. It was a bit of a worry when we were seeing lower circuit happening, but then it was quite a good base at 1100, and from there on we are seeing a good bounce coming in. So I think once this stock crosses 1400, we can look at a target of 1550, 1600. I'm talking about Schneider.
All right, so that's on Schneider for you. Let's talk about Reliance as well, post the AGM. What are you expecting from the stock, Vaishali? A lot of announcement was sort of holding back ahead of the AGM last week. And this time, of course, sounding very bullish, of course, but analysts still seem to be saying some resistance may be in the offing.
So, well, still there is no clarity, but if we see 1300 levels breaking, then this could trigger a sell and go towards 1280 and so on. The bias turns positive only about 1320, 1330. So for now, we'll have to wait it out for one more candle to take the shape and decide accordingly. But candle was quite on the selling side. So if 1300 levels break, then it's a sell.
Okay, ladies and gentlemen, let's look at the chemical space now. 67 stocks is what I track in the chemical space, and the sectoral index is also in strength. Therefore, you need to look at Camlin Fine, you need to look at Indo-Amines as also Pidilite. Vaishali, to you, a view on the chemical space, anything that catches your fancy?
Yes, in fact, there are quite a few. In fact, besides the stocks that you have mentioned, Camlin Finn is very well placed. So I think looking at this chart, I think 128, 130 is a good base, and we would now take it as a trading strategy above 150. This could trigger a further strength of 170, 180. But there's Archean Chemicals, there is in fact the other ones like Navin Fluorine, Archean, Sudarshan is also very well placed. So these are the stocks which are on my radar, and I would look for a buy in these stocks.
All right.
Even fine chemicals, I think, yeah, fine, clean science, all these, they are looking quite good. If you look at fine organic, it's already gone into a good upward trend. And I think this can go towards 5,700. So yes, these are the stocks to my liking.
All right, great. Let's just take a look at some of the other news makers today. We've got a whole host of them. I think, for instance, Sun Pharma's making a acquisition. It's about a 270 crore acquisition coming in from Sun. Wellspun Living extinguishing the 1.5 crore shares under its buyback. For instance, Aster DM, NCLT has approved the merger of Quality Care with the company. Lloyd's Enterprises will acquire an 18% stake in Steel Infra Solutions. That's for 1,000 crores. So keep an eye out on Lloyd, actually. Pull that one up. It's a high value there. Cyient has launched a 720 crore rupee buyback offer at 1,125 rupees per share. And the tender window is opening. The buyback qualifies for tier exemption under the US Securities Exchange Act. So keep an eye out on Cyient as well. And the Sun Pharma acquisition is for 100% stake in Innovcare Life Sciences for 271 crore rupees. And that's a small one for Sun, but nonetheless, something that's going to keep it in the news. Power Mech bags about 1,000 crore order from JSW Thermal Energy. So Power Mech will pull that up for you. Mahindra Lifespace Developers acquiring a land parcel in Kandivali East with a development value of 5,600 crore and a development potential of 1.8 million square feet, keeping that one very firmly on the bull's radar. Good Luck India securing an order of about 255 crore rupees for the supply of long-range empty shells in a ready-to-fill condition. And Garden Reach Shipbuilders also receiving Navratna status from the Department of Public Enterprises under the Ministry of Finance. So a whole host of these names in the news today. And you can see how some of them have been faring over the last 1 week, have already been high on momentum. Any of these that you have looked at recently, Vaishali, that you may want to sort of take a call on, also on the back of news?
If we were talking about, well, that is also looking very positive, and well, this rally was much awaited. I would say this will gradually go towards 180, 200 levels. I'm talking about Wellspun Living. And before you joined in, Abha, I spoke about Garden Reach also. This too looks pretty good to me. In fact, as a disclaimer, we have recommended this, and this I'm looking at a target of 3,000 to 3,200.
Okay, let's again pay attention to the rally that's happening in the defense space. Vaishali, a view that you may want to offer on Bharat Forge. This is, of course, the big daddy of them all. Lots of order flows coming in. And, of course, the earnings in the third quarter were also pretty good. What are the charts telling you?
Well, I think there is still a lot of strength. It's not showing any signs of exhaustion. So I would say one should keep a stop loss, trailing stop loss of 1900 levels, and this can go towards 2300. So chartically, it looks very good to me, and I think one should hold for higher targets. I would not recommend a buy at these levels, but yes, continue holding.
Bharat Forge also signing a 425 crore rupee contract with the Ministry of Defence for the supply of gas turbine generators. That's to the Indian Navy for onboard power generation of Kolkata class ships. Nestle is meeting today to consider the declaration of a special dividend for 2026 from the company's retained earnings. Som Distilleries has applied for the grant of an excise license for its Bhopal plant, and that has been rejected by the Excise Department of Madhya Pradesh. Kirloskar Oil Engines has announced a major order from Hypernext for close to 200 megawatts of power generation capacity to support hyperscale AI-enabled data centers in India. That's interesting. this is a unique one, Vaishali. I'm just going to bring this one up with you as well, Kirloskar oil, because the AI story is going to play out in a whole host of ways on some of these names that may not be directly visible to the market.
I think, whole of Kirloskar pack looks very good to me. So Kirloskar oil also, the trend is very strong. It continues to be an upward trend. There is still no exhaustion. So I would say this too can go to 2000 plus. So 2300, 2500, that would be the next projected target. So view is positive. In fact, along with that, if you look at Kirloskar pneumatic, etc., they all look very good. So whole of Kirloskar pack is quite promising.
All right, so promising view coming in there.
Fair point. Also,
go ahead, Shell.
okay, ladies and gentlemen, let's. It's already 8:47. Let's analyze some more stocks that Vaishali can give a view on from the FMCG space. Vaishali, a nice view that is coming in on Marico. Very strong charts here, and what are they telling you? I already see a record high here in the last month or so, but a swing trade in the making probably.
Definitely. So I think Marico is one of the stocks which has been a good one in the FMCG counter. A brief consolidation at 800 levels. So I think one can take a buy with stop loss below 800, and I would look for a target of 850 for now.
Okay, that's on Marico. Anything from the auto pack, since we're on consumption, Vaishali, and I mean some concerns around the monsoon, etc. But at the moment, auto still seems to be revving.
Yeah, it's a bit sluggish and a slow-moving sector. But I would say, Hyundai Motors, I still do like. Mahindra and Mahindra, 2900 is a good support level. So is the case with Ashok Leyland. All these stocks we do like, but which gives confirmation in an upward trend are more of auto ancillaries. So if you look at Samvardhan, JBM, Jamna Auto, etc. All these look quite good. Ashok Leyland also, as we speak, I think 130 was a fair level. I think it made a low of 140 in the recent past, and from there it's bounced back. So once it crosses 163, 165, I think it's ready for 170, 175. So yes, these are all fair values because all these stocks have seen a good corrective move, and they're bouncing back from its oversold zone.
Okay, 850, and a lot of moves that are coming in the pharma space. Vaishali, a favorite between Ipca, Biocon, and Laurus Labs, all of them trying breakouts to various degrees near their double top buys. A view on any one of them which you like?
So resistance. So I would choose Laurus Lab. 1380 could be the near-term support. For a positional view, 1350 is a good support. Look for a target of 1480 to start with.
Okay, I think in pharma we've also got outside of Sun, I think we also have a few other newsmakers. I'm just trying to pull that up for you. We of course talked about Aster DM earlier, and Sun as well in the news today. And I think Aurobindo, the US FDA has completed a pre-approval inspection at Eugia Steriles Private Limited. 5 observations. We'll wait for more details on that. A couple of pharma names in the news this morning. Now, last week was quite a hit for IT after the initial sort of run up on the back of the Sarvam buyout. What's the view this week going into IT, Vaishali?
I think it's a very stressed sector. I mean, I'd rather give it a miss because we are getting opportunities in other stocks. So I would give it a miss. But if one has to, then I think Infosys with Friday's low as stop loss, one can get into it just for bounce back. I mean, that's how I would look at it. I won't really go all out to buy these stocks.
Okay, fair enough. And
I'd
I think
rather look at the hotel sector also. Have a look at ITC hotels, have a look at Indian hotels. Hotel sector is bouncing back. So I think these are the stocks which look pretty attractive. Then offbeat stocks like Lenskart, that is another stock which shows new round of momentum setting in. So I think this is giving me a more of a clarity to buy these stocks.
Okay, lots of interesting picks there. I think
9
Shell also
minutes to
had
opening, ladies
NMDC
and
on his.
gentlemen.
Let me
Sorry, I
align with you
lost.
on that one.
Please continue, Abha.
Shell? Vaishali? Yeah. Sorry, I think I can't hear.
Yes, I can hear you.
Okay, go ahead. I was saying I think he was also pointing out to a possible breakout on NMDC. Does that align with your charts as well?
Let's just have a look. NMDC currently at 88. So, well, I don't think there is a breakout right now. It's just consolidating. So, I would say make a good view because a good strong support at 86 levels. So, I think that could act as a support and we'll take it from here on. Above 90, this gets into new round of momentum. But I prefer Nalco and Hindalco. They are showing good signs of bounce back.
Okay, perfect. That's the metal wrap up that Vaishali provides. Now about 5-7 minutes left to trade. For trade to begin, ladies and gentlemen, we are of course on Monday. The gift Nifty is pointing to a modest start, positive, which is really good because broader markets seem to be taking fancy to what Mr. Trump is saying in terms of restarting bombing on Iran. So oil prices are high and therefore Nifty and Bank Nifty should be in a consolidative phase, more so because over the last week we saw the breadth being stretched. Remember, since the previous week, midweek, maybe 10 days ago, the Nifty has rallied about 1200, 1300 points. The Bank Nifty has rallied 5,000 points. So time for the market to consolidate, take back some of those gains, welcome in new players and bid old players goodbye with a bit of profit. So all that is happening, but very strong breakouts are being observed in the mid-cap space, which is the mid-cap 150 index, the mid-cap select index. You have strength in the small-cap 50 index and the broader mid and small 400 index. Vaishali, how are you seeing the broadening of the rally in the market? We have a flat to weak Nifty, Bank Nifty, but mid caps are in strength.
Precisely. So mid cap is performing very well. Small cap sector has also a good scope of upside. So I think one keeps getting ideas, and I would focus on these because these are the ones which are giving us good returns. So yes, the strength should continue.
So what would be your favorite in the large mid cap space on the long side?
Well, that's very difficult to answer. But, well, I mean, as we are looking at all the MNCs, then we just spoke about Schneider. If that comes in that category, I do like that. Then we have GE Vernova. These are the stocks, Hitachi. They are still showing a lot of strength. So I would focus on these stocks. We spoke about Voltam transformers very many times. We spoke about Kirloskar Pneumatic. So, well, these are the stocks I would look at. In fact,
Okay.
if you look at
Within
it,
the capital market space, Vaishali, there has been a. Please continue, ma'am.
yeah, so Angel One has done its round, but I'm looking at BSE also. BSE is just oscillating. I think that is another stock which I would consider once it gives a clarity. But overall, all these stocks are doing well. I would now look at CDSL, CAMS. These are the stocks which can get into momentum. Already shown some. If you look at CDSL, 1400 is the 200-day resistance. So if we see the stock moving past, I think 1500, 1550 would be the next target. So yes, these are the stocks one can look into.
Okay. Yes, CDSL is also on a lot of scanners which are exhibiting strength. Remember, CDSL is a subsidiary of the Bombay Stock Exchange. It owns about 20% stake in CDSL, and the stock has corrected very sharply from 1822 that you saw in July of 2025. Previous to that, there has been a record high of 1977 in December. Now well below 200-day DMA, but the last 3-4 days has seen an uptick. Remember, the NSE IPO has sparked a rally across the board in many capital market stocks. Look at Anand Rathi, look at Angel One. Of course, BSE and MCX have been outperformers, but CDL in strength and showing further signs of a good breakout. We are 3 minutes away from pre-open. Let's analyze a little more in stocks and look at Suzlon for the high beta low ticket items. Vaishali, a view that you may have on Suzlon?
Yes, everyone's focus has been on Suzlon since quite some time, and it's coming out of its consolidation. I think this is here to stay. The rally should continue. 63, 64 would be the next target. A good buying opportunity if one has to look at buy it with a support of 55 rupees.
Okay, ladies and gentlemen, the reason why Suzlon was sparking up was a view that was emanating from the government that old windmills, Suzlon by the way is India's largest producer of windmill turbines. So the government to meet its targets for renewable energy is of the view that old windmills which are 15, 20 years old, 30 years old should be replaced. So new windmills of course make more wind energy from the same set of parameters, the same location compared with what are old ones. Therefore, it makes sense to replace them, and that's the reason why the rally has been sparked over the last 10-15 sessions as far as Suzlon is concerned. Let's shift focus and talk about one beaten down stock which is again showing signs in the defense space looking up. BDL. Vaishali, you may want to offer a view on Bharat Dynamics. Again beaten down, 2100 is what we've seen in May of 2025, but somewhere around 1373 now. Vaishali.
I do agree. So this is what I just mentioned, that yes, the stock has shown a lot of erosion. And we were looking at it right from 12-20 levels, and we gradually took it as a trading strategy. So right now the bias is still positive, but the near-term hurdle lies at 1400 levels. A close above 1400 would change the trading strategy into a longer-term positional trade going towards 1450, 1500 levels. So that's how I would look at this stock. But attractive buy at these levels because, as we said, the risk-reward ratio is very favorable.
Okay. Anything else that catches your eye before the markets open? Actually, they are. Let me just highlight the pre-open. 130 points higher on the Nifty. This is looking good. Led by Reliance. This is looking even better. 1.4% higher. TCS 2.35% higher. Let's hope this continues. Tata Capital, this is something that I've been watching just for a while. This was below the IPO price, but now perking up and showing in the top traded list. Keep an eye out on Tata Capital. This is a stock that is a part of the long-term portfolio, and something that Vaishali pointed out, Kirloskar Engineering, 20% higher. I'm sure this will correct, but 2389, needless to say, this is a record high. But now that's how it is. Order flow in Garden Reach Shipbuilders, 1.8% higher, 2850. IFCI, the rub-off of NSE, 1.4% higher, 87. You have strength in Bharat Forge, 2% higher. Let's look at top gainers. You have Himachal Futuristic Circuit, 5%. Sem India Projects, this is the new Adani stock on the horizon, 5% higher, 1314. You have RVNL 2% higher, AIA Engineering 1.4% higher. Losers, Bombay Burma Trading, Graphite India. You have a weakness in Cohance Life Sciences, Gland Pharma is weak, Urban Companies down, Jindal Stainless has slipped 1.1%. So that's the pre-open, ladies and gentlemen. Before we bid goodbye to Vaishali, a final view on the week ahead, maybe this expiry as well, Vaishali. What are you seeing in your crystal ball?
24,200 would be my target for Nifty, 24,200, 250. And stocks, of course, I would focus on frontline banking stocks. And let's see what else we have to see. Bharti Airtel is another stock. Bharti is doing very well. So Bharti is the one which is going to help Nifty go high. And so also is Sun Pharma, I mean few of pharma stocks.
Okay, fair point. 902, ladies and gentlemen, a quick break here. We'll be back shortly. India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Friends at the G7 turns foes 2 days later. After sharing laughs and handshakes at the G7 summit in France, a war of words has erupted between Donald Trump and Giorgia Meloni. The trigger, Trump's explosive claim that the Italian Prime Minister begged him for a photograph. The US President told an Italian TV channel he did not need to speak to Meloni. Trump went on to say that he would not have taken a picture with the Italian Prime Minister, but did so because he felt sorry for her. Escalating his remarks further, Trump claimed that Meloni had begged him for a photograph. Trump also alleged that the Italian leader wanted a picture with him so badly. Meloni fired back within hours, saying that neither nor her country ever begs.
Dunque, certe cose meritano una risposta immediata. Le dichiarazioni di Donald Trump sono dichiarazioni totalmente inventate.
Donald Trump's statements are completely made up. I'm frankly appalled. I don't know why the President of the United States behaves this way with his own allies. After all, it is not the first time this has happened.
Con i nemici degli Stati Uniti, con leadership con le quali invece...
The timing is hard to ignore. Just days ago at the G7, the two leaders were all smiles, and Meloni even said, Trump and I have always been friends.
We are friends again. We are friends again.
Always been friends.
No. You recovered that.
This photo row did not come out of nowhere. Trump and Meloni have been collecting flashpoints for months. First, a clash over the Iran conflict. Then, friction over Trump's remarks targeting Pope Leo. And after that, concerns in Rome over possible US troops cuts in Europe. And now, what began as a G7 photo op has developed into the latest chapter of a very public transatlantic spat. A massive diplomatic spat has now ensued. Italian foreign minister has cancelled a planned US visit, calling Trump's comments offensive to all Italians. From friends again to firing salvos across continents, the Trump-Meloni relationship appears headed for fresh turbulence.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only
on
on
India
India Today.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. Well said! Well said! Well said! SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning, you're with us here on Business Today. I'm Abha Bakaya. Let's take a look at the top stories at this hour. Well, good news for the markets. Foreign institutional investors bought nearly 5,000 crores worth of shares on Friday. It was the domestic investors who are rare sellers, offloading stocks worth 1,160 crores in the cash market. Shipping traffic across the Strait of Hormuz declining sharply on Sunday after Iran closes the waterway again, cites violation of the interim peace deal. Just 5 ships passing the strait on Sunday versus 26 a day earlier. India's crude oil imports returned to near normal in June. Russia emerges as the biggest supplier. UAE emerges as one of the largest sources. Imports from US plunged more than 60% this month. Crucial week for India-US trade talks. Top American negotiator Jameson Greer to arrive in Delhi just days after Modi-Trump meeting at the G7 summit. Reports say India to seek sunset clause in the deal. Global markets start the week on a cautious note. U.S. stock futures are under pressure and oil prices are climbing as investors track the latest twist in Iran peace negotiations. Asian markets are mixed with West Asia tensions and key U.S. inflation data keeping investors on edge ahead of the Fed's next move. And the rupee opening weaker against the dollar this morning at 94.36 versus 94.32, which is still fairly decent versus, of course, the recent lows. Precious metals also edging higher in opening trade today. MCX gold up 600 rupees this morning and silver up 2,000. So back at about 2.35, still below 2.5 lakhs per kilo. Now, the first round of US-Iran talks over and agreement on 60-day roadmap for the final deal has also been reached. This is according to reports that the first round of US-Iran talks is now over and agreement has come through. Technical talks will continue all week. Both sides have agreed to a Lebanon peace mechanism, and Iran has said they've secured waivers for petro exports as well. Global markets have reacted positively. Asian markets are building on this in early trade as well. Brent has been falling. It was at about $80. It is continuing to cool off now. We have been trending at about 24,100. Pre-open also indicating a gap up start now. And it looks like we're set to follow those global cues this morning. Shailendra Bhatnagar and Avinash Gorakhsakar joining us today. Shel, while of course the pre-open is looking like it's positive, I think you were marking a few cautious notes in our earlier chat.
Yes, I was, Abha, and I'm very pleasantly surprised that you have a 90-point uptick on the Nifty. Basically, 24,100 is back with the bulls. Some of those stocks are in strength. Look at Kirloskar Engineering, 11% higher. Himachal Futuristic, 4.5% higher. Garden Reach, Amber Enterprises, Aster DM and of course BPCL are in strength. So these are the opening quotes. Let's see how it pans out at 9:15, and a very warm welcome to Avinash.
Avinash, good morning. What are you making of the early morning action? It's looking confident. Any kind of cautiousness or resistance that you feel may still be in the works?
Yeah, I think good morning, Abha. Good morning, Shale. I think one good part today, Abha, is that Mumbai experienced very good, rains in the morning. So I think the markets would look at this positively. I think a monsoon spell is always, welcome by the markets. But I think globally also, I think, now the tension between US and Iran has slowly now started ebbing out. And I think markets are now going to look at macro numbers, what kind of earnings numbers come in the first quarter of this financial year. But I think net, the good news is that valuations have also come up quite well. This 90-point rise is largely on the index, but there are many stocks in the broader market where I think there's going to be a lot of action. And I think mutual funds have been busy on their shopping spree, looking at the broader market also. So I think, sector-wise, we continue to be positive on autos, banks, capital goods, hospitals, hospitality companies, and typically anything which is connected with the domestic Indian market. I think in case of IT and pharma, I think these could definitely remain in a small range. But net, I think this is the time now to pick up value and look at the medium to long-term picture, which I think now looks pretty promising after this geopolitical situation has now completely been solved.
All right. Okay, so that's the view on the setup. The IMD has revealed shocking rainfall deficit numbers. Rains now 42% below normal. This is up till the first 3 weeks of the month. Rainfall is at 82% below normal in central India, and the monsoon deficit 73% in northwest and 62% below in the south peninsula. So those are some heavy numbers there, and remember this of course impacts consumption down the line as well. So we will track some of the implications of this and whether or not it can be made up later on in the season. Right now, however, it is looking substantially dismal at this point of time. Now, more news on the India-US front, which we'll get to in just a moment. I think we're very close to market opening and the opening bell, so let's first wait for that. Remember, we'll be watching out for RIL post the AGM, and they've really spoken about the new businesses, execution being on track, and of course the Jio IPO also in the offing. A lot of key investments that they spoke about as well. So Reliance will be in focus today. And other than that, we also have a whole bunch of newsmakers, whether in defense, in pharma, rail, energy, some of these pockets, infra, logistics are continuing to look good, whether it's order wins or on the charts as well. And we'll talk about some of these as we go along. Cyient in focus, keep an eye on that one as well. On news coming in on its buyback offer that's at 1,125 rupees per share, and the tender is opening tomorrow on Cyient. Now that's the opening bell for you. We've got Nifty just up at about 24,099 as indicated, so steady and a good start, I'd say, for Monday morning. And Nifty Bank also steady today. Let's take a look at some of the gainers and losers for you as well, and where some of the strength is coming from. IT seeing a bit of recovery buying, wouldn't read too much into it. We saw quite a distress selling last week on IT. Cipla today up 1.5%. HDFC Bank, Hero Moto bringing up the gainers list on the index this morning. And Nestle following suit, also going to be talking about its dividend in its board meet. On the downside, ONGC, Titan, Power Grid, 0.5%, 1% on some of these names. Bajaj Finserv, IndusInd Bank and SBI Life. So financials continuing to be soft in trade, just about flat to a little negative right now. The India VIX is still up about 2%, but definitely has improved since we last tracked it. I think the broader markets is really where a lot of the action continues to be on order wins and other such news. Shell, let me go to you for some of the picks from the broader market.
Yes, Abha, as you very rightly pointed out, it's a nice, decent start as far as markets are concerned. 85 points higher on the Nifty. Very quickly, we look at the advanced decline ratio. Strength, 1963 shares in the green, 500 in the red. So it's very nice, 4:1. All 19 indices are in the green. That's really good. The IT index, nice bounce back, 1.2% higher. Auto in top shape, realty doing pretty well. A quick look at all-time highs. Kirloskar Engineering, and remember Vaishali was pointing out to the hotel space, you know that better than me, the Leela, 3% higher, good representation coming in from the financial space, Aditya Birla AMC record high, AB Capital record high, Anand Rathi record high, NAM India in top shape, and Radico doing pretty well. Abha.
All right, we'll talk about some of those stocks in just a moment with Avinash. But first, let's take a look at what's happening on the India-US trade deal. Talks are back in focus. US Trade Representative Jameson Greer will visit New Delhi on June 23rd and 24th for discussions with Commerce Minister Piyush Goyal, as both sides look to put the final touches on an interim trade deal. However, India has made it clear that any agreement must ensure lower tariffs than those faced by competing nations. Listen in.
पहली बात जहां तक सर्जियो कौर का स्टेटमेंट है, मैंने पहले भी बताया कि हमारा फ्रेमवर्क एग्रीमेंट तो फाइनल होके अनाउंस भी कर दिया हमने। उसके बाद उनके सुप्रीम कोर्ट का ऑर्डर आया कि वो जो पुराने टैरिफ से उन्होंने रद्द कर दिए। तो जब तक हमें वो कॉम्पिटिटिव एडवांटेज ना मिले, मैंने अभी बहन को जैसा बताया, वो कॉम्पिटिटिव एडवांटेज मिलने पर हम फ्री ट्रेड डील को लागू कर सकते हैं। तो बेसिकली वो पेंडिंग इश्यू मेनली वही है कि कैसे वो सुनिश्चित करेंगे कि हमारी ड्यूटी हमारी स्पर्धा में जो बाकी देश अमेरिका में व्यापार करते हैं उससे कम होनी चाहिए। जैसे वो सुनिश्चित हो जाएगा, व्यापार का समझौता को लागू किया।
Well, the deal may be nearing the finish line. For more on what's at stake and what Greer's visit could mean for negotiations, let's go across to Karishma Sadani. Karishma, take us through all the latest.
The visit to India could actually be the last of such official visits, because this could actually now conclude the conversations and bilaterally bring us together on the trade table very soon, especially after both the countries signed the interim agreement back in the month of February. In fact, recently at the G7 meeting, Prime Minister Modi and President Donald Trump's collaboration and conversation has also paved the way that we're not very far from doing this. Now, as Commerce Minister Mr. Goyal has already emphasized that while everything looks sorted and 99% of issues have been solved, of course, India is looking for a preferential treatment. And once the Supreme Court's decision supersedes, that is in the month of July, around July 24th, 10% baseline tariffs will come to an end. India is seeking to have a better tariff rate rather than its competitive and neighboring nations, so that traders and exporters of our country are at a benefit. And for this, these are just the nitties and gritties of conversations, last moment conversations that can actually bring the trade deal to a close.
All right, Karishma, thanks for bringing us all the latest on that high-profile meet, and we'll keep an eye, of course, on developments on that front. Avinash, let me come to you on some of the movers and shakers. What's catching your eye in the market, and where will your focus be when it comes to specific stocks?
No, I think banking looks interesting, and of course Reliance Industries, last week's AGM was very promising. I think they've said that they're going to invest a lot of funds in AI infrastructure, data centers, and of course the Jio IPO. I think the Jio IPO was a long-awaited event. So I think now markets would start penciling in some sort of value growth for Reliance, considering that it becomes the biggest beneficiary of this value unlocking. So I think at these levels, Reliance can be an interesting bet. I think considering the fact that oil prices have also pulled off, that actually also improves their GRM margins. And plus, the retail and the telecom business have been steadily recording good numbers. So I think Reliance and the PSU banks, I think PSU banks look pretty attractive, something like a SBI, Bank of Baroda, Canara Bank. I think after the first quarter, hopefully growth should come back. And I think markets are looking forward for some sort of re-rating in these stocks, because the balance sheets are healthy, the asset quality is also very good. So net, I think, investors should keep a watch on the PSU banks and obviously Reliance.
All right, so Reliance will be the big one, of course, in the next leg of growth, next 6 to 12 months, quite crucial for the heavyweight. Now, China sanctions 56 US companies, and 10 US defense companies on export control lists now. That's the latest coming in. 46 US companies out of the government procurement list. China retaliates to the US move 2 weeks ago. Remember, they had sanctioned 188 Chinese companies. So that's the latest news coming in on your screen. China now hitting back, sanctioning 56 US companies and 10 US defense companies on export control list. 46 US companies out of the government procurement list. And China has retaliated really to the US move 2 weeks ago when US had sanctioned 188 Chinese companies. That's the latest coming in over there. All right, a few other newsmakers. Let's just quickly run you through. I think we're seeing a strong move on Voltas this morning. EPAC Durable is moving higher, up about 10% there. So some of these names are looking good. Garden Reach, we've been talking about that as well. Navratna status for that one. So strong move coming in on Garden Reach as well. Kirloskar Oil on that order win is up 16%. Let me just bring that one up for you. And remember, this is for further tools for data centers. So quite a positive reaction coming in on this one. 17% coming in on Kirloskar Oil. Avinash, let me get a quick view from you on this one. It's trading at 2334 right now as we speak.
No, I think Abba, the Q4 numbers were good, and I think the management commentary, the order book, all looks very impressive. And I think even in the current year, looking at the kind of run rate of orders, I won't be surprised that FY27 also will be a very strong year. The stock is up by 16-17%. So our sense is that, if you want to look at this company, it's better to buy it in a staggered manner. 17%, the spurt may possibly result in some sort of profit booking later. But yes, next 12 to 15 months, the outlook definitely looks positive.
All right, so looking positive, and 176% in the last year on Kirloskar Oil as well. Phenomenal move coming in on this one. These are the kind of picks that we want to find in the market, isn't it, Shell?
A 21% rise in year-on-year sales in the quarter gone by, 2,116 crores. Profit surged 43% to 115 crores. And as very rightly pointed out by Avinash, maybe you will attract some selling here, but remember, this is a data center play, as also is Cummins India, as also is Schneider Electric. And over the longer term, you've seen it create immense value. Let me just give you the number when it comes to multi-bagger returns that Kirloskar has come up with. It's appreciated by 22% each year, Abha, for the last 10 years. So it's a decadal journey of creating multi-bagger returns. Sales and profit haven't compounded as much as the profit has, and therefore that speaks about how the market is accepting this rise as well as future trajectory with open arms. Abha.
Got it. All right. Okay, so that's really the setup this morning. We are holding steady and it's looking decent. Avinash, in terms of the index itself, and given that we've underperformed global indices in the first half, continuing to look uncertain right now in the second half of the year. I know we're bullish or optimistic, but it's still a little uncertain in terms of global cues, the rate scenario, and so forth. Do you feel perhaps the value is better found in the broader markets right now, or are you still bullish on the index as well?
No, I think as I mentioned earlier, Abha, the broader market would offer better opportunities. In fact, 24,100 level, I think the markets would consolidate because, as you rightly mentioned earlier, the monsoon has been a drag. And Q1 numbers, the market is looking at a weaker set of numbers considering the earlier rise in crude prices. So I think after the Q1 numbers, obviously markets should start penciling in a better kind of growth momentum, which could take the index higher. So I think till then, I think the broader markets, whenever the market corrects or there is a good opportunity, investors should look at the broader market because that is where the real alpha would created over the next, say, 1 to 2 years.
All right, so that's where the real alpha will be created. And considering that, it's the last week of the month, Shell, and then, of course, we're heading into a fresh quarter, fresh earnings, and, of course, the monsoons. Do you suggest perhaps holding steady this week as all of these loose ends get tied up on the trade deal, on the West Asia peace deal, and so forth?
So, Abha, I think the the outlook is brighter than what it was 15-20 days ago, especially a month ago. Oil prices have dimmed below 200 DMA. That's very, very good. This ceasefire deal will be in place. Hormuz will open, and Q4 will the earnings in Q1, which are due in July, will bring in a lot of momentum. Mid caps, small caps are looking good. We are waiting for clarity on IT, which should come in the first week, and then you will have a strong move because banks are already moving within the Nifty. It's IT that's pulling it down. Let's hope the earnings are good and we have a strong traction on the long side. Good Diwali compared with a bad monsoon.
All right. We'll leave it there for now. We'll, of course, be back with you at 3 p.m. for market closing. Avinash Shell, thanks so much for joining us. That's all from us for now.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning, ladies and gentlemen. Monday starts on a strong note as far as markets are concerned. You have a century on the Nifty in terms of the green tick, 115 points higher. 24,126 is where the Nifty is headed. There is positivity all around. You have 2,000 shares in the green versus 717 in the red. All 19 indices are showing signs of strength, although it's a modest uptick, but IT index 1% higher. Remember, Friday it had just cleaned out the base. Nifty Financial Services 0.5% higher. Gains are limited, but still in the green. Let's look at the top performing stocks and look no further than Kirloskar Engineering. Top traded counter in terms of volumes, and you have 18% uptick post an order win to a fresh record high 2359 for you. Reliance, lots of brokerage reports coming in after the AGM, is the top traded counter. 351 shares, 351 crore shares worth of shares traded, 2.3% higher, 1340. Strength in HFCL, 4% higher. NIACL in top shape. This is the rub off of the NSC DRHP, 4.5% higher. Garden Reach upgraded to a Navratna, a Maharatna from the government. That's why strength 3% higher. Mr. Lakshmikant Shukla joins us in the conversation, Senior Technical Research Analyst at Yes Securities. Good morning to you, Mr. Shukla. A view on the Nifty, strength today?
Shubhrava Shalenji, and good morning to all Business Today viewers. Nifty is looking strong. We have seen good rebound after witnessing that gap down opening occurred on Friday sessions. But today it felt like that it could breach this level of 24,200 where it's 200 or where it's 100 SMA placed. I think that would be the upcoming hurdle for this index. But if it gives solid breakout of the levels of 24,200, then after it will pick momentum and we will see further upside move in Nifty toward the levels of 24,500 to 24,600 zone, where its previous month swing high is placed. So we expect this breakout will come soon, and Nifty will pick up momentum in the upcoming sessions, while Bank Nifty need to surpass its immediate hurdle of 58,000, and we will see bullish momentum in Bank Nifty toward the levels of 58,800 to 59,000 zone, and strong support is placed around 200 SMA levels, that is placed around the zone of 57,700 zone. So as long as it holds this support, I think we will be positive and we will see further bullish upside move in Bank Nifty also.
Fair point. 9:32, ladies and gentlemen. That's the view coming in. Lakshmikantji, your top two picks.
So first, I would like to recommend from the pharma space. Today we have seen positive momentum in Aurobindo Pharma. It has breached its previous swings high also. Although we on the daily chart, it has come up with this formation of bullish candle above its short-term and long-term moving averages. So I think further upside move could be seen in Aurobindo Pharma toward the levels of 1,570 to 1,580. And support is placed around the zone of 1,450. So holding these level, we will see further upside breakthrough in Aurobindo Pharma. Second stock which I'm looking good on the daily chart, it is Endurance. So from last 3 to 4 days, it has been maintaining its prices above its 200 SMA and 20-day SMA. So further breakout could be seen in this stock once it surpasses the levels of 2,675. Then after it will give cup handle breakout on the daily chart and will move higher toward the levels of 2,800 zone. On the downside, the levels of 2,580 could be seen as the strong support. So holding this support, one can go long in Endurance for the upside target of 2,800.
Fair point. 9:33 for you, ladies and gentlemen. Let's look at the record highs in the market. This is where a lot of money is moving in. Look no further than Kirloskar Engineering and a stock that I've marked repeatedly, Aegis Logistics, from the infra logistics space, 6% higher, 7% higher, a fresh record peak 1,078. Aditya Birla AMC 1.5% higher, Aditya Birla Capital 0.5% higher. You have strength in Polycab now in 5 digits, Piramal Finance 2108, and of course NAM India 1181. These are record highs. A view, Lakshmikantji, that you might have on Aditya Birla Capital 378, 0.5% higher.
The primary trend is on the bullish side since so long. It has been maintaining its higher tops and higher bottom on the weekly chart. In today's sessions, it has given consolidation breakout of the levels of 375 to 376. So overall sentiment looks positive in AB Capital. So I think above these levels, it could trend higher toward the levels of 385 to 390 kind of zone. And support is seen around the levels of 365 to 368. On Friday, it has formed bullish engulfing candle on the daily chart, which is again showing strength in AB Capital. So we expect the upside levels toward the zone of 385 to 390 with the stop loss of 365.
Okay, fair point. That's the structure of the market as of now. A view on Pidilite Industries. What are the charts telling you at these levels, Lakshmikantji?
A few days back, Pidilite Industry has given pole and flag breakout of the levels of 1,510. And if you look at the broader time frame structure of Pidilite, then it has formed inverted and shoulder pattern. And we have already seen this breakout of this level of 1,460. Now it is consolidating near its previous swing high of 1,600 to 1,595 zone. I think further breakthrough could be seen in this stock once it surpasses this level of 1,600. Then after, I think it will again resume its upside momentum, and we will see bullish upside move toward the levels of 1,650 to 1,660 kind of range. So if anybody want to go long, I think wait for this breakout. Once it crosses the levels of 1,600, then after he will initiate the long position.
Okay. There is a lot of strength that is coming into capital market stocks. Lakshmi Kanji, something that you would have on CDSL. What are the charts telling you?
So CDSL has seen good amount of recovery from the lower level. Previous it has seen a decent amount of correction, but the now structure has improved in CDSL. It has formed a double bottom price pattern on the daily chart. Currently, it is resting near its 200 SMA that is placed around the zone of 1395 to 1400 zone. I think big breakout we can see in CDSL once it crosses the levels of 1400. From there, it will give double bottom price pattern breakout, and we will see a bullish momentum in this stock, which could push it higher toward the levels of 1480 to 1500 zone. So I think that would be the good candidate if someone wants to initiate long position at current level also, but breakout will occur once it crosses the levels of 1400.
Okay, so that's the view that is coming in. 100 points higher on the Nifty. The small cap index is 45 points higher across the board, ladies and gentlemen. It's a modest and a good start in the market. Let's look at the volume buzzers apart from Kirloskar Engineering, which of course has shot up dramatically. You have Clean Energy, 8 percentage points higher at 845. Very strong volumes. 10,50,000 shares have been traded. Let's get a view from Lakshmikant on Garden Reach. A very strong order book, now a Maharatna. What are the charts of Garden Reach telling you, Lakshmikanji?
Structure looks positive in GRSE. Recently, it has surpassed its previous swing high of 2,870. And today it has also formed bullish belt hold candlestick pattern on the daily chart, sustaining above its short-term and long-term moving averages. RSI is also trending higher with positive crossover in MACD. So from here on, we could see a positive momentum in this stock toward the levels of 3,130. If it able to hold the levels of 2,775 on the downside. So from here on, we could see uptick in this stock toward the levels of 3,130. So that would be the expected target, what we are expecting from the current level, if it able to hold the levels of 2,770 on the downside.
Okay, fair point. 9:39, ladies and gentlemen, the first 20-25 minutes of trade have lapsed. The Nifty has maintained strength, now consolidating above 24,100. Let's look at stocks that have contributed to the strength as far as markets are concerned. 40 points by Reliance, 2.25% higher. HDFC Bank and ICICI Bank contribute 16 and 15 points respectively. Infosys, Bajaj Finance and Cipla are contributing 8, 7 and 3 points respectively. What are pulling the Nifty down? It's Adani Ports, Titan, Adani Enterprises. So, heavyweights are moving up, which is good, and lightweights are pulling the Nifty down, nothing to be worried about. Let's look at the FNO space and find out top gainers for you. You have a Policy Bazaar, 3% higher. Futures of Voltas are 2.2% higher. Coforge Futures, 2.4% higher. Cipla Reliance Delivery, 1.5%, 2% higher, three of them. Multi-commodity exchange futures are 1.2% higher. And of course, you have from the public sector space futures of RVNL and RECL in strength. That's the futures list. What are the ones that are showing losses? Profit booking in Cummins India futures 2.2% higher. GE Vernova, much needed. Varun Beverages, Dalmia Bharat, Max Healthcare, all of them 1.5% lower. 940. Lakshmikanji, before we let you go, a view that you might want to offer on stocks such as Samvardhana Motherson and of course Bank of India.
The Motherson chart looks strong because it has shown resilience even in the fall of the market, and already it has given a good breakout from its previous swings high on the weekly charts. From last few days, it has been maintaining its structure above its 20-week moving averages. So I think defending these levels of 135 to 139 zone. Further upside move could be seen in this stock. Immediate resistance is seen around the levels of 150. After surpassing this level, it could trend higher toward the levels of 160 to 164 kind of range. So overall sentiment looks positive in Motherson. And for Bank of India, so even Bank of India has been consolidating from last few sessions. Recently, it faced hurdle from its 100-day moving averages that is placed around the zone of 151. So that would be the level to watch out for Bank India. So I think one should wait for this breakout. Once it give breakthrough of the levels of 151, then after it will move higher toward the levels of its previous swings high that is placed around the zone of 156 to 158 kind of range.
Okay, Voltas is what we will look at, ladies and gentlemen. Decent heat in North Delhi, rains nowhere in sight, and Voltas room AC sales have crossed the 10 lakh mark for the first 3 months of financial year FY 26-27, and that's the reason why we see a very sharp uptick. Before we pull the curtains down on this show, a view on Voltas. Lakshmi Kanji.
So Voltas has surpassed its 200 DMA, but at the same time it is also facing resistance from the levels of 1410 to 1415 kind of zone, and again it is going to slip below its 200 SMA while forming shooting star kind of pattern. So from here on, some more profit booking could be expected. If it sustains well below the levels of 1370, then probability is higher that it could slip lower toward the levels of 1330. On this flip side, for gaining momentum, it needs to cross this immediate swing high of 1412 to 1415, and then after we will see some sort of positive momentum. But looking at the bearish candlestick pattern, I am not expecting that it will gain momentum. Probably it could see some more profit booking toward the levels of 1330.
Okay, no sell. We'll focus on the chemical space, ladies and gentlemen. A sharp jump as the government moves to protect domestic industry, 13% higher. News of anti-dumping duty being imposed on one of its products whose imports are now being made costlier from China, the US and the EU for the next 5 years. Voltas I have already marked. APAC Durables, this is an EMS company, 9% higher. They are the makers of non-branded ACs and therefore a supplier to Voltas, and therefore you see this smart move coming in. Tata Motors commercial vehicles in the green. They have an order win of 3,400 electric vehicles. Keep an eye out on that one. And from the power ancillary space, Power Mech. It's bagged an order worth about 1,000 crore rupees from JSW Thermal Energy, and that's the reason why you see this nice green tick on the counter. We'll call it time, ladies and gentlemen, 9:45. Stay on with Business Today Television. Lots of exciting things happening on the first day of the week. I'll be back at 11 with the most aggressive fund manager that India has known, Sandeep Tata. Stay tuned.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
स्वागत कीजिए INS दूनागिरी, INS संशोधक, INS अग्रय।
In a major boost to India's defence self-reliance, the Indian Navy has commissioned 3 indigenously designed and built frontline warships. INS Dunagiri, INS Sanshodhak and INS Agrai. Prime Minister Narendra Modi presided over the commissioning ceremony at Syama Prasad Mukherjee Port and called the induction a significant leap towards building an Atmanirbhar Navy.
INS विक्रांत से लेकर आज तक की यात्रा केवल नए युद्धपोतों की यात्रा नहीं है। यह भारत की बढ़ती आत्मनिर्भरता की यात्रा भी है। आज INS अग्रय, INS दुनागिरी और INS संशोधक उसी यात्रा को नई गति दे रहे हैं।
Built at Garden Reach Shipbuilders and Engineers in Kolkata and designed by the Indian Navy's Warship Design Bureau, the 3 warships reflect the rapid progress of India's indigenous shipbuilding program and the Navy's modernization drive.
These 3 warships, yes, we have made history on 30th of March 2026 when we delivered 3 warships of 3 different classes to the Indian Navy. Same customer, same shipyard, 3 different classes of warships. A very unique achievement.
INS Dunagiri is a modern stealth frigate packed with advanced sensors and weapon systems. The warship is armed with BrahMos supersonic cruise missiles and is designed for multi-dimensional combat operations.
INS Dunagiri is the 5th ship in the sequence. So why do we call it a stealth frigate? We call it a stealth frigate because it has got reduced RCS, radar cross-sectional area, and we have features that makes it very, very silent.
Joining the fleet is INS Sanshodhak, a state-of-the-art survey vessel equipped with advanced hydrographic systems, autonomous underwater vehicles and digital side-scan sonar, significantly enhancing the Navy's maritime survey capabilities.
The INS Sanshodhak, this is specialized in conduct of hydrographic surveys, which helps in understanding the ocean spaces, and accordingly all maritime operations, maritime trade, any kind of naval operations or maybe coastal development, can be efficiently planned, and it overall supports the economic growth of the country as well, in addition to the naval operations.
Completing the triad is INS Agrai, a specialized anti-submarine warfare vessel built to detect and neutralize underwater threats in coastal and shallow waters. The ship is equipped with indigenous rocket launchers, lightweight torpedoes and advanced shallow water sonar systems.
So this ship is primarily built for anti-submarine operations in shallow waters and littoral waters. This ship is specially equipped with the kind of sensors and weapons which can prosecute any underwater threat in the shallow waters, wherein it is challenging for the big ship.
With the commissioning of these 3 indigenous platforms, the Indian Navy has added another layer of strength to its maritime arsenal, reinforcing its operational preparedness while advancing the vision of an Atmanirbhar Bharat in defence manufacturing.
GRAC Kolkata have made history by delivering 3 warships of 3 different classes on a single day. One is frigate, another a survey ship, another anti-submarine warfare shallow watercraft ship. It is being said that addition of these 3 into the arsenal of Indian Navy will only help the Navy to embolden its stand in the Indian Ocean and Indo-Pacific region.
On ground in Bengaluru, joining me is Anish Raman, who's Chief Economic Opportunity Officer at LinkedIn. Anish, thank you for joining us and congratulations on your book, Open to Work.
Thank you.
Let me begin by asking you, how relevant is the phrase open to work in today's age of AI?
I would say highly relevant because we've got it on the cover. But the story of open to work, I think, is really interesting. It is a filter on LinkedIn that you can put if you're looking for work. We launched it during the pandemic when suddenly people all over the world were out of work overnight. And it has really helped people find work. And the best part to me is you can do it privately to recruiters and it helps you. But the people that do it publicly and are able to get their community to help them through weak ties. I know this person, you don't know them, you should talk to them. So it started as just open to work, looking for a job. But in the age of AI, we think it's so important for all of us to be open to. And open to how work is changing and what work is changing into.
Great. In today's times, we've moved on from an era of, say, credentials or degrees to that of skills and creativity and how many apps you can work on, which also, of course, comes with the AI. How do you see the current scenario with hiring, especially by white-collar companies and jobs across?
Yeah, I mean, right now it's tough if you're looking for a job. It's gotten harder to get an interview because the AI tools make it easier for people to apply to jobs. The volume of applicants makes it harder for recruiters to sift through. So right now I would say AI is making it harder to get hired and harder to hire. I think that will get figured out and we'll start to get to where people are more intentional about the jobs they're applying for, or the interviews that they're going for. Employers have always had a hard time shifting even to skills. I mean, India's in the front. It's a country that's leading from the front there, but there's all this sort of machinery of taxonomy and credentialing that has to keep adapting even as the skills keep changing. I think that where we're going is entrepreneurial work for everyone, because everyone can build something now with these tools. You need to have these core human capabilities, but show what you can do as a sort of entrepreneurial thinker. And that work product is going to become more and more critical to how you get a job and how you succeed in a job. So degrees will still matter, your resume will still matter, alongside that skills will matter, but more and more I think the work product is going to be the thing that really punches through. So if you're looking for a job, you have to do the old ways still, but the more that you can showcase what you can do with these tools, and the story you have of your strengths, the better you're going to be.
Right. You did talk about India, and I do want to emphasize on the young Indian workforce, which is quite large in number. And while they're all very enthusiastic in looking forward to opportunities, they're also the most unemployed when it comes to white-collar jobs. Do we blame AI or do we just blame the geopolitical circumstances?
Look, it's tough to find a job. It's exceptionally tough if you're a fresher, if you're coming into the labor market in India. Our data shows that a lot of that is interest rates. If you look at sort of where hiring was pre-pandemic to now, and if you look at entry-level work with other work, generally it's interest rates. But I would say certainly the uncertainty of what AI is going to do to work is in the swirl. Companies are really wrestling through what is this technology, how are we going to use it, what does that mean for our workforce. People who are coming into the workforce are wondering what does this mean for the jobs that we need to get in order to build the experience that we need to have in order to become leaders at companies. I will say in the past, and I've been global now with this book, in the past few months, there's a really good conversation happening, which is that companies need entry-level workers. That is the future leadership. And those entry-level workers bring strengths. They know AI tools, they're more entrepreneurial. Entry-level workers, freshers, are starting to get more creative about how they think about the job search. If they can't get that one job at that one place, they're, with curiosity, as we talk about in the book, thinking about other sectors. Small businesses are a huge growth story already. They're hiring, they're looking elsewhere. And I think and hope more and more people are going to build businesses as a side project or eventually as their full-time job. So the creator economy and founders on LinkedIn is a great signal for us. Founders is up over 100% year over year on LinkedIn. Of the top 3 jobs for new grads, the number 3 one is content creator. 7 in 10 Indian professionals we surveyed want to work for themselves at some point. So this younger generation, I think, is starting with a need to rely on themselves, be resilient. They don't think they'll get one job at one company and be okay. And I think that's going to bode well for them as they try and figure this out.
Yeah, and I think it is with the younger generation that the whole concept of side gigs have also emerged. I think one of the reasons why most of them have now taken content creation as their full-time jobs. But let me get back the focus to your book, Anish. Tell me, what was the experience co-authoring this, and what made you attempt this?
Yeah, well, Ryan and I, neither of us had written a book before. At the time, he had a busy job as CEO of LinkedIn, and so there was no need for us to write a book. But we had both been pushing this skills idea and trying to better the labor market, better how it matches talent and opportunity, really fight for the average worker who hasn't been able to have a real shot at work. And when AI hit and we saw the conversation building and we saw how it was so charged and it was emotional and it was fueling fear and uncertainty. And for us, worst of all, it was fueling this fatalism, this sense that everything is predetermined, that you and I have no agency, no control. Whatever's going to happen to us is going to happen to us. And we knew that wasn't the case. We knew that this tool was going to take time to shape society, but that we humans would decide. And we knew that individuals had more agency than they realized. So we wrote this book really to help people, to just help people move from anxiety to agency, maybe even aspiration. It was hard. It's a hard thing to write a book. If you've never done it, I'll try and dissuade you from it. And if you still need to do it, you should do it. But you know, Ryan has built products for his whole career. I've never done that. This is the closest to that experience where there's some ups, there's some downs. You don't know if you're going to make it. There were moments where I really didn't know if we had a book, if we had the book figured out. There was a meeting last year on May 1st where we had done everything right about the book we were going to write. We sat down, and this is the human to human part. We said, is this our book? And we just said no. And we had to sort of start over. And in that meeting, we started to talk about the story of Apollo 13. And that idea of failure is not an option. That becomes the introduction. We start talking about how people need to buckle up. That becomes chapter 1. So it's been this sort of like process of test, learn, build, iterate, almost like a product. So I've really, it was hard, but I've taken strength from what the process has been.
You did speak about the 3 A's, the one that starts with anxiety.
Yeah.
But you also mentioned about the 5 C's in the book. And I particularly, specifically want to talk about courage. Because courage could have a lopsided meaning here. It could in one way talk about the courage to actually get out and put yourself out there, take that risk. Or courage could also mean an uncalculated move. Could you share a bit, give your insights on the 5 C's?
Yeah, I mean, I think we all need to take risks in this new world. I think the biggest risk is to not take risks, and that's true if you're a CEO, not just a fresher coming into the labor market. But obviously you have to take calculated risks. And so we sort of build an argument across the book. The first is failure is not an option. In this moment, with the story we start with, there were impossible odds, but they brought the astronauts home safe by focusing on immediate steps, so we should do that. We talk about how technological change happens, why we all need to lean into this moment, why we start with these strengths, these 5 C's, and resiliency and adaptability and how to be entrepreneurial. But then we start to take it to the practical application at work. So your job is a set of tasks, not a title. Your career is a climbing wall, not a ladder. And in the career chapter, we talk about these 3 questions we all need to ask. Why do I work? For most of us, it's to get paid. But as we think about beyond that, alongside that, what
Hello and welcome. You're watching This Is Today Television. I'm Sakshi Batra, and this is What's Hot, a show that focuses on the biggest buzz on the D Street. Well, we've started on a positive note in this holiday shortened week. Friday, of course, will be a stock market holiday, but we have 4 days of trade, and this session begins right after. Last week has been big in terms of announcements coming in on the primary markets. 2 of India's biggest IPOs in Indian stock markets that we have ever seen. NSE and Reliance Industries have gone ahead and filed their DRHPs, and we're going to be understanding what this really means for the markets. Of course, we'll be focusing on a lot of stocks to watch on brokerage houses list as well today. But let's straight away welcome our guest on board. We have Gaurav Sharma joining in from Globe Capital as well to share with us a fresh take on the markets. Gaurav, good morning. Good to have you with us. We've started on a positive note, about 0.5% higher on the Nifty. Your sense of how is this week going to pan out? Is large focus again going to be on these big bang IPO announcements that we have seen? Will people start to save some money now to participate in them? Or do you think the secondary markets will now also start to ride on this new, fundraise opportunities?
Hi, very good morning to you. Thanks for having me today. So yes, a good start for the week. It is a truncated week. We are having a holiday on Friday. The Monday morning kick started on a stellar note. We are, as of now, 120, 130 points up. Nifty is scaling higher. The only important thing is whether we will be able to surpass 24,200 odd mark or not. Once that is taken out, we'll straight away head towards 22,400 odd levels, where the 200 period exponential moving average lies. That will eventually lead to some kind of a resistance area for the Nifty index. As far as Bangkok is concerned, it is slight bit of underperformance is being seen today so far. Although I do believe a rise above 57,850 on the spot for the banking index will take it towards 58,000, 58,200 or mark. So we are actually waiting for a trigger to happen to take some intraday positions. Until then, it is better to stay put and wait for the right opportunity.
Okay, but let's now talk about these big bang IPO announcements, Gaurav, and how are you looking at it? NSE and of course after that Jio, which is now being touted as the biggest IPO ever that we could see of 35,000 odd crore rupees, and in addition a complete fresh issue of sale as well, in contrast to NSE's offer for sale that we are seeing. How are you looking at, of course the details are yet to be out, we are yet to look at the clear price band, but what are you penciling in terms of valuation and the kind of price band that we could look at for Jio, and what opportunities do you think investors should now be seeking here?
Yes, actually, there are two big names which are awaited, which were long awaited to post and come up with their IPOs. Value unlocking being seen for Reliance, Jio being listed now, a very big move. NSE again a big move. These are two large IPOs that Indian markets will witness. 30,000 crores is a very big numbers. And there is one important thing also. When they bring cheer to the initial public, the primary market, they actually suck money from the secondary market. So we may witness that kind of a dull move here. Because generally the SpaceX IPO going 4 times or 5 times oversubscribed at that size. Of late we have seen LIC, which was the biggest on the domestic markets. Again, it led to that kind of suction of funds. And now they are two back-to-back big entities being listed. So slightly, this will have an impact. Again, as far as valuations are concerned, we find real comfort with NSE when specifically comparing it with the existing competitor BSE. So we find reasonable comfort in it. As far as Jio is concerned, the performance of Jio has been very nice. In the past 2-3 years, the company has made a mark, and an important one for itself. Therefore, both are good, both are attractive, and we are looking forward to it.
Okay. Now, let me understand only for Reliance Industries shareholders, how should they be looking at this? Do you think, the Jio IPO coming in will also lead to value unlocking for Reliance Industries shareholders? Will it lead to Reliance Industries re-rating itself? We've seen Reliance Industries go into this announcement, which was much anticipated, with weakness. I mean, we look at double-digit losses for the stock price this year-to-date level. Last 1 year, about 8% of a loss as well. How would you really look at, whether Reliance Industries itself has, an upside to be bought into ahead of the IPO?
This is a long-awaited thing, Sakshi, we have been actually looking at. These are three major entities that we look at. First is the petchem business, second is the Geo, and the third is their retail business. So they eventually they have to be divided. It is the Geo IPO that has been announced now. It is a great opportunity. We see a lot of value for the Reliance investors. We remain bullish on the stock from a long-term perspective. In the immediate near term, we may not see that kind of jubilation coming in. But when they are separately listed, I think Geo and retail business will have their separate charm, and we have a brighter interest among the three in the Geo business only.
Okay, let me also read out how brokerage houses have penciled in their takes on Reliance Industries post this announcement of the Geo IPO. We have Jefferies reiterating a buy on Reliance Industries with a target price at 1675. They see an upside potential of 28% from the current levels. The retail recovery could re-rate the stock is what they're saying. The FMCG push could drive the future growth. The FMCG revenue target, according to the announcements made at the AGM of 1 lakh crores by 2030 is something which is being seen as a trigger by Jefferies. When we look at Nomura, they also maintain a buy rating on Reliance with a 1640 target. AI moves from the plan to execution part is something that they liked from the AGM announcements. The Jamnagar AI hub is now taking shape according to them. Reliance Intelligence, according to them, will be driving growth. And CLSA target is seen at 1800 levels on Reliance Industries, an upside of 38%. Let's also talk about how Reliance is now further expanding its wings. It's already, a large conglomerate, but how the next phase of growth by the next generation will be driven into these absolutely new areas of where the world's focus in on AI, on data centers, on space technologies. So how are we looking at that kind of digital infrastructure now taking center stage when it comes to Reliance?
Just taking a quick check from the recent AGM updates. The Reliance's intelligence and the sovereign AI business that you are just mentioning, they are coming up with a 120 megawatt compute schedule by the end of this year itself. The initial NVIDIA that came at about 300 gigawatt fleet equals to around 75,000. These are some technical figures as such. Broadly, what it is, they have mentioned that they will be using AI on their geo networks. They are investing too heavily on other platforms as well. The Geo Health, the Geo Learn IQ, the Geo Krishi IQ. So these are the areas they are concentrating at. Again, always been a huge fan of Reliance's thought. They invest in India, concentrating at the larger population. Here as well, they have mentioned in their AGM the kind of AI investments they are doing. They are forward looking and they are concentrating at the larger chunk and the larger population base that India has. Just remember, when Jio was launched, they came up with real cheap prices. They were the first one to launch a calling free network. They are just charging for the internet. So these are the kind of thought process these guys come into, and they revolutionize the industry as such.
Okay, got that. Let's also shift focus now to, what are the other key stocks that are in news beyond these primary market actions, which of course we will continue to tap on and keep getting you fresh perspective viewers on as well. But let's look at the top stocks in focus. We have Tata Motors in focus. The stock moved up about 2% in the initial trade, bagging 3,400 plus ECV orders. Now orders across freight passenger segments and nearly 900 electric trucks that have been booked. 500 electric buses have been ordered now. The space comes in as far as how e-buses as a theme has been now picked up by the government as well, and that space clearly is in focus. Tata Motors is in focus because of that, but from the auto space, we also have Bajaj Auto in focus today. Biggest buyback, of course, is on the way. Record date of June 24th. The buyback consists of 46.9 lakh shares, which is capped at 5,633 crores. The price has been fixed at 12,000 rupees a share. Still offers about 19% premium to the market price as well. So let's try and understand how should one be really looking at these auto stocks that are in focus. We'll start off with Tata Motors first, because after the demerger, one has to really clearly define which are the stories that they want to track. Is it the passenger vehicle growth or the commercial vehicle growth? What we are seeing is, of course, commercial vehicles are now being driven by a lot of government orders and focus shifting to, electrifying a lot of fleet that exists. When it comes to passenger vehicles, of course, a lot still depends on what's happening even on the global markets for Tata Motors, and how things will pick up pace there. How would you look at Tata Motors on the one hand, and of course, purely for a buying back opportunity on Bajaj Auto?
Tata Motors passenger vehicle. Firstly, let's talk about this company. They are just impacted by the recent cyber attack and the sales hit of the JLR global numbers. Once, I think in a quarter or two, these things will settle out and they will start performing. We would see the value coming in here as well. Overall valuation fronts, this company is not at all expensive. They are reasonably priced in. They have been pioneers as far as at least the Indian market is concerned for the electric vehicles. The Tata Punch has been the top selling. Now it's been, I think, crossed by the MG's Windsor. I think they are doing reasonably well. It is just a matter of time. We have to look at it from a longer term perspective. As far as commercial vehicles are concerned, again, the electric play is doing well for them. The government is having a clear focus. Delhi government has already announced their EV policy. Other state governments are following suit. Being it a BJP is in the policy as well. Therefore, we believe that more BJP governed states will come up with such policies. So that will eventually favor. Now, as far as Bajaj Auto is concerned, let's just talk about their electric stuff only. They have also started doing it. Delhi government has already announced that no further registration of petrol two-wheeler will be done in Delhi. It will be only electric two-wheelers. I think it is from 2027 onwards. So these are clear stances, and they will eventually change and revolutionize the two-wheeler industry. The four-wheeler is seeing a complete shift over with rising mounting prices of petroleum products, including gas, CNG as well. I think people will consider shifting to these vehicles. So Bajaj Auto, overall, yes, it is good. We are also keeping a close eye on how Hero MotoCorp is doing. It is underperforming for quite some time. We remain very bullish on this stock from the from a long-term perspective, 2 years and beyond. These are very good levels. Bajaj Auto, a clear comparison, I think that will be very difficult to do because Bajaj Auto has already run up. So from a near-term perspective, we find comfort in Bajaj Auto, but from a longer-term perspective, 2 years and beyond, I think Hero MotoCorp is the one one should be looking at.
Okay, got that. Let's also focus on some of the other key stocks in focus. Let's talk about Voltas and AC makers that are in focus today. Voltas has actually announced, that the stock has also jumped 5% after the company has announced that it has crossed the milestone of 1 million air conditioner sales in less than 3 months of the ongoing fiscal year 2027, achieving the landmark in record time. Now, this would augur well for the company. The stock is also already corrected from the day's high point. It's now just about 1% higher. But let's try and understand this also in the perspective of what's going to be coming up in terms of the El Nino and the super El Nino shocker that everybody is bracing for, at this point in time, and try and understand whether this will augur well for AC companies at large. We have seen over the last couple of years, the summer season has not been as long as it used to be early because of pre-monsoon showers and monsoon showers coming in early, thereby disrupting a lot of sales for these AC companies in the last couple of summer seasons. This time, however, there is this El Nino impact where we are expecting lower monsoons and below normal rainfall. How are you looking at that with the perspective of the AC companies? The data is already pointing out to bigger sales than before.
Absolutely. It is a blessings in disguise for the AC manufacturers. Lesser monsoon means a hotter or a extended summer season, which favors the AC makers, the AC part makers, and all the companies which are associated in and around this industry. Blue Star being the largest of those. We have among the listed entities, LG is there, Blue Star is there, Amber Enterprises is there, which is actually all over the news with their recent partnership with Oppo. So these companies, AC makers, will certainly be benefited out of this disruption. A lesser monsoon is a clear benefit for them. It is culminated into their numbers. Voltas, the largest AC maker and seller in India, has also already shown the amount of benefit that they are already yielding out of it. Yet we are 3 to 4 months down the business as far as summers are concerned. The northern India summers are little extended. Therefore, I think this time they may see a better summer season from them as far as sales are concerned.
Okay, got that. And on the flip side, which are the sectors that you believe are ready for pain when it comes to the weak performance in the ongoing monsoon season?
Anything and everything related to the rural India will be impacted because if we do not have a good monsoon, the cultivation, the crops will be negatively impacted. Fertilizer companies, two-wheeler makers, Hero MotoCorp, that is, I don't say that that's a reason for its underperformance, but yes, in the near term, this stock may witness the heat because they drive a reasonable volume from the rural India and their penetration is highest among the three. Other than that, chemical companies which provide agrochemicals, which drive a larger chunk from the cultivation. So these are some areas which will be negatively impacted from those. And of course, they will have a larger impact when they will start impacting inflation numbers. So that's a complete different story.
Okay, fair point. So that's as far as, of course, the impact of monsoons is concerned. But let's also focus on some of the stocks that are truly buzzing. We are looking at Kirloskar Group really in focus. Most of the stocks are rallying in sharp single-digit gains and even double-digit gains today, especially Kirloskar Oil Engines that has rallied to a all-time high after the Indian generator maker has secured a 192 megawatt order from Hypernext, which is a deal that analysts view as a major breakthrough for the company expanding data center power market with, of course, Cummins, which has traditionally dominated over 80% market share there. So let's try and understand what this means for the company, for the group. Yes, it's at a 20% circuit today at 2389. There's a sharp rally here. We have been seeing consistent improvement across the group over the last couple of years. The segment itself has outperformed. Now we are looking at these new forays, especially in an area which is like we are talking about how a new theme is emerging and has a lot of interest from investors across the world. How are you looking at Kirloskar Oil in that aspect? Do you still believe after today's sharp run up there will be value to be had? And is this just going to be the start of a new phase of growth for Kirloskar Group and Kirloskar Oil specifically?
I think Kirloskar Oil has been performing a stock from over a year now. Just take a quick look in the recent past, just about a year back, the stock was trading at 700 rupees. Today, after the 20% uptick, it is trading closer. It is now closer to 2400 mark. It is already multi-folded. It's a multi-bagger now in just 1 year. it is among the very few companies that have registered a FII interest as well. They have managed to attract that. The reason is consistent rise in their revenue, consistent rise in their profitability numbers, while maintaining their profit margins. So that's actually playing in well for the company. And now with this, the new order, again, the jubilation led to a 20% uptick in the stock. Therefore, it's doing well. Investors, this is not the time to actually take a fresh in this stock. But existing shareholders should can maintain a hold on this stock, and any dip from the current level should be utilized to add up to your position.
Okay, let's also focus on one more stock that is buzzing, and that is Bharat Forge. The stock is hit a 52-week high on receiving a 425 crore rupees contract from Ministry of Defence. This order marks Bharat Forge's entry into marine gas turbine business as well. And this order is for the supply of gas turbine generators, GTGs as they are called, to the Indian Navy for onboarding of power generation on Kolkata class warships that we have. And let's try and understand how should one be really looking at Bharat Forge at this point in time. One, your specific comment on Bharat Forge post this order, how would you look at the stock? And of course, on the overall defense market, that constantly is in focus because of the order flows that are coming in. But yet again, the kind of stupendous rally that we had witnessed about a year and a half ago or so, that kind of a momentum is still missing. So what are you understanding from what's happening on the defense space?
Firstly, let's talk about Bharat Forge. It's been a slow but a steady performer. The defense space, I won't say that it is a late entrant, but it is doing fine for itself. Gradually, they are gearing up pace. They are into those niche segment within the defense space, and they have started getting orders now. Other than that, Bharat Forge has always been a good company, a stable company, very fine pedigree. As far as financial performance is concerned, it is also doing in well. The recent quarters, the company has managed to post good set of numbers. We look forward to it, and we remain bullish on this segment, this particular company as well. The recent ongoing profit taking in the broader market, the stock was completely unaffected with it. As far as overall defense pack is concerned, from the past 2-3 odd years, we are seeing the war-like situation in some of the other parts of the world. Therefore, it is actually keeping the place hotter for this particular segment. And I think with the recent one, the Iran, Israel, and US war, these are actually risen greater concerns for self-reliance, for defense related equipment, especially maritime equipments and air defense systems. So this is a good place to be in, but from a longer term perspective, this is not a small story to actually look at. From a 2-3 plus years kind of a perspective, one can stay bullish on it. HAL, Bharat Electronics, and Mazgaon Dock are our favorite picks from this segment.
Okay, got that. I hope viewers, you've noted that list as well of the topics that Gaurav has shared from the defense pack and the perspective he has shared there as well. Let's also talk about the overhang on the macros, especially commodities, crude oil. We have been seeing that the crude oil prices had been ebbing lower. Therefore, from the peak down about 30 odd percent, and therefore all the focus was back on the oil marketing companies as to whether they are looking at a break-even crude at around 85, $80 a barrel as well. Pre-war break-even was at $75 to $80 per barrel. So we are looking at around the same range where crude oil prices are now trading at. Now the key understanding is how should one be really expecting what goes forward in terms of earnings for the oil marketing companies? How should one be looking at IOC, BPCL, HPCL, and what should one do with the upstream clients? ONGC, Oil India, Reliance in that aspect as well. So we'll try and understand that. Of course, again, some disturbances on the weekend led to some uptick on the crude oil prices. It's hovering around $80 a barrel. Your own approach to the oil and gas sector, at least for now, and how you're gauging the macro scenario develop from here.
The first word that comes to my mind is volatility. This segment will remain volatile for quite some time now.
Okay.
And it is we are expecting this volatility to continue going forward as well. As far as the immediate prices of crude are concerned, a further slide towards a 74, 72 range is pretty much possible. But I think US and Iran needs to keep their muscle power in a check now. Then only we would see a further slide. As far as the profitability and the impact of the rise in the crude oil pricing on the oil marketing, Indian oil marketing companies is concerned, at least one more quarter is needed. This quarter is actually will be negative for the OMCs. The impact certainly would be a question mark here. Once though they announce their number, then only we'll come to know how much was the impact and how well were they able to mitigate this particular issue. But I'm not expecting any kind of jubilation coming in, at least in this quarter. From the next quarter and the following quarter, we would see recovery in those stocks. As far as the refineries are concerned, yes, their GRM numbers will be impacted. A higher crude oil price is positive for the refiners and negative for the OMCs. So they have an inverse impact on both of them.
All right. Okay. Gaurav, anything else specifically from your end? What are you watching out for on top of your radar now before we thank you for the show?
Sakshi, Ashok Leyland from the auto pack is one stock that is on our radar. We are pretty bullish on it. It has seen good amount of profit taking. The last month sales figures were not at all impressive. It was a 4% downtick in terms of sales. The stock is witnessing the heat. We remain bullish on this stock from a longer term perspective. Valuations are fine. Commercial business, the truck and the buses business, it will eventually benefit from it. It drives a larger chunk of its revenue from the state bus transport, and since they are into a modernization phase, this company will also benefit from it. Therefore, from a 1 to 2 years perspective, investment perspective, one can look at Ashok Leyland.
Okay, fair point. Ashok Leyland is noted there. Thank you so much, Gaurav, for being with us on the show and helping us decipher all the opportunities that exist in the markets. Thank you so much. Hope you have a great time. We'll see you soon on another edition of Business Today.
Thank you, Sakshi. Always a pleasure.
Thank you. All right, viewers, we'll wrap it up on that note. But coming up next is a special edition where we decode for you all that you need to know about Reliance Jio IPO. We are also going to be helping you understand what do you make of these big bang IPOs coming in, mega issues of NSE and Reliance Jio coming in soon into the markets. What would that do to the secondary markets and all? All of that discussion is coming up. In case you want to know the fine print as to what should your strategies be right ahead of these big bang IPOs, then stay tuned. We have a special coming in just 2 minutes.
In the 12 years as the Indian Prime Minister, Narendra Modi had to deal with 4 US presidencies under 3 presidents. 2 of them were Democrats, Barack Obama and Joe Biden, and twice with Republicans, while Donald Trump presided over the Oval Office. Narendra Modi was just sworn in as the Prime Minister of India in 2014 May. When Barack Obama, as the President of the United States of America, had roughly a year and a half left in his second term. In that brief period, they seemed to be working well. There were two landmark Modi-Obama summits held in that period. The first one was at the White House on 30th September 2014. And the second one happened when the US President came to attend the Indian Republic Day celebration as the chief guest in January 2015 in New Delhi. Together, they achieved a breakthrough on the long-stalled civil nuclear deal through an insurance risk pool and renewed a 10-year defense framework.
Our two nations are prepared to step forward firmly to accept the responsibility of this global partnership for our two countries and for shaping the character of this century. The promise and potential of this relationship has never been in doubt. This is a natural global partnership.
Mirroring this warmth, President Obama concluded the joint briefing by declaring,
India and the United States are not just natural partners. I believe America can be India's best partner.
But a bilateral investment treaty and concrete climate emission caps remained unresolved between the two partners. Then came the first term of Republican President Donald Trump. This Trump-Modi era redefined the
Welcome, viewers. You're watching this special edition on Business Today Television. I'm Sakshi Batra, and this is where we are going to be decoding for you what it means to be looking at the biggest ever IPO in the history of stock markets. Reliance Industries has announced last week that they're filing the DRHP, which brings closer to the Jio IPO that will be soon coming in onto the D Street, and of course it will give a lot of investors an opportunity to participate in something which has never been seen before, the largest ever IPO in the history of stock markets. But what it means for you, what should your strategy be, and how to understand this, this event from a large stock market perspective is something that we will decode. We have with us a special guest, Harshal Dasani, business head, INV Asset PMS, and we also have with us Pawan Nahar, my colleague, joining in from Business Today to first help us understand what has really truly been announced so far as the IPO of Reliance Jio is concerned. So welcome to both of you. Thanks for joining in. Pawan, straight to you first. We're already talking about this biggest ever IPO. Just 2 days back, we were talking about NSE as the biggest IPO. Now it's going to be Jio. What are you expecting here? What are the final details that investors must know?
Our viewers, first of all, the Jio IPO, it will be an entirely fresh share sale of 27 crore equity shares. The Reliance Group is looking to raise somewhere around $4 billion, approximately 37,500 crores from its primary market offering. So if we consider it as a 2.5% equity dilution, so Reliance is looking somewhere at $160 billion valuation for Jio platforms. Translating into Indian currency, it is somewhere around 15 lakh crores rupees, which is much higher than its closest peer Bharti Airtel, which is currently somewhere around 11.5 lakh crores of MCAP. And besides that, we have to Reliance has also announced that it will be, the investors of Reliance Industries will get an allocation, a special reservation for its shareholders in the Jio Platforms IPO. However, what will be the allocation amount or the percentage, that is not disclosed yet. We have to wait for more details, RHP, to get those details further.
Okay, got that, Pawan. Thanks for getting us those details. So those are some big numbers, viewers. About 37,500 crore rupees of an IPO, of 15 lakh crore rupees of a valuation. This has never been heard of, in the kind of Indian stock market history for an IPO that's seen right there. Let's talk to Harshal and try and understand what should investors watch most closely in the DRHP now. Is it the subscriber growth? Is it the ARPU? Is it the profitability, the capital allocation, the valuation? What are you looking at in this DRHP?
Absolutely. Firstly, good morning and thank you so much for having me. Reliance Jio finally has announced its IPO, one of the biggest IPOs that is coming in the history. And the fun fact about this IPO is that it is not only coming with loads of revenues, but it is also coming on with loads of profits. Unlike the recent IPOs that we have seen, the big IPOs are not having profits. They're not burning cash. Reliance Jio has been doing fantastically well with a 30,000 crore of net profit and an EBITDA margin of around 52%. It has been one of the biggest and the best performing private companies till now under the Jio flagship, under the Reliance flagship, and now finally it is coming out as an own listed entity out there. So very excited, and it looks very well to be placed. I think even if you look at the subscriber count that Reliance Jio has, it has close to around 52 crore of Indian subscriber data, and it has been doing really well. And I think 27 crore plus 5G users. So very excited for the IPO. I think that it is ready to do really well.
Okay, so Harshal, I think the key question that even Pawan pointed out with respect to just telecom, Jio IPO is commanding or looking to command much higher valuations than Bharti Airtel. That's despite some of the metrics that may be lagging in that aspect, right? So how are you benchmarking Jio's valuation against Bharti Airtel? And of course, are you looking at Reliance Jio as only a telecom player or a much larger player now, especially with the kind of AGM announcements that we saw with respect to satellite, data centers, all of that coming in fold too?
So if you look at Reliance Jio's market cap, I think post-listing it would be somewhere in the range of between 12 lakh crores to 15 lakh crores. And if you look at Bharti Airtel right now, Bharti Airtel is also closely trading to a market cap of around 12 lakh crores. See, if you talk on pure telecom, Bharti Airtel is way ahead of Reliance. You see, the average revenue per user for Bharti Airtel is around 258 versus if you look for Jio, it's around 214. So the premium that you're paying right now isn't for the telecom. It is you're paying for the digital and the AI stack, as you really mentioned, and also under the Reliance flagship that you're getting. So I think you're not paying for the platform. I think you're paying for the entire digital infrastructure that comes with it. So the risk premium, I think, very simple. If the digital monetization that Reliance is thinking about, if that fails, then you are paying for you're overpaying for a telecom business, which is, I think, very heavily priced. But I think at a market cap of around 12 to 15 crores, I think it is very fairly valued because the telecom business itself is at a value of around 11 to 13 lakh crores. So anything that you're paying on top of 11 to 13 lakh crores, I think is the premium that you're paying for the AI and the digital infrastructure that comes in. So it is really very interesting to see how it plays out, the AI and the digital infrastructure side of the Jio.
Right. Actually, another aspect that people will be watching out for, a lot of these large global investors had entered Jio in the year 2020 at a valuation of just mere 44.5 lakh crore rupees. Now with a potential 15 lakh crore rupees valuation, they said to earn about 3 to 4 times returns there. I want to understand for the fresh retail investors. Of course, it's a fresh issue, but is there a lot left for the retail investors who may be looking to participate now in the IPO? And how do you think the continued presence of these investors like Meta, Google, still would mean for Jio's long-term growth story?
Well, I think it answers by the point that Reliance is not coming up with an offer for sale. It is coming up with a fresh issue. If you see the strategic partners that you have, Meta and your Google, they have not been here to sell their stake. They are into a long-term partnership with Reliance as they had taken their stake in 2020. Since then, they've already made multiple returns. But I think even at this point, they're not looking to sell off their stake. Rather, they are looking for a fresh issue. So I think that even if you look at the Meta tie-up, it's not just on the surface. It runs very deep. It includes a 168 megawatt Jamnagar data center plant. So I think they're co-building infrastructure together, and it's not a passive shareholding, which is again a very positive thing for the IPO, because you see, these big players, they are not willing to sell off their stake even after such a good return. They're looking for another fresh set of growth from here. So I think that it is a very good IPO for the retailers, and it's a very good long-term bet.
Okay. I also wanted to ask you, when it comes to the next leg of growth for Jio, like you pointed out, we have strong numbers that have been posted, 1.5 lakh crores rupees of revenues in FY26, 30,000 crores of profits for the company in FY26, EBITDA margins of about 52%. So, and ARPU constantly growing at 214 right now, 52 crore subscribers there for Jio. So I want to understand, in telecom specifically, has Jio reached its saturation, and what will the next growth really look like, and where will it come from?
Well, I think that it has reached a saturation in terms of numbers of subscribers. It is not going to be that easy to add up the free subscribers that they have added for all this while. But I think it's the overall product that Jio has to offer, because you see, they have a fixed cost. In telecom business, you have a fixed cost. And on top of that, the average revenue per user that they are at 214. Even if you look at Airtel is at 258, which is one of the lowest if you compare globally. So I think that there's a lot of headroom from here in terms of growing in average revenue per user. In terms of subscribers, of course, we are going to hit a saturation at some point of time. But even if you look at the subscriber count, you see, right now, Jio is at a subscriber count of 52 crores. Airtel is at a subscriber count of 46 crores. But if you boil down the number of 5G users, Jio is at 27 crores and Airtel is at 18 crores. So I see a lot of headroom for the 5G users increasing. And second, even if you look at the home broadband right now, Jio Fiber, it's at around 129 crore houses are using the home broadband right now. So I think overall the growth is even here. And on top of that, see, the 12 to 13 crore, the 12 to 13 lakh crore market cap that you're paying that for the Jio telecom business. But on top of that, you're paying an additional 2 lakh crores of market cap for the AI and the digital side of it. And I think the massive headroom that would come in for Jio is going to be on the AI and the digital front. So I think that yes, the subscriber count has probably reached a saturation, but not. But the 5G users, I think there's a lot of headroom ahead for them.
Okay. Also, a lot of people would be wondering whether Jio listing could also lead to a lot of value unlocking for the already listed share of Reliance Industries, the parent company, and for the shareholders there. Can it lead to a re-rating of Reliance Industries, and how are you looking at that particularly?
Well, if you look at Reliance owns 66% of Jio. Okay, and there's always a holding company discount that we have seen in the Indian markets over the years. So I think once the Jio IPO comes in, so for example, if it comes at a 15 lakh crore valuation on the bull side, okay, 66% of the holding, Jio itself would be worth 10 lakh crores. So I think that Reliance is now going to enter into a stage of value unlocking. Reliance Jio is chapter A. I think the chapter B that is going to come in 2028 is going to be Reliance Retail. So I think overall, it is going to do a massive value unlocking for the Reliance shareholder as well. If you look at Reliance has been underperforming for the entire year. It is 15% down this year. And even if you look at the 5-year cycle, Reliance has closely given negative returns. So I think that now it's time for Reliance, because it has done a massive time correction and a price correction. And now I think that it is the time of value unlocking once these babies are out. So I think Reliance Jio is just the chapter 1. I think Reliance Retail and the other companies that are going to move out from Reliance is going to do a massive value unlocking for Reliance.
Okay. Now, if I want to ask you particularly on if there is a valuation of 15 lakh crore rupees, would you be subscribing? What would be the one factor that determines your own investment decision and any kind of price band expectation that you also have?
Well, I think the only thing that makes this IPO an amazing thing is that it is under the flagship of Reliance. Reliance has been on the massive explosion of acquiring multiple companies and on a massive growth level. So I think Reliance, even if you look at the net profits today, okay, Airtel is in India plus Africa and 15 other countries. Jio is right now only in India. If you look at the net profits for FY26, Jio has done 30,000 crores. Airtel globally has done 26,700 crores. The EBITDA margin for Jio is also 52%. The EBITDA margin for Airtel is also at 52%. If you look at the number of subscribers, Jio has 52 crore subscribers versus Airtel having 46 crore subscribers. So if you look at Airtel's market cap is around 12 lakh crores. Jio's market cap is way more than 12 lakh crores because of the number difference. Of course, average revenue per user for Jio has been a little less than Airtel, but I think that should pick up with time. So anything above 12 lakh crores that you are paying for the AI and the digital stack. And I think that probably the AI and the digital revolution that India really needs right now would be done by any of the big conglomerates and no better than Reliance because they have a massive pool of capital.
Sure.
So if you're looking at the Jio IPO for the telecom business, I think Jio and Airtel are the same. Both have been having amazing managements. They are performing operationally very well. But Jio gives you that additional exposure to AI, which I don't think Airtel would give you. So yes, I think that at 50 lakh crore market cap, of course, because at the start they're just diluting 2.5% of their stake. So there's going to be a liquidity crunch. You're going to see a buying, and then when the time opens up, you're going to see some selling when the big players are allowed to sell. But if you look at the overall long-term perspective for 5 years from now, I think the story would pan out very well.
Okay, I think Pawan also has a question for you. Pawan, go ahead.
So Harshal, I would like to know that do you think that Reliance Retail Ventures, which has a Jio Mart in its kitty, so do you think that will also be adding some more revenue to Reliance Jio as well? And do you think that we can see value unlocking if Jio IPO is a success? We can see more value unlocking with the IPOs of retail business or the new energy business from Reliance Group as well?
Well, I think that is the roadmap, Pawan. I think around 2028, 2 years from now, after the Jio's IPO, once they launch, I think Reliance Retail is next in the line. I think it is going to be the same playbook. It is one of India's largest retailer, and it is, I would say, a jewel company that is buried inside a conglomerate, and it is waiting for its value unlocking time. So I think Reliance is going to take it one at a time because all these babies, you see, they might be coming out of Reliance, but they in itself are very big. So once I think Jio IPO comes out, it settles down. Once they are done with releasing more stake into the market, I think Reliance Retail is the next. And I think Jio is chapter one, as I mentioned. These companies, they have massive potential. But because they are under conglomerate of Reliance, we're not seeing value unlocking and they are getting valuations of one particular business. But Reliance is into multi-businesses. So I think the value unlocking has just started. And one by one, I think you'll see a lot of companies coming ahead.
Okay. And now I think it's time to understand, what should one expect, in the secondary markets when these big bang IPOs really come in. What we are waiting for just with two of these mega companies, NSE and Reliance Industries, is that almost 65,000 to 70,000 crore rupees of funds will be raised just by these two companies. And there are many more companies that are lining up as well. So what does that mean as far as the liquidity is concerned in the secondary market too? So that's something that we are focusing on. First up, Pawan, if you could give us a list of what after NSE and Jio are we expecting as a lineup?
So Sakshi, we have a very big IPO pipeline coming up. I'll just talk about the 4 biggest IPOs that we are expecting in next 6 to 8 months. So it's Reliance Jio 37,500 crores, NSE 28,000 to 30,000 crore, SBI Mutual Fund 13,500 crores, and Zepto somewhere around 11,000 crores, 9 to 11,000 crores. So if we add, there's a big IPO pipeline of somewhere around 95,000 crores. So it will be a very busy primary market action in the next coming months. And these are just 4. We have a lot of other issues like Prism, Oyo, Hero FinCorp, Manipal Health, True Home Finance, Milky Mist, and a big number of issues that have SEBI approvals to launch and are awaiting to launch their IPOs. So it will be a very busy year for the primary markets in the coming next months.
Okay, so Harshal, how are you looking at this? Is it the next IPO super cycle that we are looking at? And can the markets truly absorb the kind of funds that will be raised just by these 2 companies, followed by some more as well, just like how Pawan pointed out? And what would that do to the secondary markets?
Well, I think that we are actually entering into an IPO super cycle because just not these 4, but I think another 200, 250 companies are in line and they are looking to raise around 2.5 lakh crores to around 4 lakh crores in 2026. If you compare that to 2025, we did around 1.75 lakh crores. If you compare that to 2024, we did around 1.6 lakh crores. So I could say, yes, indeed, we are in an IPO super cycle after a couple of years. Finally, the supply side, I would say, of the companies have increased because 2025 has been a very dull year in terms of liquidity, even in the markets. FIIs have been selling. FIIs are selling right now also. But I think it has been a dull year in 2026. People are looking forward to. But if you ask me, I think the liquidity is not going to get dried out. Indian markets have a lot of liquidity. But yes, for that particular span, when the cluster of IPOs are coming, at that point of time, you can expect some liquidity crunch because a lot of big IPOs are coming at this point of time, and today is very different from what we had in 2010. Under the UPI scheme, you see, your money is technically blocked in your bank and it is not moving out. So you're earning interest in the last day and it is not just blocking off your entire money like we had in the old mega IPOs of Coal India and stuff. So even we have this money market opportunities where the leveraged HNIs are bidding with the leveraged money. So I think that we do have a lot of liquidity currently in the market. And if you look at the SIP figures, we are doing around 31,000 crores a month, and DIIs have in the first half have done around 4.5 lakh crores. So I think that we do have a lot of money. One trigger that I feel is missing is the foreign institutional flows. Foreign institutional investors have been a net seller for all this while, and they have been placing their bets on markets like Korea and Taiwan, and that is why we have technically slipped down to the 7th position. So I think, yes, it's going to be a IPO super cycle this year. And we do have a lot of liquidity. It's going to be a crunch for some time when the IPOs are just around because people generally tend to trim their holdings to place their bets upon the new IPOs. But the money is not moving out of the markets. It is just revolving from one share to the other. So I think that it's going to be fun this year, looking at 200 to 50 IPOs coming in.
All right. But Harshal, I think the one thing that you pointed out, I want to just clarify for all the investors, in terms of what's happening globally and in India, we're seeing parallelly some of the biggest IPOs in the history of world markets getting, coming into the stock market. So last week we also heard about OpenAI, SpaceX, Anthropic, all of them queuing up to bring mammoth IPOs. What is being said in the investors world, or being thought of at least, is that when such massive world IPOs come in the US markets, after the US markets have already had a record run, this could mark the top of the US markets. But in India, which has been an underperformer for the last 1.5 years, when such big bang IPOs come in, where there is global interest, where there is retail interest, how would you look at, in that contrast, how it will play out?
Well, before I start, I'll make a statement. I feel that Indian markets are not undervalued. They are underperforming, as you just mentioned. So I personally feel that if you look at Indian markets for the last couple of years, and if you compare them to Korea and Taiwan, Korea, Taiwan, Nasdaq, Japan have done off the roof. September 2024, that is when we saw the Indian markets hitting their all-time high. Since then, the Korean markets have done close to 300%. The Taiwan markets have done close to 200%. Nasdaq has almost doubled. What I personally feel is that the global theme right now has been AI and semiconductors. As you mentioned, that big names are coming. OpenAI is coming. We just saw SpaceX coming in, and we're seeing record volumes moving into AI stocks. Now, the problem with Indian markets, I think all this while has been that we do not have the sector of the bull run for the very first time in the entire history, if you see. Generally, always we have that one sector because India is a very diverse country. We have a lot of sectors in the stock market, but this is for the very first time we're seeing that Indian markets do not have any stock or any sector that is directly related to the AI and the semiconductor theme. The closest sector that we have is Indian IT, which is apparently down 45% from its all-time high, which has not taken a pivot towards AI. So I personally feel that Indian markets have not been performing for a while. They have been on the sideline for a while, and the global markets have reached a stage where they have entered into an AI bubble. I think once this bubble bursts, as you mentioned, that at the top there's liquidity getting sucked out. You look at the IPO of right now SpaceX that we saw. Massive valuations. Anthropic is coming, OpenAI is coming. They are going to suck out massive liquidity from the US market. So I think it is very much possible that the bubble would finally burst. I would not say that it would burst right now immediately, but in some time, like every other bubble has bursted, this is also going to burst. And at that point of time, it is going to be very interesting to see where this money moves out. Because Indian markets do not have those AI and the semiconductor stocks, which is a problem for us right now, but can be a strength later because Indian markets have not turned into a bubble like the global markets. And they can finally attract the foreign funds that are leaving US, Taiwan, Korea, and Japan. So I think, yes, Indian markets are placed very well. With these IPOs coming in US, I think that somewhere down the line, the liquidity is going to get sucked out and these markets are going to form a top. And if you look at Indian markets, they're not trading at a very great valuation. They're not very undervalued. But in comparison to global markets right now, well, they offer a lot of value.
Okay, Pawan also has something to add. Pawan, go ahead.
So Sakshi, as far as foreign investors are concerned, then we have to see that FPI have been selling in the sectors they have been heavily invested in, like banking and IT, and besides that they have been offloading stakes in the companies where recently listed companies where they have made a decent amount of profit, or there is a requirement of minimum shareholding for the public shareholders. Besides that, we have to understand that domestic institutional investors, they also need some avenues to park their funds, like from the mutual funds to insurance companies. All of them are getting robust inflows, but where shall they go? So they also need somewhere avenues to park their funds, and such decent pipeline of mega IPOs, they give them an opportunity to park their funds. And we have to understand that with big IPOs coming in, like NSE and Geo IPO, they will be included in indices of MSCI and other major service providers. So there will be some inflows from fund houses as well. So that will be added to their valuation in long term. So and FPIs and one thing I want to add, that FPIs have been looking for opportunities in Indian markets. If you see the recent IPO pipeline, they have been buyers of the recent IPOs, and they've been sellers in the companies where they have made some profits. So that's how they have been rejigging their portfolios.
Okay, got that. Well, we are towards the end of our show, but Harshal, NSE versus Geo or both?
Well, I think NSE versus Geos both have their own pros and cons. Geo is coming at a little higher valuation in comparison to Airtel. Technically, it's right now a telecom business. How does the AI part play out is something that we need to watch. And NSE, it's an all-season business. You buy or you sell. You have to use NSE. So it's a bear market or a bull market. You are going to use NSE. So I think NSE, but the valuation of NSE again, it's coming at a 5 lakh crore valuation, whereas BSE is currently trading at a 2 lakh crore valuation. And you have seen the mega run in BSE. So I think both of them have a little bit of valuation concerns, but if you look at the long-term trajectory growth, both of them are fantastic. One is under the Reliance flagship arm, and the another one is the gateway to your market. So I think both of them, but the view needs to be a little longer. You cannot expect a big IPO gain on the listing because the market cap of these companies are huge. So you cannot expect a 100%, 50% stellar market listing gains. But I think over the 5-year span, both of them are going to do very well.
Okay, thank you so much, Harshal and Pawan, for being with us on the show. Completely out of time, but thank you so much. Hope this has given a lot of clarity to our viewers when it comes to these mega IPOs and what should your approach be. Thank you so much for being with us, viewers. Much more coming up on the other side of this break.
warm welcome, ladies and gentlemen, back on Business Today Television. In our Market Masters series, we get you the finest brains on Dalal Street, people who are navigating this volatility with a lot of investment ideas as also experience and making tons of money for their long-term shareholders. It gives me great pleasure to welcome Mr. Sandeep Tandon, founder and CIO of Quant Mutual Fund, one of the most popular and best creating wealth asset management companies in the country. Namaste Tandonji, a very warm welcome. What a pleasure welcoming you again at a time when markets have started taking some deep breaths towards gains. How are you analyzing sentiment on Dalal Street at this moment?
So frankly speaking, for nearly from last 2.5 months, right from 1st April, we have been talking about that worst is behind us. And we said it's a time to capitalize the opportunity, not get capitulated. And thesis has been played out. So we have showcased that mid, micro, small cap has a potential to outperform. We turned positive in 1st April in these spaces where we have been negative from July 2024. I think the background is constructive. Now, if you say where everything is hunky-dory, everything looks good, answer is no. But I think when we say worst is getting over or is largely over, then you have to keep a constructive mind. So I think if you keep a very bearish and destructive sort of thing, which was the phase for last 2 years or so, then obviously you will not able to neither participate in this market nor able to capitalize this opportunity. So our view is that you have to be constructive, look for stock specific opportunity, and I think market is giving us enough opportunity to take advantage of the situation.
Okay, wonderful. Mr. Tandon, it's been a while since we had the pleasure of your company, and in this duration, the rupee has depreciated very, very sharply. We've seen the RBI take a lot of active steps to buttress foreign exchange reserves. At this point of time, what is your view for the rupee for the remaining calendar 2026? Is also the worst behind as far as our currency is concerned?
See, I largely believe the worst is behind even the rupee front also. The USD INR pair has actually peaked out. Okay. Now it will be too mature to really celebrate that moment. I think, as I said, worst is behind us. So I will not say it will going to appreciate one way, but I think it gives you enough opportunity to participate because see, USD INR pairs has a sentiment impact, okay, on the markets. So the sharp depreciation has obviously led to a massive outflow because obviously FI actually incurred losses on that trade. That's the reason the profit booking or sell-off was pretty sharp. As rupee has stabilized and marginally appreciated, I think this reversal in the flow will be more visible in next few months. As I'm seeing that even from the FII perspective, we are seeing signs of exhaustion. The selling exhaustion is very much evident. We have seen the net flow has come down significantly as compared to what we have seen in the past. I think net flow has not turned decisively positive, but I think from a reversal point of view, from extreme negative flows to marginally negative growth itself is a good news. So I will look as a constructive background, even USD INR support give us additional support to the market.
Perfect. So 2 out of 2 at the moment, you are constructive on the broader market as also the rupee. The third and final question, let's handle the macro first, then we'll come down to what is Quant AMC doing. Mr. Tandon, your view on this very negative stance that foreign institutional investors have taken on India. March was very painful. For the last 7-8 months, we've seen consistently very high selling number. So what is your view on FIIs? And because you track sentiment so well, is the AI trade over in Wall Street, Japan, Taipei as well as Seoul?
So I will put it in a very simple manner. See, we have to understand returns are not always absolute numbers. It's a relative also. When you look at returns, we look at returns from absolute numbers and relative numbers. Now look from FII perspective. the relative absolute number was not bad. Our absolute performance India was not that bad as people think, but the relative performance was horribly bad. Okay, so what we have to look at, when foreigner has option to invest in other country where they are able to capitalize this AI boom or so-called new energy, new tech companies, which is performing very well globally. Unfortunately, we lack in that space. So obviously, sentiment from the FI perspective is bound to be negative, and it's not like FIs are saying that, it's reflected in their actions, and that's the reason people are panicking. But I always say, you have to look at not just a contrarian, but more from a data perspective. Now, I'll give you a small example. When in 2024, when we turned negative in March or between March and July 2024, best of the houses was coming out upgrading India. Okay. Now, if you look at January to now, majority of the houses has
Yes.
already downgraded India. Okay. So it's a very classic sign. Exactly at the peak of bottoming cycle is when nearby people give up. Best of the brains also give up.
Yes.
So this is the way we strongly believe these inflection points are there. And it's up to us how you want to read that. We are reading in a more constructive background because we don't try to bring any biases into it. Okay.
Correct.
And that's the reason I'm saying that this is the opportunity. Now, if we have to talk about from other market like AI trade perspective, uh, at least from a data point of view, I can tell you that Korea is giving extremely good sign of a topping out. Okay, I'm not talking about a long term or bubble sort of formation, but we have seen a euphoria in Korea, and something similarly is there in Taiwan also. I think first Korea market has potential to peak out, followed by Taiwan, and something similar I expect even US has potential to correct and consolidate. I'm not expecting a crash or a sell-off happening, but I see there also good amount of correction and consolidation can take place. If that happens, and these market performs relatively, let's say, generate negative returns, I think that will be a great news for India because we want these market to fall. Then only money will shift towards market. So it will be a very constructive background to say if these market corrects, we should be beneficiary. Generally don't happen, but this time it should happen.
Absolutely. And that's the reason, Mr. Tandon, why your advice matters so much. You are a master at reading the turning points, both at the peak as well as the bottom. And yes, we've had a series of downgrades by many institutional brokers on India. Perhaps this is the time to step into the market on the long side. Now, what has Quant AMC been doing over the last 1 month or so? How have you treated your cash positions? Are you still majorly in cash above 10%, or is this a time where you've invested very heavily?
So right from April, when we made a call in public forum in our fact sheet also, we have written about it that we are constructive. Obviously, if we are giving advice to others, first we have to implement it our end also. So we are largely invested. So except maybe one or two scheme where we need to give some cash like small cap. Otherwise, we are 98, 99% invested in the market at this point of time. So obviously, that's purely on our data analytics strength, which we are talking about. Now, as a house, we have played this data center theme because in India, you cannot play any of AI theme. So data center was the only theme. So whether related to power sector or telecom company or fiber optic companies, or we're talking about select equipment companies, we have played that cycle quite well, and we have been one of the biggest beneficiary because we were significantly overweight, nearly 30% of our data center theme in our portfolio. That has really helped us. And given the challenges on the rupee as well as food front and the uncertainty which we have seen in last few months or so, we have cut down our manufacturing exposure, and it is not possible to cut down completely, but we are more skewed towards services and other product company rather than getting into pure manufacturing where we are not sure about the input challenges or the distribution challenges. So we are I will not say extremely cautious, but we are on a relative basis, we felt this is the time to be underweight manufacturing and look for other opportunity, which also has helped us in last few months in terms of performance. That's the reason we have done extremely well in last 3 months.
Okay, wonderful. Now, let me just get one issue out of the way. Last time we spoke, you were intensely overweight on two stocks, Reliance Industries and Reliance Geofinance. Somehow they find a lot less mention in the current AMC's holding structure. What exactly did not go right for both these stocks?
So first of all, Salary, you understand we don't really from a compliance perspective, we're not supposed to talk on the stock specific. Okay. The only thing I will comment, see, we are some of the large cap exposure which we held in our portfolio was largely from a risk off environment, and a risk off environment I like to own low beta and high liquid names in our portfolio. As market cycle changed toward high beta and extreme negativity which we have seen, it makes sense to cut down large cap exposure and increase your mid and small cap exposure. This is exactly what we did in last few months. And so maybe the realignment of portfolio keeps on happening in a very dynamic manner. And we always say in risk on environment, our portfolio will be very different, and risk of environment portfolio construct will be very different. So it's a call which we take. Since we are a very dynamic house, we actively balance our portfolio based on the environment which is prevailing.
Okay, fair point. Now, as an AMC, where are you overweight as far as the first 2 or 3 positions are concerned, sector-wise, or maybe even a large cap or mid cap bias?
So obviously, the bias is definitely small and mid, and even micro, but unfortunately as a AMC we cannot participate in many micro name purely of the liquidity perspective. But our bias is definitely towards mid and small. But given the size we operate, it's not possible to have a very skewed portfolio towards mid and small, because overall liquidity in this space is on the lower side. Purely from a risk perspective, you can't do that, even we like it a lot from the current level. So what we have done, we also have the rebalance of the portfolio, and we have skewed our portfolio towards power, telecom, pharmaceutical, services sector, and up to small extent some of the unique companies also. So very skewed portfolio we have been running. We are more skewed toward NBFC, some insurance company, instead of running a very large banking exposure, which majority of the houses are doing right now, given the large weightage of the. So we are relatively less exposure. In fact, we have second line banks in our portfolio as compared to large cap banks in our portfolio, which has also helped us some of our schemes in a big way.
Absolutely. Absolutely. But there are very few large cap banks, and it's worked very well for the overall positioning of the portfolio. Mr. Tandon, a very heavy emphasis is on telecom, especially telecom infrastructure. Is this the domestic theme that you are batting on, given that it has absolutely no correlation to the West Asian crisis? Telecom finds a very strong mention.
See, two things. One, from a manufacturing background, if we are in a challenging times, okay, nobody cuts down their telecom budgets or their bills. You've seen it will be rising a bit. And given the entire focus on AI thesis which is getting built, the telecom weightages or exposure will only increase in our portfolio or in the multiple broader indices. So that's a background. We think purely from a return perspective, yes, but even from a risk perspective, we see limited downside in some of these names, and most of them are fairly liquid names also. So it fits the bill on multiple front, and that's the reason we have relatively high exposure in the telecom basket in our overall portfolio.
Okay. And I think one of the biggest questions that are facing the markets is 2 mega IPOs, NSE as well as Reliance Jio, should be hitting the markets before Diwali. How is Quant AMC's research team looking at both these IPOs? Any chances for them to be maybe slightly overpriced, or how do you see them?
They have just filed their IPO, and their HP has just filed I don't think our team has looked into it because too premature to talk about. But as and when it unfolds, we are closer to the issue. We obviously, as a house, research house, will evaluate and take appropriate decision at that stage. Yes, no doubt. They are the one of the largest IPOs coming in the country. So it is very natural that majority of the global houses, including domestic mutual fund, will be participating in these two names. So I'm looking forward because a good development that the breadth and the capital market is also going to improve significantly because very large IPO will get listed. It's a good development from Indian capital market perspective also.
Okay. One issue that is being grappled by capital markets at this point of time, Mr. Tandon, is the deep value that the IT sector offers. I see from the AMC fact sheet that you've been shopping very heavily, at least on one large cap IT. Do you see this as a value opportunity, the erosion that we've seen on large cap IT, or is this still a value trap?
So the way I look at it is that right from September 2021, we have been quite bearish on this space, and actually it worked in our portfolio. Maybe till March end, the entire IT weightage was hardly anything, nearly in the most of the large cap companies, except one or two smaller names, and that too the product company which we had in our portfolio. But given the background we're talking about inflection point, we think most of the IT names, large cap IT names particularly, are now trading in the most hated and neglected zone. Okay. Now, the hated zone or neglected zone alone is not good enough to showcase that we should go all out. The only thing we can say, yes, is a good time to good amount of bottom fishing, and then you have to look at what could be the trigger which can change from these levels. So purely from a behavior perspective, maybe early signs of bottoming character is visible, but it is too premature to take a very aggressive bet and saying that I'm going all in at this level, because the industry dynamics have changed significantly, and we have to understand how many companies can actually be a really AI implementer. Though everybody talks about, everybody take claims about it, but frankly speaking, last many years, not much has happened in this space, and that's the reason not only the IT space, India overall has been downgraded globally because we didn't have this opportunity as our entrepreneur. This is the biggest miss from our perspective.
Okay. Mr. Tandon, do you view the fact that for the last 18 months or so, India has really fallen off the investment radar? In fact, it's been used as a piggy bank to pull out money from India and then pour it into many other emerging markets, as also Wall Street. Do you see this trend a larger question mark on the way the economy has worked, in the sense that we don't see any growth engines at all?
So the way I look at, we all go through various phases. Let's talk about from a market perspective. After 2008, not only India, globally, people are running like a quasi-passive strategy. In the name of active management, people were offering quasi-passive product. But if you really look at in last 8 to 12 months or 16 quarters, what we have seen, whoever has taken running a very skewed strategy globally, okay, not only India, globally running a very skewed strategy has been biggest beneficiary, okay. And this is the herd mentality. When few AMC or few money manager become successful globally by looking at the new trend, people tend to chase that strategy, okay. And that's the phase we are in right now. From quasi-passive, we are moving toward very skewed strategy, and that also has its own challenges, okay. Now, early stages, this thesis will work very well. The way I am looking at right now, if I compare India versus Korea or Taiwan or even China, Hong Kong market, yes, we lack that opportunity, but you have to look at India as a very well diversified portfolio which we offer. It's not about two companies like Taiwan or few companies in Korea or select companies in China. So it's not the case. We have entrepreneurship is clearly visible. The holding, which really 50% holding we have in most of the entrepreneurs holding these companies. So I think India offers far better diversified and far bigger opportunity from a medium and longer term perspective. Short term, obviously, we had our own challenges, but look at the scale we operate in our steel or ports, or you talk about airport, which is new building blocks now, talking about power sector, which is getting, particularly in the renewable space, we're going to be a sizable player in next 4 to 6 years. So I think the foreigners are now looking at India also as a asset heavy companies who generally have very large infrastructure and has ability to generate free cash flow. Those are the companies people are looking at. So it's not be fair to say that FI has been completely ignoring what we have not understood. They have been selling grossly over-owned stocks like banking, IT, and up to a small extent consumption, because these are the only names which they had in their portfolio. So they will like to book profit for relative
Yes.
opportunity perspective, but they also has been buyer in some of these names. So it's not fair to say that FI has been net seller, yes, but on a select opportunity, they are shifting the exposure from one company to other or one sector to other. So I think that's a trend which we have to identify. That's the reason we are also very bullish on large infrastructure companies, like which a company which own airports, ports, renewable power, okay, or an allied industry. So I think that's an area which we think India will do very well. And I have seen capital is coming back. I'm saying foreign capital, FEI flow is coming back to these spaces. So one has to be very selective, and I can say that second half of or maybe from second quarter, we are talking about this. One should not look at broader indices in any manner. Just focus on stock specific opportunity. You will make good amount of returns and maybe superior risk adjusted return, because not much will happen in the broader indices, and hence quasi passive strategy India will also not going to work very well, which has been a trend in the past. So I think you have to look for an active money manager who can generate alpha for you, what the trend we have seen in last few quarters in the global markets.
Okay. When you talk about the stock specific strategy, Mr. Tandon, let's take the broader picture of the entire AMC portfolio. Where would outliers be in the AMC overall AMC portfolio? Maybe first 10, maybe the next 20. Where do you see market beating returns within the quant AMC portfolio?
So, Shalini, the way we've explained it, it keeps on changing from time to time. So, it will not be very static phenomena. We always say we live in a very dynamic world, and our money management style cannot be very static. So, from that perspective, we believe in a dynamic rebalancing of portfolio. So, today, as I said, these are the area when we talk about large infra or large power company or data center companies, we are skewed our portfolio towards telecom or power or some of the services sector. But that may not necessary, because they are offering us superior risk adjusted opportunities. So they are part of our portfolio. Maybe down the line, 3 months, 6 months, if something else looks more attractive, we don't have any hesitation in shifting or rotating our portfolio from these names to that. So it will be not fair to quantify what is there. Whatever is there is publicly disclosed. We are first to disclose our fact sheet, So you get those data, and we are first to disclose our portfolio also. So that you can figure it out. But what is more important from a retail investor is not about what stock or what sector we like. What people have to understand purely from a risk perspective, from a timing perspective, whether it's a good time to rebuild your exposure in the market, that's point one. Second thing is the time to rebuild your small and mid cap portfolio also in your portfolio. And third, to remove negativity which is there in your deep subconscious mind and come back with a constructive mindset, then you will generate superior alpha.
Okay, now let's look at the quant small cap fund. This is of course your largest offering. 31,000 crores is what you manage at the quant small cap fund, and of course it's been a quality provider of very strong returns over the last so many years. So you are underweight financials as compared to the sector, and extremely overweight when it comes to energy and the utility space. What attracts you to the energy and the utility space as far as the quant small cap portfolio is concerned?
See, when we look at portfolio, we don't look at scheme specific portfolio. The differentiated part of quant, all the scheme is managed by one team, okay, like in other AMC, individual money manager manages schemes. So one manager could have a very constructive view on utility, other money manager could have equally negative view on the utility. That's not the way we operate, okay. We take house call, and house call is based on the data which we work. And data analytic team is common across all the scheme. And that's the reason we look at various schemes more from a SID perspective, from the allocation perspective, not from a scheme perspective. If we think a utility as a theme or power sector as a theme will generate superior alpha for our investor, that is our moral duty, or rather fiduciary duty, to ensure that every schemes get proper allocation. Since most of these names are very large cap and mid caps in portfolio, so obviously in small cap their weightage is on the lower side as compared to large cap. Okay, but whatever best we could have added, we have added in our portfolio. That's a way the portfolio construct will always. If we like something, let's say in telecom basket or in the fiber optic space or some of the data center companies which are largely small cap, that's the reason some of these names, if you see your portfolio, will be more skewed toward these company, and where large cap and the semi-large cap company will not have those names in our portfolio. It's purely depending on the what type of exposure. Since we have a compulsion to maintain 65% small cap exposure, by default, this exposure is on a significantly higher side. Sometimes people think we run a very skewed portfolio. Answer is yes, we run a skewed portfolio. But these are very data-driven calls of conviction which we run the portfolio. I'm not a great believer of extraordinary diversified portfolio. Mathematically, diversification tends to reduce your risk, but extraordinary diversification also creates more problem for you rather than actually in any help.
Absolutely. One question on the mid cap portfolio. The largest holding is still cash.
No, I don't think so. It's cash. In fact, it's hardly 3% or something. It's not. Like, maybe you're not looking at the derivative side of the portfolio. Okay, you are looking at the pure cash portfolio. When you look at our portfolio, you should also look at the exposure in the derivatives segment also, which and hence we can say with some amount of confidence that we are 98, 99% invested in the overall market. Mid and small, obviously, we keep some exposure because they are not very liquid names. So whenever you get opportunity, you should have cash. That's the reason we keep cash. Because flipping in large cap is relatively easy as compared to mid and small. So the cash level by default as a strategy will be always higher in the small and mid cap centric fund schemes which we manage.
Fair point. My final question, Mr. Tandon, is on the RBI steps on this FCNR fixed deposit that it's offered to PIOs and NRIs. What, according to you, is the corpus we should expect over the next 3 months or so that might help our foreign exchange reserves on its way up?
I expect at least somewhere 50 to 70 billion dollars can come to this space. But given the it's what is important, the pace. If it happen in first 3 months is very good for the rupee. If it has happened over 9 months, then I will not look at the very great news from that perspective. But I think extraordinary money is also not required. It should not happen that we take away very sizable money, okay, and then you run a much bigger risk at later stage. But I think closer to 50, 70, I think 50 billion is also a good mark number where government should put a full stop. That is the maximum they want to look at. I'm sure they could have worked their own numbers, but I'm a believer at least $50 billion will come.
Okay, and my final question, Mr. Tandon, are we looking at a better Diwali than a bad monsoon?
Yes. Okay. In fact, beginning January, you said by end of this year, you will see all-time high again. So, and something similar I said in 2025 also. By December 2025, you look far superior than what you're looking at January 2025. So something similar. I will not be surprised if you see market making all-time high maybe by November itself. So I think, but what is important, I said, the levels of the indices is not important this year. The stock selection and skewness and concentrated portfolio will be a better strategy than running a very diversified thing, because if you mimic indices, an index will not going to go anywhere. You will not generate that desired alpha which investor expects.
Mr. Tandon, even if we hit an all-time high on the market, many people would be very happy with that outcome. Of course, you are a past master at picking outperformers and selling them before they peak, as also buying them around their bottom. So, of course, for your own self, you are looking at that very high benchmark, but for the broader markets, we are very happy to see a record high. Thank you. What a lovely conversation. We hope to meet soon. And here's wishing you all the best for the greatest returns on Quant AMC. Thank you for your time.
Thanks for inviting us.
That, ladies and gentlemen, was Mr. Sandeep Tandon, founder and CIO at Quant Mutual Funds. Lots of positives to take away. Broadly, he's bullish on the market, sees the worst behind as far as the rupee is concerned, sees the broader markets to be sector specific, stock specific, rather than a broad rally on the index, and has a bias towards mids and smalls. Of course, hopes that Diwali will be better than the dismal June and May and April that we've seen, and sees the market making an all-time high in November. Watching, stay glued.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
The National Stock Exchange is in the headlines, and it's in the headlines not just because of the fact that the markets and stocks are moving, as we all know, moving in a certain direction on account of certain worries around our IT stocks, but today what we are going to do is to get into the National Stock Exchange and its own IPO, initial public offering, which is expected to be India's largest so far, at 30,000 crore rupees. And this has been a long story, a long saga. It's seen many twists and turns. And today, me and my colleagues, Shailendra Bhatnagar, are going to discuss the turnaround and the man behind this turnaround, Ashish Kumar Chauhan. Shail, welcome to this chat. The numbers and why this IPO is important for our markets and in the journey of India's markets to where they have reached and where they are expected to eventually go. You've also written a story. Please do go and read that story on businesstoday.in. But Shail, before we get into the facts and the market details, I want to start this chat with an observation which I don't know how many of our viewers know about. I can't easily recall of any other executive professional who has done as many listings in the financial space that Ashish Kumar Chauhan has done. Business promoters, family businesses may have done many more listings, but this is a pretty unique instance. Ashish Kumar Chauhan, who joined the National Stock Exchange 4 years ago in July 2022, will now, once NSE lists, have a fifth company that he has taken public. And before that, if you are wondering, those companies, the Bombay Stock Exchange, followed by CDSL, followed by Protean Technologies and NSDL. So 2 in BSC, 2 so far in NSC, and now the mothership also being listed. Shell, what does it kind of tell you? How unique or significant is this?
Siddharth, firstly, thank you for having me over. And this is uniquely, Mr. Chauhan, I don't know whether I should start with this example or not, but just today our research team was looking at 5-year performance of multi-baggers, and Siddharth, which was the first one, it's the Bombay Stock Exchange. You will not be able to believe what I'm about to tell you. The Bombay Stock Exchange, ever since its listing, has given a return of 125 times in the last 5 years. It was, of course, listed in the middle of the previous decade, but all of his listings, whether it's
are you
CDSL,
setting a similar expectation for NSE as well, Shell?
Well, not really, Siddharth, but definitely this is a multi-bagger stock to be listed, because you see, at 5 lakh crore rupees as your initial pop, to get it into 125 times would be, beating SpaceX at its own game. But remember, BSC started as a small cap, it is now a large cap. And I am sure Mr. Chauhan's magic will work. Similarly, CDSL is a multi-bagger many times over. I am making a very educated guess, at least 20 times is what people have made money from the IPO till today, and this is a corrected price on CDSL. NSDL and Protean are recent listings, but they've also done phenomenally well, Siddharth. So the man with the magic and golden touch is now helming NSE, and he joined at a time when NSE was actually going through his worst phase when it came to corporate governance and many other issues that were surrounding the event, surrounding the exchange because of regulatory and other problems, all of which we know in great detail. Siddharth.
The comeback story of the National Stock Exchange from a listing point of view, viewers, because I would really encourage you to even check this link and the description. In that we have a small gist of what Shell has written about the internals of NSE's finances, but do check out that whole story on our website as well. But it's a very complicated comeback story, because somewhere this iconic institution that changed the way Indians trade, that introduced technology way back before it was known, and today I would say the National Stock Exchange, with the kind of expenditure it has on technology, I don't know how many of you know, in FY26 alone this company spent over 1300 crore rupees only on the technology function, and many people feel and describe it more as a technology company than just a stock exchange. So for this kind of company that was set up and represented the approach towards liberalization, opening up the economy, changing the way India does business and approaches business way back, all of that had come under a cloud because of the mismanagement, the mistakes, and there's a bunch of allegations out there which we need not go, but that eventually also ended up among other things being called the co-location scam. And Shell, that's been a very difficult, tedious journey for Ashish Kumar Chauhan to navigate, and he's pretty much spent the last 4 years of his life, he's 59 today, navigating that. How big a deal do you think was the repair of the relationship with the regulator in terms of where we stand today post the DRHP filing?
Siddharth, it was a very critical component when Mr. Chauhan helmed NSE. His mandate was to clean up and get this IPO up and running so that you have a global name when it comes to, pension funds, sovereign funds, and many other deep pocketed FIIs wanting to invest in India's financialization process. And it could not have happened unless you had clarity on what was the contingent liability on the NSE as far as the co-location issue is concerned. Now, SEBI, in its wisdom, and of course NSE in its practical outlook, went forward to look for a settlement, and all that is now in place in the last 4 or 5 years. Siddharth, I cannot even begin to emphasize the importance of this listing for not only Indian capital markets but for the broader economy, as also once in a decade kind of a situation happens. You and I have covered the listing of Bharti Airtel in February 2001, Maruti in 2004, TCS in 2004 August, so many other companies in the latter part of the previous decade. So this is, I am telling you, the biggest event that you can think of in the calendar of a decade as far as India's economic journey is concerned. It is difficult to get bigger than this.
Absolutely. And I once again come back to this point, viewers. Those of you who have more than just a cursory interest in the stock markets know that moving away from that antiquated, non-transparent legacy system of the stock exchange to a modern, technology-driven operation where time is counted in nanoseconds and not even in full seconds is a very, very important story of India's IT prowess also. And Ashish Chauhan's foundational years have also been spent purely in that, not just as a leader of the institution now taking the whole institution forward, but also from a tech stack and building it as a technology company and as a technology startup. So that's very, very significant. Coming back to the point that you are making, Shell, 1995, fully computerized, screen-based electronic trading platforms. I wonder if you can recall how many countries in the world would have had such a computerized system for share trading way back then?
Siddharth, I'll answer this in two parts. Even till now, the New York Stock Exchange till about 5 years ago used to have an open outcry system in on Wall Street. And in 1995, Siddharth, I am from the generation who went into the Bombay Stock Exchange ring to trade. This white shirt used to get dotted with pens because people used to hit you to buy Tisco, Telco, Reliance, SBI, Old World, Mafatlal, Nosil, so on and so forth. It was a painful process, and 90% of transactions of the Bombay Stock Exchange emanated from the city of Bombay, now Mumbai. With the advent of the automated NEET system, the entire country joined. There is something.
So that's the national. The National Stock Exchange is actually national.
Absolutely. And Siddharth, it is really, really big. NSE started the 7-day settlement. On the Bombay Stock Exchange, the settlements would vary between 15 days to 3 months. There was no guarantee whether you would get your share that you had purchased or the share that you had sold on money at a given time. The beauty of NSE was the setting up of the Settlement Guarantee Fund, which ensured that any nameless, faceless investor who had an account with the NSE would definitely get either the money that he had sold shares for or the shares which were purchased by him. It did not matter if the opposing broker would default. It was the NSE's responsibility, Siddharth, to deliver either the money or the share. It was a game changer, believe me, from the legacy and the antiquated systems that regional exchanges offered at that point of time.
Let's also listen into Ashish Kumar Chauhan, from our previous multiple conversations, here's a slice from that in the past, just to give you a sense, and of course we are going to reconnect with him. There is an entire process of media interactions, public commentary that comes into play after a DRHP, and you have to follow a regulatory process. But just a slice from the past on some of these points that Shell and I have been discussing, and then we continue this conversation.
India is in a unique position. We have now 12.7 crore investors being serviced through NSE, which is literally more than 30% of all households in India. And 99.85% of all PIN codes, almost I think 28 PIN codes don't have NSE investor today. If you go to Ladakh, we have investors. If you go to Andaman, Nicobar, I think the guys moving with the spears also have a demat account and are having mobile app of our brokers. And similarly from Dwarka to Arunachal Pradesh, we have investors who are investing into India's future, right, in the productive capital. Also the technology. India is also the youngest nation. It's the demographics which makes a lot of difference. The China grew from 1982 to almost 2015 on the back of a population which was building up. Today they are suddenly going down, and in 2024 they had less number of people than 23. In next 70 years they will become half the size today. That is true with Korea. In next 40 years they will become half the size of the population today. India is going to grow even further, and that's where I'm going to remain young for very long.
Shell, as we wind down this conversation, let's also look at the broader picture, because we've kind of made it clear that how important this listing is, and as you are pointing out, it's going to be amongst the, in fact, the 10th largest stock by market cap if it's valued at 5 lakh crore, even ahead of another iconic stock like Infosys, for example, and it will clearly be a milestone. 2 points to that question. The approach of retail investors. We are not offering stock advice, viewers, be very clear on that, that's not our job. But in the current environment that we are seeing in the markets, the element of risk and the element of opportunity, what is in it for retail investors as far as this issue is concerned?
Siddharth, if you don't have the National Stock Exchange in your long-term wealth generating portfolio, which will be a generational purchase, I think you are missing the boat. See, in India, only a small percentage of people are in the world of finance, barely 7, 8, 9%. This is compared with 33, 34% in the US, if not 50%. So this pie is going to expand. Now there will be no new exchanges coming up in India. You have 4, which is BSE, NSE, MCX and IEX. So this is a monopoly item with at least a 90% market share in cash and about a 50-60% share in futures, and absurd 90% share in options. So you are going to miss a monopoly which is priced very reasonably. 40 PE versus the 70 PE of BSE. So if you don't have this in your portfolio, you are going to make a mistake. Please consult a financial advisor rather than listening to me, and hold this stock for 15, 20, 30, 40, 50 years. Siddharth, it's a once in a lifetime opportunity. Remember, LIC is the biggest shareholder of NSE. It is not selling a single share. It knows it has a golden goose.
Well, you speak about a golden goose, and really the saga that started in 2015. Remember, this is a company that was founded in 1992. Trading commenced in 1995, but in 2015 and there forward, the last 10-11 years have been a mixed bag. But in the 4 years that Ashish Chauhan has been at the helm of this company, he's now set it up for a next phase. But Shell, if the stock market regulator finally, after a change in guard there as well, and we must note here that Mr. Tuhin Kant Pandey has reformed even many aspects of SEBI as well, and we could well say that letting this move ahead and settling the matter and the settlement offer that is there, all of those technicalities we are not getting into, even that is movement forward. So in some ways, SEBI has told the National Stock Exchange कि जियो और आगे बढ़ो, काम करो. But the other big DRHP that's also been filed, and this is now going to be a question for institutional as well as retail investors, Shell, is who do you pick? Is it the NSE or will it be Jio? How should the average Joe on the street approach both NSE and the Jio offer with all that is now behind it and as is promised?
So, Siddharth, I will answer this question in two parts. I am sure the investment bankers of both these mega IPOs will be common to some extent, and they will very, very sensibly and practically sequence these IPOs to come after a gap of maybe 10, 15, 20, 30 days.
So not going head to head.
You and I have covered telecom, and no, they will not go head to head. It doesn't happen that way in Dalal Street. And as you would know definitely that the back end IT infrastructure of India's largest company by market capitalization was also set up by Mr. Ashish Chauhan.
Absolutely. And viewers, that's also I don't think it's by design, Shell. It's clearly something that has happened, and it's happened because this is going to be a seminal week, because the Jio document being filed today, the NSE document already filed. So when we look back at stock market history and pivotal milestone moments, days and weeks, this week of June 2026 will certainly be very, very significant. So wrap it up for us. What more can we tell our viewers at this stage about the details of the Jio offering?
So, Siddharth, abhi nothing is finalized except for the fact that there is a DRHP in the offing, and of course it will also be a follow-on. It will also be a FPO, because several of the investors who got in during the COVID crisis will want to sort of in cash on the booty. We can, because you and I have covered telecom, we can keep Bharti Airtel, India's second largest provider of mobile and telephony services, as the base for Jio. Jio will be priced in sync with Bharti, if not higher, because Jio is a bigger player. So the kind of wealth creation that we have seen in Bharti over the last 25 years, Siddharth, Bharti was listed in February 2002. It came at 45 rupees, got listed at 42, fell all the way to 19. You and I have covered that journey as well. From 19 to 1800, this is a 1:1 bonus, so the price is actually 3600. So from the journey of 19 to 3600 is what Bharti has traversed in the last 25 years, when all sorts of uncertainty was there in telecom. From now on, you have a duopoly, which is Reliance Jio and Bharti Airtel. Therefore, these are must-haves in your portfolio. In a country of 140 crore people who are consuming data like nobody's business, it's a no-brainer, Siddharth. The maximum money in the market is made when you have uncertain times. We are completely in that uncertain phase, and two opportunities have come or will be coming, NSE and Jio. People who will miss them will remember for a lifetime what a wonderful party they missed.
Absolutely. And for professional, amateur investors, traders, I always end any market related conversation with the appeal and request, please only follow proper registered advisors, Don't listen to tip-bazi. Go to established, credible platforms, people who know their business, because it's your money. Don't trade it, don't spend it, and don't fall for a call center scam or for some fake arrest or any of those scams where you get to read and hear every other day that crores have been lost due to such mistakes. Markets are serious business. It's about investment and following the details. And therefore, in a week where a very, very significant development as far as India's capital markets and public issues are concerned has taken place, it's all the more important to be cautious, reasonable, and certain about your approach towards the market. Shell, thank you very much. And once again, a wrap on this conversation. We'll see you again. Until then, goodbye.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
Hello, welcome. You're watching Business Today. This is Astha Chopra. Well, today we are in the Trombay thermal power of Tata Power, and we have a very special guest with us, Mr. Nilesh Khane, who is the Chief of Transmission and Distribution in Mumbai. Thank you so much, sir. Once again, we meet. It's always a pleasure to have you on our channel.
Thank you.
So we'll first of all talk about the new LOI which is signed between Karnataka, the REC Rapte Energies. Can you just give a brief about that?
So the Rapte is a 400 kV, the transmission line, underground cable, and the substation project, which will be in Karnataka near Bangalore in Tumkur. And this project has been awarded to Tata Power under TBCB. It is a 5,000 crore project, and we will be completing that in 36 months.
Well, congratulations on that. Also, sir, you told us so many interesting points as well, that you will be expanding your network for 400 kilowatt per se. Can you just explain that also?
Yeah, so Tata Power has a plan to expand and strengthen the transmission network in Mumbai. And we have a plan of 400 kV ring across the Mumbai. And the first section work has already started, which is between 400 kV Vikhroli to Dharavi. And we have a plan of another 3 lines between Dharavi to Mahalakshmi and Mahalakshmi to Trombay. A complete 400 kV ring will be developed in next 4-5 years. And Dharavi Vikhroli work has already started. And we will be spending around 6,000 crore for developing this ring over a period of next 3-4 years.
Absolutely. Sir, also I spoke to you about the investment also, like what is the investment you will put into the transmission and distribution system. So what already have been made and what is projected in coming future, because we can see the demand, the rain is less and the demand is more. So what's the plan on that on Tata Power?
So every year around 1,500 to 2,000 crore we are spending for last couple of years. But the plan is around spending 15,000 crore in next 5 years because we have a huge plan, as I earlier mentioned, 400 kV ring, as well as all 110 kV lines and substation we are upgrading to 220 kV. So we are strengthening a complete, the transmission network in MMR region, either by upgrading 110 kV to 220 kV, developing new substation of 220 kV, especially for the customers like data center, and coming up with the 400 kV ring to strengthen the internal transmission network of the Mumbai. So we have a very aggressive plan of spending 15,000 crore rupees in next 5 years.
Absolutely. Tata Power has gone underground as well. Last time we had a full showcase of that also. It's interesting. What's the target of growing that and expansion of that?
Yeah, so 400 kV is also coming underground. Anyway, distribution is 100% underground. In transmission also, to achieve the best of reliability, we are coming up with all underground solution in time to come.
Absolutely. So just one last question. What is the expected projection of numbers we are seeing, given all the competitors are also in market? So what do you think, how percent the growth will be seen, Tata Power will be seeing in future?
So around 9 to 10% growth is expected.
Okay. Thank you so much, sir, for giving such interesting facts. It's always a pleasure to have you on our channel. Thank you so much.
How the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is your favorite show, Daily Calls, a show that answers your specific stock questions on the program. This is where we will try and understand what top market experts have to guide you on the markets and on your specific stock questions as well. So in case you're here for the first time, the WhatsApp number is flashing on your screen. Send me your questions here, along with your name, location, and your contact details, as we can give you an opportunity to speak live to our top market experts as well. In case you are joining us on our YouTube channel, Business Today, you need to go on to Daily Calls Live. Use the comments section there to send me your questions. I'll be happy to address all of those questions with our top guests who'll be joining in. Let's also welcome Nilesh Jain from Centrum Broking, our guest of the day, to share with you a fresh perspective on the markets and to help us understand your queries and the decoding of that too. Thank you so much, Nilesh, for joining in. Good afternoon to you. Your own sense on the markets in a holiday shortened week. What's the strategy you're adopting right from the very start?
Very good afternoon, Sakshi. Well, it's a truncated week, and looking at the rebound that we have seen in today's trading session, greenery can be seen across the global markets. All Asian markets this morning were trading with a positive bias. So overall, the sentiment and the overall bias for the week looks like on a positive side. But Nifty has reached to its resistance zone. So 24,200 is a very crucial level that we are keeping an eye on. The kind of cool-off that we have seen in the India Week's volatility index in the previous week, it has reached to its comfortable position below 13. So that is giving more comfort as of now. Overall bias, as mentioned, remains positive. Buy and decline should be the strategy. If you get any dip towards 24,000, that can be used as a buying opportunity. Just in case if we see a breakout about 24,200, that will give another confirmation of this particular uptrend to continue towards 24,300 to 24,500 in the June series itself. Coming to the Bank Nifty setup out there is also looking positive. We are expecting a move towards 58,500 to 58,800 going forward. So buy and decline in the Bank Nifty as well. But since it has reached to its resistance zone, that's why we are advising to wait for a dip maybe towards 57,600, 57,500. That can give you a good entry point.
Okay, got that. So that's the overall strategy on the markets as well as how you should be really looking at the strategies from here on. Let's now start taking some questions. We have the first query for you, Nilesh. This is from Mirza Yamin from Riyadh. He watches our show regularly. Good to see your question, Mr. Yamin. His question is on MMTC. He's got 4,000 shares at 49 levels, and he also wants to know about Welspun Living. Those are the two stocks he has a question on. MMTC, he has got at 49. Welspun Living, he's got at 134. He wants to know whether there are bullish signs on both these stocks, or should he hold on or exit from these stocks from the current levels. What would you advise? On MMTC, the current price being 75, he's sitting on good profits. Today also the stock is up by 1%. Let's also pull up Welspun Living, where he has got the stock at 134 odd levels. And if we look at the current levels also, which will come up on your screens, it's at 162. Here also he's sitting on profits. Your sense, Nilesh?
Well, Sakshi, a very good breakout on both the counters. First of all, a very good buy, I would say, in both the scripts. First of all, Welspun Living, this counter has given a good breakout from a broader rectangle pattern. And the important resistance, which was earlier acting at 152, will now act as immediate support. So keeping 152 as a stop loss, I would suggest to ride this rally. We can expect a move towards 170 to 180 going forward. So structure still looks strong. In spite of the fact that we have already seen a very good momentum in the previous week, I believe there is further upside room left all the way towards 170 to 180 in the near term. So keep a trailing stop loss at 152 and stay put in Welspun Living. Similarly, MMTC, a very good breakout that we have seen recently in this particular counter as well. A similar kind of a consolidation breakout from the levels of 72. So keep a trailing stop loss at 72, stay put in your long position, and we can expect further upside move towards 80 to 84 on the upside. So yes, the structure looks strong, keep a trailing stop loss, and stay put is the advice.
Okay, got that. Let's also take the next question that's coming in from again another of our viewers. This is Badri from Bengaluru. He says, "Hi Sakshi, I'm holding 50 shares of Coforge in my portfolio at 1400 levels. What is the outlook for the next 3 to 6 months? Should I hold or exit? What's your advice here?" Coforge being one of those IT firms that despite the underperformance that we've seen, this stock has still done good. Even on the earnings and post earnings, we have seen a good performance coming in despite all the negatives that have played out for the sector as a whole. What would you advise here?
Well, absolutely, Sakshi, you rightly pointed out, this counter has been one of the outperformer within the IT pack. So looking at the broader IT structure is not looking that promising. It's a kind of a sell and rise as far as large cap IT names are concerned. But comparatively, Coforge has a better setup. Post numbers, we have seen a gradual uptick that has continued. So if I have to pick any one particular counter within mid-cap IT space, that would be Coforge. So stay put in your long position from a 3 to 6 months perspective. I think the stock has the potential to move towards 1700 to 1800 in the near term. So first of all, keep a tight stop loss at 1400 because IT remains extremely volatile in the near term. So we may see some bit of profit taking at the high levels as well. So keep a trailing stop loss at 1400, and just in case if it takes out 1525, so that's the 200-day long-term moving average. That's a strong resistance. So then we can expect further uptake from a very short-term perspective, maybe 1650 to 1700. That kind of levels can be seen. So yes, one can stay long in this particular counter.
One can stay long in this particular counter. That's clear verdict coming in on Coforge within the IT pack. Let's take the next query now. This one is from K. Gopi. He says, thank you so much, Sakshi. Very grateful to you for this show and for taking all the questions of our viewers. Thank you so much, dear Gopi, for writing in such warm words. I hope that this show is truly helping you out in your investment journey. Today, you've given us two questions. One is L&T, Larsen and Toubro. You got this stock at 3,550 and you want to know which is the next level that you should be really looking at exiting into this stock, okay? And the second one is Chola Finance at 1,450, 1450 levels. You've also got Chola Finance. The good part in L&T is that you got it at a great price. We were seeing, some downtick on Larsen and Toubro amidst the Middle East crisis. And from then on, we have seen good recovery and you've played that recovery. So good to see that play out for yourself. Let's look at Chola Finance. You bought it at 1450 odd levels. And currently, again, on this counter as well, if we look at the current prices, you are sitting on profits. 1592 is the current level. Let's try and understand that, Nilesh.
Well, Sakshi, both the scripts are looking good on the chart. First of all, L&T, we have seen good rebound from the lower levels on the back of de-escalation between US and Iran, somewhat, not exactly, but yes, some cool-off that we have seen on geopolitical front, and due to that, we have seen a good breakout in this particular counter. So first of all, a very good bet that should be in your portfolio from a position perspective. But from a trading perspective, I think the stock can move towards 4,300 to 4,400. So one can keep a trailing stop loss at 4,100 and stay put in L&T. Coming to Chola Finance, it's a very good NBFC counter and a very good rebound that we have already seen. So there is further upside room towards 1,750 to 1,800 in the near term. So these kind of levels can be seen. So one can keep a stop loss below 1670 and yes, stay put in Chola Finance as well.
Okay, let's take the next question. This one is from GD Rao from Andhra Pradesh on our YouTube. He's watching our show and he says, I want to know about whether if GAO IPO is listed, then will it be positive or negative for Bharti Airtel since I'm holding this stock at 2050 and I'm also holding Geo Finance at 305. So what should I be doing? That's an interesting question there, Mr. Rao. Thanks for asking that question. I'm sure a lot of viewers are already contemplating their strategies ahead of the Geo IPO. This, no doubt, Nilesh, is going to be the biggest IPO that we are going to be watching out for in the history of Indian stock markets. And therefore, it's given the kind of interest that it will generate from foreign investors, domestic investors, institutional and retail alike. I want to understand, of course, with the kind of DRHP indications, the valuations could be somewhere around 15 lakh crores. That's higher than 11 lakh crore rupees of Bharti Airtel. Now we're also in the last AGM announcements last week, we heard from the management of Reliance Group how they were indicating that the Jio is moving on to becoming a large technology player than just being a telecom player. So they're looking at satellites, they're looking at AI, they're looking at data centers as the next big growth story as to how they're looking at all of these aspects of the digital story that they are unfolding. Your suggestion of the impact of Jio IPO it could have on Bharti Airtel, which currently has a monopoly, has played that theme for far long time, being the leader. How would you look at Bharti Airtel shares currently at 1917?
Well, first of all, if Jio gets listed at high valuation, then we'll definitely see some positive impact in Bharti Airtel. But otherwise as well, if you see this broader structure of the Bharti Airtel continues to remain strong. We have seen in between some bit of a meaningful correction, but yes, it's a good portfolio bet. And since we have seen the maximum subscriber base in terms of that, Bharti Airtel has some bit of advantage. So overall, we can expect a follow-up move in Bharti Airtel maybe towards 2000 to 2100. So overall, I think there will be a positive impact on Bharti Airtel post Jio listing, but there will not be any major impact on Jio Finance. This particular counter has technically formed a good base formation in the zone of 225 to 240. Now it is likely to move higher gradually towards 265 to 270. But there may not be any major impact because of that. But yes, on Bharti Airtel, there will be a positive impact that we can expect.
Okay, I hope this has answered your question, Mr. Rao. Next, we move forward. We have Vinita Gupta's question next. She says, I want to know about Greaves Cotton. I bought this at 154. Should I hold, exit or add this one? Greaves Cotton. How would you advise this one, Nilesh?
Well, Sakshi, first of all, just to give you a disclaimer, we have recommended this particular counter this morning to our client at the level of 200. Although we have advised to book partial profit at 215, but still broader structure looks strong. If somebody has already bought it at a lower price, then my suggestion would be to stay put, keeping a trailing stop loss at 200 now. The stock has given a multi-month breakout from the levels of 200, so there is still potential to move towards 230 to 240 on the upside. So yes, keeping a trailing stop loss, one can stay put from a position perspective, looks strong.
Okay. Next, we have a query coming in from Satya. He says, could you please ask Nilesh to help me with Just Engineering for a positional trade that I want to take here? If it is a good trade, then what levels should I look at?
Well, Jash it's trading at 527 and the counter is looking strong, a very good momentum, good breakout can be seen on the chart, and this counter is likely to move towards 550 on immediate basis, and in the near term we can expect the levels of 600 plus as well. So yes, you can stay put, keeping a stop loss below 500. Positionally, counter has a better structure and a momentum can be seen, so stay put with a trailing stop loss.
Okay. Next, we'll take a question from Kaushik Rana. He says, good afternoon, Sakshi. Good afternoon to you also, Mr. Rana. The question that he has is, I have KPIT Tech, 10 shares at 1476. What should I do with the kind of downward trajectory we are seeing? And is it a hold or sell? KPIT Tech.
Well, Sakshi, first of all, IT space as a whole, we are witnessing some bit of uncertainty. A lot of volatility we have seen of late. and KPIT as well, we have seen some bit of selling pressure. But at present, since we have already seen a very good rebound in the previous session from the levels of 710, 720. So yes, one can expect a pullback move towards 775 to 800 kind of levels on the upside from a short-term pullback perspective. So keep a trading stop loss now at 730. And on the back of a pullback trade, yes, one can stay put for 775 to 800 kind of levels on the upside.
Okay. Taking the next one, this one is from one of our viewers, Varun Parekh. He says, I'm from Ahmedabad. मेरे पास Inox India के 100 shares हैं 1805 पर. मुझे क्या करना चाहिए? Inox India 1805 पर खरीदा है नीलेश.
Very good momentum we have seen recently. काफी अच्छा setup है और अच्छा run up हम already देख चुके हैं. In fact, जून मंथ में सोफा 30% का अच्छा उछाल भी हमें देखने को मिला है. सो फर्स्ट ऑफ ऑल मोमेंटम अच्छा है, इसके लिए यहाँ पर बने रह सकते हैं. 1865 का यहाँ पर स्टॉप लॉस रखना होगा, दैट्स योर ट्रेलिंग स्टॉप लॉस. और ऑन द अपसाइड 2000 2100 तक की पोटेंशियल है काउंटर में गोइंग फॉरवर्ड, वो लेवल्स देखने को मिल सकते हैं. बट थोड़ी सी वॉलेटिलिटी के चलते थोड़ा प्रॉफिट टेकिंग ऊपरी स्तरों से हमें देखने को मिल सकता है, इसीलिए ट्रेलिंग स्टॉप लॉस यहाँ पे जरूर मेंटेन करें.
ठीक है, नेक्स्ट सवाल लेते हैं. ये अंकुर मोदी का सवाल है. लिखते हैं, हाय साक्षी, होप यू डूइंग ग्रेट. आई एम वेरी वेल, थैंक यू सो मच अंकुर फॉर आस्किंग एंड आई होप द सेम फॉर यू. द क्वेश्चन ही हैज इज ऑन अशोक लेलैंड. काफी गिर चुका है ये शेयर अपने हाई से, तो क्या इसे एक्यूमुलेट करना चाहिए करंट लेवल्स पर और क्या अच्छा रिटर्न्स देखने को मिल सकते हैं? अशोक लेलैंड.
Well, accumulation, yes, definitely one can accumulate. बड़ी अपसाइड की गुंजाइश ना रखें क्योंकि काउंटर में लगातार ऊपरी स्तरों पर दबाव भी देखने को मिल रहा है. तो शॉर्ट टू मीडियम टर्म का स्ट्रक्चर साइडवेज टू वीक है, बट यस, पोजिशनल पर्सपेक्टिव से काउंटर में पोटेंशियल है कि गोइंग फॉरवर्ड 200 प्लस तक के लेवल फी से दिखा सकता है. अगर करंट लेवल पर ऐड कर रहे हैं तो 140 का स्टिक स्टॉप लॉस लगाएं, बट मेरे ख्याल से थोड़ी सी बार्गेन बाय यहाँ पर कर सकते हैं. अगर आपको 150 या उसके आसपास मिलता है तब यहाँ पर एक कॉन्ट्राबैट लेके चल सकते हैं क्योंकि रिस्क एंड रिवॉर्ड वहां पर फेवरेबल होगा. 140 के स्टॉप लॉस से आप 170 180 तक की पुल बैक एक्सपेक्ट करके चल सकते हैं.
ठीक है, नेक्स्ट क्वेश्चन लेते हैं. ये अंशु सोढ़ी का सवाल है. लिखते हैं, हाय, गुड आफ्टरनून मैम, गुड आफ्टरनून निलेश सर, दिस इज अ रियली हेल्पफुल शो. थैंक यू सो मच डियर अंशु फॉर राइटिंग इन. द क्वेश्चन शी हैज इज ऑन पारस डिफेंस. शी फील्स स्टक at 1432 and she has 40 shares. She wants to know what should she do. Can she continue holding on? Is it the time for her to take an exit and maybe shift her position somewhere else?
In the defense pack, Paras defense has outperformed in the recent time. We have seen a very strong momentum after forming a base somewhere around 600 plus. We have seen almost counter has doubled from that level. So yes, looking at the recent momentum, I think one should stay long in the existing position because quite possible stock may surpass 1400 and move towards 1500 plus in the short run. So keep a trailing stop loss now. If you are already holding since a long time, then keep a tight stop loss at 1330. Stay put in your existing long position. High possibility of counter moving towards 1450 to 1500.
ओके, नेक्स्ट क्वेश्चन लेते हैं. जतिन दिवे का ये सवाल है और ये लिखते हैं, हाय नीलेश जी, गुड आफ्टरनून सर, आई हैव ईपैक एट 242, माय क्वांटिटी इज 1000. प्लीज सजेस्ट अ टारगेट एंड स्टॉप लॉस फॉर 3 मंथ्स. ईपैक ड्यूरेबल्स में 242 की खरीद है.
Right, ईपैक currently is it trading at 265? Am I correct, Sakshi?
Currently 265, correct.
राइट. सो ईपैक में इनफैक्ट काउंटर में कॉन्स्टेंटली हमें 200 डे मूविंग एवरेज के आसपास का रेजिस्टेंस फेस करने को देखने को मिल रहा है. सो 278 का एक स्ट्रॉन्ग हर्डल है, स्ट्रॉन्ग बैरियर है. उसके पार निकलता है तब यहाँ पर एक बड़ी अपसाइड की गुंजाइश करके चल सकते हैं. 350 तक के भी लेवल फिर हमें देखने को मिल सकते हैं, बट उसके लिए 278 280 का जोन निकलना बहुत जरूरी है. एग्जिस्टिंग लॉन्ग पोजीशन में बने रह सकते हैं. यहाँ पर स्टॉप लॉस होगा 250 का और एक बार के लिए होल्ड करके चल सकते हैं.
Okay, next we have a question from Nancy. लिखते हैं, hi, I have 2 questions. I want to know on GPT Infra. Should I book my profits or do you see continued upside here? My initial target was 150 and I want to know what can I expect going forward from here. GPT Infra और न्यू एंट्री पूछना चाह रही हैं आपसे प्रीमियर एक्सप्लोजिव्स पर। जीपीटी इंफ्रा को पहले देखते हैं। 12% ऊपर जबरदस्त अच्छी मूव और 136 पर अभी ये ट्रेड कर रहा है। इन्होंने अपने लिए 150 तक का टारगेट एक्सपेक्ट किया हुआ है यहाँ पर। नीलेश जी, क्या आपको वो आता हुआ नजर आ रहा है?
बिल्कुल, देखिए जो रियलिस्टिक टारगेट नजर आ रहा है 150 प्लस का नजर आ रहा है, क्योंकि काउंटर में एक अच्छा मूव हमने रिसेंटली देखा है, काफी अच्छा ब्रेकआउट भी देखने को मिला है। इट्स काइंड ऑफ 8-10 मंथ्स कंसोलिडेशन ब्रेकआउट हमें देखने को मिला है आज के सेशन में विद अ गुड वॉल्यूम अट्रैक्शन। तो यस, एक बार के लिए बने रहें, एक ट्रेलिंग स्टॉप लॉस यहाँ पर मेंटेन करें जो अब निकल के आ रहा है लगभग 128 का, 128 का स्टॉप लॉस होगा। अपसाइड में 150 तक का पोटेंशियल है काउंटर में, शॉर्ट टर्म के लिहाज से वो लेवल्स देखने को मिल सकते हैं।
ओके, नेक्स्ट क्वेश्चन लेते हैं और ये सवाल हमारे पास आया है आयुष अग्रवाल का। लिखते हैं, डियर मैम, आई वांट टू नो अबाउट ग्लैंड फार्मा। 500 शेयर्स है मेरे पास 1800 के लेवल पर। 2023 से मैंने इसमें इन्वेस्ट किया हुआ है, मुझे क्या करना चाहिए ग्लैंड फार्मा में?
देखिए, ग्लैंड फार्मा का स्ट्रक्चर थोड़ा सा साइडवेज है। अगर हाल फिलहाल देखें तो ऊपरी सर से थोड़ा दबाव भी देखने को मिला है। अगर एग्जिस्टिंग लॉन्ग पोजीशन है तो 2100 के स्टॉप लॉस से एक बार के लिए होल्ड कर सकते हैं। हालांकि बड़ी अपसाइड की गुंजाइश नजर नहीं आती है, बट यस, थोड़ा पुल बैक मूव 2300 तक का देखने को मिल सकता है, बट 2100 के स्टॉप लॉस से अगर चाहे तो होल्ड करके चल सकते हैं।
Okay, let's take the next question. This one is from one of our viewers, and this is Nitin, who says, I am from Bangalore and I want to know about Suzlon. I'm sitting with a 5% profit here. Should I continue to hold with my position?
Could you please repeat the name of the counter?
Suzlon.
Right, Suzlon. So Suzlon has a very good setup. In fact, I would say stay put in your long position, keeping a stop loss below 57.5. 57.5 is a very good support. I think the counter can gradually move towards 63 to 65 in the near term. So stay put in your long position, keeping a stop loss below 57.5.
Okay, moving forward to the next query then. We have this one coming in from, again, one of our viewers on our YouTube platform. This is coming in on the question, we have addressed this one. Deepak Sahu, SW Solar का टारगेट पूछना चाहते हैं आपसे नीलेश।
Is it SW Solar?
SW, Sterling and Wilson Solar, correct.
Right, so counter is right now trading at 243. See, we have seen a lot of correction in this particular counter, but अब फिलहाल जो चीजें हैं थोड़ी पॉजिटिव साइड में डेवलप हो रही है। काउंटर ने अपने सारे शॉर्ट टर्म लॉन्ग टर्म मूविंग एवरेजेस को क्रॉस कर दिया है। सो यस, स्टे पुट इन योर लॉन्ग पोजीशन फॉर अ पुल बैक मूव टुवर्ड्स 265 to 280 in the near term. Keep a stop loss at 225. The structure from a pullback perspective looks positive.
ओके, गॉट दैट। चलिए अब अंत में बताइए नीलेश जी, आप अपनी पसंद से कौन से शेयर्स पर रिकमेंडेशन देने वाले हैं आज के सेशन में व्यूअर्स को?
बिल्कुल, देखिए, लॉरस लैब ये पर्टिकुलर काउंटर है जहां पर काफी अच्छा मोमेंटम हमने देखा, उसके बाद थोड़ा सा कंसोलिडेशन भी देखा। अब फिर से यहाँ पर मोमेंटम लौटता हुआ नजर आ रहा है, स्ट्रक्चर पॉजिटिव है, तो इस पर्टिकुलर काउंटर में करंट लेवल पर खरीदारी करके चल सकते हैं। 1470 से लेके 1500 तक के लेवल ऊपरी स्तर पर देखने को मिल सकते हैं। 1380 के स्टॉप लॉस से लॉरस लैब इस पर्टिकुलर काउंटर को खरीदारी करने की सलाह होगी। इसके अलावा जो दूसरा स्टॉक हमें पसंद आ रहा है वो है फिनोलेक्स केबल। फिन केबल जिसका सिंबल है, काउंटर में काफी अच्छा ब्रेकआउट आज के सेशन में देखा है, तो फिन केबल्स को लॉन्ग करने की सलाह होगी, जो हमने हमारे क्लाइंट को भी खरीदारी करने की सलाह दी हुई है। तो 1150 का यहाँ पर स्टॉप लॉस होगा, 1250 से 1270 तक की अपसाइड यहाँ पर एक्सपेक्ट करके चल सकते हैं।
ओके, गॉट दैट नीलेश जी, बहुत बहुत धन्यवाद। आज आप हमारे साथ जुड़े और हमारे सभी दर्शकों को आपने बताया कि कैसे अपने ट्रेड्स के ऊपर आगे बढ़ना है। थैंक्स अ लॉट, ऑलवेज अ प्लेजर टू हैव यू, एंड ऑफ कोर्स वील सी यू अराउंड ऑन अनदर एडिशन ऑन बिजनेस टुडे। थैंक यू सो मच फॉर बीइंग विद अस।
Thank you.
All right, viewers, we'll step into the second segment. We are still on the Nifty, holding up about 0.5% of gains. Cooled off from the day's high point, but still holding up at this point in time. Let's also pull up some of the other key indices to see how the markets are trading in the half-time trade, about 0.4% of a move on the Nifty Bank today. That's what we are looking at. We will also pull up the IT index. That's in fact after a long haul again performing today. Remember, last 1 week has been a rough one for the index. 1.2% higher for the IT index. Mid and small caps are also showing you some strength. So the beginning of this week has been solid. In fact, 0.5% gains come in for the broader markets. That's where we are looking at certain momentum also pulling up in the session as well. Let's also pull up some key stocks that are buzzing in the session. India VIX is down meanwhile. Remember, that's where some of the comfortable momentum is coming in as far as the market indication on greed and fear index is concerned. But we also have Kranti Batini joining in on our show for the second segment of Daily Calls. Warm welcome to you, Mr. Batini. Good afternoon. Good to have you with us at the start of the week. Your own suggestion on how are you looking at the markets amidst these big bang IPO announcements coming in from NSE and Reliance Jio? Are you going to be seeing money drifting from secondary market to primary market, people saving up on more cash then rather than participating from what it is currently? Or do you think there is enough and more liquidity and both secondary and primary markets are all set to see blockbuster moves that have been evading the markets and the sentiments for some time?
Yes, actually, we can see the much awaited IPOs and much discussed IPOs like NSE and the Geo coming back to the primary markets. It's a very positive indication that shows the confidence of the promoters coming back to Indian markets at this point of time. And I do see there is a lot of strong liquidity is available in the market. So I don't think so there will not be any kind of a liquidity crunch is concerned in the medium to short term. Definitely the foreign portfolios, investors also will be showing interest in these kind of business models like the Geo and NSE. They're truly global standard, and the foreign portfolio investors immense interest these IPOs could draw going forward. And Sakshi, we also need to track at this point of time how the geopolitical issues that are going to drive the market thanks to the cool off in the crude oil prices. If we see further drift down in the crude oil prices, Indian markets is going to move strength to strength. If the global geopolitical environment is because we are seeing complete instability in the global geopolitical environment and contradictory statements. So if the statements are constructive and we tend to see the Strait of Hormuz getting opened decisively without any conditions going forward, that's going to be a positive for India and Asian markets as at a greater extent. So definitely it's a buy on dips, but sell on rallies. One need to wait and watch how things are going to evaluate in the medium to short term. But definitely any decline on Indian markets is a warranted buy for the investors and traders, Sakshi.
Okay, got that. We'll start taking some questions now from our viewers who are writing into us, Mr. Batini, for your guidance. We'll take the first question coming in from one of our viewers, Sumit Lakhar. He says that my question is on NOSIL. Is it the right time to buy this stock for a long-term perspective? What kind of target and stop loss I can expect on NOSIL going forward from here? So a fresh purchase question on NOSIL.
Now, Sakshi, the stock is up 20% today. But if you see the last 1 year stock performance, the stock was in a downtrend. It was in a consolidation phase. This is the first uptick we are seeing in NOSIL at this point of time. In terms of the results is concerned, that is the concerning area for NOSIL. Okay, last couple of quarters have been disappointing quarter for NOSIL at this point of time. So wait for the current quarter results and just see the results, and he can build up the portfolio, build up his portfolio, build up the position going ahead. But till now, we are just seeing a dead cat bounce. We are seeing some kind of a buying interest is getting emerged, but sustaining at this range is needed for NOSIL. we tend to see pull off of crude oil prices also will help companies like NoSil in the medium to short term to increase the demand for their products. But by and large, I will wait for the results to see and build any kind of a serious investment positions for the medium to long term.
Okay. Next, we have a question from Ashish Garg from Saharanpur. He says, "Hi, Sakshi. Greetings to the entire team of Business Today. Thank you so much for your warm greetings, Mr. Garg. He wants to ask you, Mr. Battini, on investing a sum of 5 lakh rupees in pharma Bs. He already has Nifty Bank Bs in his portfolio. Wants to know whether it is the right decision to invest in pharma Bs right now? Should he go for defense or power at this stage? What would you advise?" Well, we've been seeing, pharma being one of the consensus buys for a lot of analysts over the last couple of months. Do you still see a lot of value unfolding here if somebody invests lump sum of 5 lakhs in pharma Bs?
Yes, actually, the valuations looks very attractive for pharma companies are concerned. Some certain pharma companies' valuations are looking very attractive. But since he want to go through pharma Bs, rather what he can do is he can infuse his money in a very staggered manner at dips in the pharma companies. Pharma Bs are concerned. At dips, he can try to add into the pharma Bs in a very staggered manner. That's the ideal way of infusing the money, investing the money in terms of fresh capital is concerned.
Okay. Next, let's take another question from Ajay. Says, "Good afternoon, Sakshi. Good afternoon, Kranti, sir. I'm from Noida. I want to know from you, sir, how would you look at Ola Electric for long term? The company has some moat with respect to battery sector investment, but the stock has not performed. How would you really look at Ola Electric? It has improved from its lowest point recently, but when we look at from its all-time highs, it's still considerably down. This is one of the stocks that came amid much fanfare within the IPO and right after getting listed, but after that there have been so many troubles that have mounted on for Ola Electric. How would you look at the stock right now at 42?
Sakshi, you summarized very well. Okay, it had its own reasons for the downtrend in the stock, but in the recent past, we tend to see some kind of uptick in the stock in the medium to short-term perspective. Going ahead, how the company key revenue parameters are going to improve, and also we tend to see the faster adaptation of EV vehicles are concerned. That is the key agenda for the government. Last couple of years, the EV sales adoption and government policies are at a slower lane, but due to the geopolitical issues and increase in the crude oil prices, we tend to see some kind of a faster adoption, and this EV space has been moving from slow lane to the fast lane. How fast this EV adoption moves and how the sales of EV, it can be two-wheelers or four-wheelers, especially Ola is concerned, two-wheeler sales are going to improve, and how Ola is going to increase its market cap. That is extremely crucial. They have been losing their market cap in the recent quarters and all. So it is how the management is going to balance these issues is crucial. If the investor have the high risk appetite, given the kind of the EV move in India is concerned, and also the opportunity for EV is concerned, he can, if he have the high risk appetite, he can start accumulating Ola for a medium to longer term perspective. That's what I can guide the investor at this point of time. It's definitely high risk, suitable for high risk appetite investors and traders.
Okay, got that. We have some more questions coming in from our YouTube viewers. Ratna Prabha says, "Hi Sakshi, can you give me a view on Bombay Dyeing? I'm holding 280 shares. My average price is 153 on Bombay Dyeing."
Sakshi, in terms of the stock performance is concerned, we tend to see some kind of a uptick in the company. Some kind of a speculative activity also tend to be in this counter. In terms of core business is concerned, Sakshi, it's not a fundamental buy at this point of time. There is no improvement in the earnings are concerned, it is just a holding company story that do plays here and there. There are some kind of a better investments are available. I can guide him exit on rallies if there is a uptick in the stock going forward.
Okay, exit on rallies. Next, we have a question from Abhimanyu Kumar. लिखते हैं, हाय साक्षी, ग्रो के शेयर्स 120 पर मैंने लिए हैं, क्या अभी इसे और बाय करना चाहिए? Now, we were talking about NSE IPO just a while ago, and when the exchange itself gets listed, do you think there is a lot of opportunity for capital markets theme as a whole? Grow being one of the recently listed stocks that has come onto the top of radar of a lot of retail investors and some analysts as well. It's currently at 198. Our viewer Abhimanyu got it at 120, which means he's sitting on good profits. So first up, congratulations Abhimanyu. Let's find out whether there is more upside in the run-up to NSE IPO.
Yes, Sakshi, the stock has been holding this range, and we tend to see strong buying interest that emerges in the grow counter. And the investor happened to enter at a very good price when the stock started moving. Sakshi, yeah, definitely it's the stock is in the right sector at the right time, and as going ahead, the financials are going to play a key role. And as we are witnessing the financialization of assets, companies like Grow, they tend to take the advantage. But where I have the discomfort in terms of the names like Grow is their valuations. It's a fully priced in company in terms of the valuations are concerned. Of course, it had a great business model. They have been taking the advantage of the financialization of asset, but how, and it's going to tend to grow well. But how much I'm paying for this growth, that is extremely.
Yeah. Okay, I think there is some connectivity issue. We will try and get back to Kranti and try and understand from him his thought process there and wait by. Meanwhile, the markets are just holding on, viewers, at about 0.5% gains. We'll see how things pan out from here in the second half. Remember, it's a truncated week. We have Friday as a stock market holiday. And over the next couple of days, of course, the focus will remain on stock-specific news flows, a lot of macro-related impact. Mr. Patini is back with us. Mr. Patini, sorry we lost your audio in between. What is it that you were saying? Could you complete your sentence, sir?
Yes, actually, in terms of the grow is concerned, the valuations is the key concern to me. Of course, it have some more legs to the rally, but valuations is the key concern. How the company's results are going to be, these are the things that are going to play. Since he entered at the right price, I tend to guide him to take some profit from the table on rallies.
Take some profit off from the table. Saurabh from Pune, Maharashtra writes in, he says, Kranti sir, please guide on Glenmark Pharmaceuticals. I have 30 shares at 2,254. Should I hold or even average at current levels? Glenmark Pharma.
In terms of the Glenmark is concerned, Sakshi, it's a stock to buy on dips and he can accumulate for a medium to long-term perspective. If the stock can come range of 2,000 levels, that is where he can accumulate the stock on a medium to longer term perspective. Buy on dips is the strategy he can implement for Glenmark is concerned, Sakshi.
Okay. Next, we have a question from Chennai. Sivaraj writes in, he says, I am holding 45 shares of Mython Alloys. My average price is 1,100. I want to know from Kranti sir, does the stock have potential to double in the next 5 years? What would you advise here on Mython Alloys over the next 5 years? Do you think the stock has enough potential to double from the current level?
Sakshi, I'm not here to give such guidance to him, but I'm here. I can tell him how the fundamentals are working for this company. Sure. See, the company has been investing in listed and unlisted companies. They're deploying their cash in the equity market. And in fact, they have invested in companies like NSE also at a much better prices. And as the company NSE get listed, the company valuations are expected to go up. There is a lot of margin of safety in this company. So this is the stock. Very interestingly, they're deploying their cash reserves in the capital markets, then expanding their core business. It's also a strategy. One can take the advantage of how the opportunities in the capital markets that companies do create. On a medium to longer term perspective, one can hold on to this company. And given the kind of the current valuations in these market conditions, one can add Maitan allies on dips.
Okay, let's move forward and take the next query then. This one is again from one of our viewers who is writing in on our WhatsApp. This is Ravi Kalra from Delhi. He says, good afternoon, Kranti sir. I need an advice on Vedanta Iron and Steel. I'm holding 1 lakh shares at 21.2. Should I hold on for the next 1 year? Vedanta Iron and Steel particularly.
Sakshi, this is a new kid on the block at this point of time. The demerged entity from Vedanta is concerned. So we tend to see some kind of a speculative activity in this counter. We tend to see some kind of a lower circuits and upper circuits in this Vedanta Iron and Steel. To make the current kind of the valuations are concerned, to make any kind of serious investment decisions, I tend to wait for a couple of quarters results, how it's going to pan out. That is the crucial thing I do. So wait for the results and wait for the management guidance, and buy on dips is the strategy. Don't try to chase the stock when the stock has been hitting upper circuits.
Okay, next we have Sai from Hyderabad. Says, hi Sakshi, I am holding Adani Enterprises at 3100. Finally, the stock is coming to my buying price. Should I hold or should I sell? I have a 3 months view.
Sakshi, 3 months view for a company like Adani Enterprises is very too short. Since the investor have been holding and he have not bought when the stock came down, and he is telling that his buying price is 3,000 levels. And see, the stock performed in the last 1 year, given the returns around the 60% kind of a returns. So just there is a embedded value, but it's a fully priced in stock at this point of time. He can add on dips and sell on rallies. That's the kind of strategy he can implement at this point of time on a medium to short term perspective. But for the longer term, there is a lot of embedded value. There are main incubating businesses like the data center business and also the defense theme, and also the airports theme is there in this Adani Enterprises. It's a holding company and many incubating valuable businesses are there in Adani Enterprises. So on a longer term perspective, I tend to buy the stock on dips.
Okay, we'll take one last question. This one is from Shrikant from Bengaluru. Says, hi Sakshi, good afternoon. Hello Kranti sir. My query is on South Indian Bank. I have bought this stock at 21 level. I'm in profit. Please suggest if I should book my profit or wait on my position.
Sakshi, in terms of the South Indian Bank is concerned, the stock has witnessed a strong rally in the recent past. And in fact, the stock has consistently going up in the recent past. At this point of time, I'll wait till the returns and try to keep a trailing stop loss somewhere around 45. That's what I tend to keep on a medium to short term perspective with respect to South Indian Bank is concerned in the medium to short term perspective, Sakshi.
Okay, and towards the end, Mr. Batini, anything from your side, anything of fresh that has come onto your radar that investors can keep an eye out on, maybe a theme, maybe a sector or a stock?
Sakshi, we tend to see stocks in the chemicals and names in the defense. We tend to buy aerospace. This is the theme we have been buying, and we discussed about a couple of months back and a couple of quarters back themes like nuclear power and all. So names like John Cockrell and all, they multiplied. We discussed the stock around 2,500 levels. In fact, the stock touched 9,500, 10,000 levels. So and names like Walchandnagar, they performed very well. So the names in chemical names like Clean Science, are in the pharma, like a Concord Pharma, or the newly listed Rubicon. These are the stock themes we are looking for a medium to longer term perspective. Buy on dips is the strategy one can tend to keep in a longer term perspective, Sakshi.
Okay, got that. So one can definitely look at these particular stocks. We can look at Clean Science, Concord, Rubicon. These are the kind of stocks that Kranti ji has advised that investors can definitely look at. And of course, defense pack, chemical stories is something that he is very closely tracking at this point in time. Thank you so much, Mr. Batini. Always a pleasure to host you with us on Business Today. Hope you have a fantastic time. We'll see you around and see you on another edition on Business Today Television. Thank you.
Thank you, Sakshi. Always my pleasure. Thank you.
All right, viewers, we'll wrap it up on that note, but do stay tuned on to Business Today. Up next, coming in, a lot of coverage on the markets on the other side, so stay tuned for that.
Hello and a very warm welcome on Business Today Television. Ladies and gentlemen, the markets are in fine shape. It's a 3-4 day rally which has added 1,000 points to the Nifty. We are well on our way to hit 200-day moving average in a couple of sessions, as also the banking and the financial space is doing immensely well. Now 3,300 points have been added in the previous 4 sessions on the Nifty Bank. Things are looking better for the mid-cap and the small-cap index as well. And the rupee, ladies and gentlemen, the star of the show, is appreciating versus the dollar. Oil prices have slumped below 200-day DMA. It is looking as good as it can be for equities. To discuss the way forward, we are now joined by Mr. Alok Singh. He is the Chief Investment Officer at Bank of India Mutual Fund. Mr. Singh oversees 22 open-ended funds, 2 closed-ended funds, and manages about 60,000 crore rupees in equity and debt. Namaste, Mr. Singh. A very warm welcome. How are you reading sentiment these days on Dalal Street?
Namaskar. See, the thing is, after last week news flow about some settlement emerging between US and Iran, there is a sigh of relief, and that is getting reflected in the way the markets have rebounded, or there is some amount of cheerfulness what we are seeing. While it is coming with a bit amount of caution, because the conduct of these two parties in last 3-4 months have not been very encouraging in terms of holding on to their words. So, while we have seen some rebound, there is some optimism, but, we are not seeing, excessive amount of optimism right now. Maybe once they sign it on Friday and some time lapse, probably market will become more confident that yes, the peace which they are talking about is here to stay. And also then some amount of disruption which got caused because of this start getting unwinded over next 3-4 months. And I think that will then getting reflected into earnings margins. And I think which is a positive sign. But I believe that the market is optimistically cautious, as they say right now.
I think we live with this caution, Mr. Singh. We've seen terrible times in the last 3 months, and many an equity investor has had his or her faith shaken in the Indian long-term story, although it remains intact in many parts. Because you also manage debt within BOI mutual fund, how are you looking at this government's steps to buttress the rupee, in particular the FCNR fixed deposit scheme that it has launched for NRIs and PIOs? You yourself represent a bank indirectly. How is the AMC and the broader bank looking at this scheme?
In our view, I think it's a very positive move because, yes, it has an implication on rupee per se, that, the flows will help rupee stabilize. But having said that, if you look at with increased amount of Indian savers looking to invest in other financial instrument other than the deposit only, the banking system has been scrambling for getting deposit growth. And as you see, our lending growth has been higher than the deposit growth. And these concerns have been emerging often that, how will the bank sustain this kind of growth if the deposit does not catch up? So I think this also solves that purpose because you get the liability raised from third-party sources outside India. And then I think that creates that equilibrium between lending growth and the deposit growth, which is very healthy for the economy in terms of especially at this growth phase where you don't want the credit growth to slow down and the new fixed asset formation to slow down because those are the building blocks for higher growth rate in coming times. So I think it's a good decision taken at the right time. It solves two purposes, not only the rupee, but also the liability crunch which Indian banking system was facing.
Mm-hmm. Fair point. And it is for the government to address this anomaly. And you are very rightly pointing out, of course, money is coming into SIPs and mutual funds. That gladdens your heart, but it's coming at the cost of fixed deposits. That's very rightly put. And a balance has to be reached because you can't have booming stock markets and banks out with a begging bowl. Be that as it may. Mr. Singh, what has the research team at BOI Mutual Fund concluded at the fag end of this conflict? What worked well for the AMC? What wasn't so good?
So if we look at from our point of view, and I suppose you are asking from our portfolio
yes.
positioning, so basically, if you look at, we have been quite optimistic about few things like the lending financials. We were quite optimistic in financials, and the capital market names we were quite positive. We were positive on auto as a consumption thing. We were positive on healthcare as a defensive play. We were not so positive on IT, and that's an underweight. Oil and gas has been an underweight for us. So far, those things worked for us. But as we say that, things are never permanent in nature. Now with the evolving situation, especially if this agreement actually gets signed, right, and some of the negatives get unwound, I think some of these things, maybe like oil and gas, may give a positive divergence over there. I think that could be looked at, but that is case to case. The team will work around it. But so far, these were the sectors where we had major sectors where we had overweight and underweight. So far, it has worked for us. Luckily, we didn't had sectoral allocation wise, we didn't had much of misses, so to say. But yes, it's a continuous job. We need to relook at things again.
Fair point. What are the opportunities that are in front of BOI Mutual Fund when it comes to the correction in valuations that we've seen? Nifty, of course, now well below the 10-year average in terms of PE and price to book. are you actually looking at opportunities to deploy fresh money at this point, or what is the overall level of cash in the portfolio?
Currently our cash levels have come down. We would be on aggregate 3-4% of cash, which was far higher in the month of February. We were on aggregate having some 20% or thereabout kind of cash level, which we have invested, and it has helped us. So currently our cash levels are not that great. As you rightly pointed out, that with the earnings getting added, the markets on FY27 and 28 basis, especially 28, are looking quite attractive because, whatever earnings disruption we may see in Q1 and Q2 may start getting normalizing in Q3, 4. And hopefully FY28 will be a normalized year. And in that case, we may see, say on a BSE 500, we may see a 14-15% kind of earnings growth. That is quite possible. So I think overall the valuations are looking okay. And I would say they are fair. I would not say they are mouth-watering. They are fairly valued. But what has happened is that, because of the fact that we had a lot of disruptions coming from technology side, from the geopolitics side, some of the behavioral changes, the markets is increasingly becoming more bottoms up, right? So it is becoming very, very difficult to take broader sectoral calls, and I think that trend will continue for some time. So the focus is to identify individual stocks and build portfolios around that. That's how we are looking at right now. Increasingly, I think most of the market is fairly priced, so there is no larger pockets of undervaluations which you are seeing right now for us to plunge into something of that sort at a what we call top-down approach. So I think we believe that increasingly we are moving into a bottom-up thing, and that's where we would like to concentrate our energies on.
Ladies and gentlemen, this is as good a time as any to look at a fund that's managed by Mr. Singh. This is Bank of India Mid and Small Cap Equity and Debt Fund. It's just completed a decade of existence and has given a wonderful 16% CAGR each year since 2016. A lot of details will come in front of you. 45.33 is the net asset value. So 10 has become 45 in a span of about 10 odd years. And the returns are also fantastic. If you look at the 10,000 rupee SIP that you may have done in the direct route over a period of last 3 years, the returns have been to the extent of about 17% CAGR. So let's discuss this particular fund. Mr. Singh, what's the philosophy of marrying debt to mid and small? One would presume that mid and small cap funds would be used for wealth creation and creating multi-bagger returns, but you've added a talka of debt. What was the logic?
So the logic was very simple that, as you rightly pointed out, that mid and small cap, if invested well, help in wealth creation, and they are faster growth segments. Having said that, they are also married with a very large amount of volatility. And that volatility actually dissuade people to hold on for a longer period of time, or get out of these segments at the bottom of the cycle typically. So what we looking at this behavior 10 years back, we decided what if we can reduce some amount of volatility so that the holding period of people becomes longer, because they're not worried about the volatility as such. And then the compounding will do the magic. And I think that's what, if we look at 10 years back, we have been able to achieve, that the volatility has been quite lower. In fact, if the index which we follow for this is a 70% mid-small 400 and 30% CRISIL short-term index, the standard deviation of that index is actually lower than Nifty 100 index, right? So, we are able to have a lower volatility product with a propensity to deliver higher return, because you are majorly invested in mid and small cap over the medium to long term, provided you are able to hold on, and the debt portion allows you to bridge that gap. So I think that was the reason to cut the volatility and help people to have, because we have seen that many people avoid mid and small cap just because of volatility. So I think this solves that purpose, and I think that's where we thought of this.
Okay, and this has worked fabulously well for long-term wealth creators. If you look at the 7-year performance of this particular fund, the return is 20% CAGR, and Mr. Singh ranks second amongst 36 funds. A 5-year return is 17% CAGR. It's handsomely beaten the aggressive hybrid index. Again, ranked 4th out of 42. 3-year rank is 3rd. 1-year rank is 5th. 6-month rank is 1st, and 3-month rank is 2nd. Fabulous performance, Mr. Singh. And it is consistent whether you see short term 3 or 6, or whether you extend into the longer term 1, 3, 5, and 7. What is the philosophy when you look at stock picking? These are unusual stocks that are there in your portfolio.
The basic principle is that, since we have introduced debt, and we are still a mid and small cap oriented fund. So anybody who is ready to invest in mid and small cap typically can question that, why should I take 20% debt and I not invest in mid and small cap 100% fund. Now, that means that, we need to have a portfolio which is 80%, on average it has been 75%, is able to do the heavy lifting for the balance 20%. So it's a bit of a barbell strategy over there, and that means that you have to have a bottoms-up approach over there, because you can't do the heavy lifting only by beta. So basically then you have to generate alpha, and for that you have to have on the selection side, you need to have some bottoms-up stock picking, and that's where we have been concentrating, and that is what has helped us achieve the outperformance over the benchmark over almost 10 years now.
Okay, fair point. Let's look at the stock pickings that are there. Another point I'd like to ask Mr. Singh is, how do you ride the interest rate cycle vis-a-vis debt in this portfolio? Now that, cycle is mostly paused and you might see an interest rate hike, will the debt component change, or is it a constant 20%?
So, the debt typically while the debt allocation can be anything between 20 to 35%, and equity can be anything between 65 to 80%. But if I look at last 10-year average, roughly equity has been around 75% and debt has been around 20%. So we have, I think we will continue to manage that way. On the debt side, we are not looking to, take any aggressive either interest rate call or the credit call, so to say. Typically, we like to have a duration of around 2.5 years, because we are asking investors to invest in because it's a equity oriented hybrid fund. So typically, you should invest for 3-5 years at least. So if my debt, if I run a 2.5 year duration on a roll down basis, most likely I will have a decent accrual based earnings from there. And the idea of debt is not that much of alpha generation, but more of the risk balancing, right? So I think that's where we try to do it with more of duration roll down and very little of, so to say, interest rate trading over there. So in that scenario, the rise in interest rates is not going to impact the fund too much. And nor we are looking to change our duration strategy substantially. Maybe we may reduce it a bit. We count more like 1.5, 2, but that's about it in case the rate starts moving up. But nothing substantial. It will remain accrual-based duration roll strategy.
Okay. In the last 10 years of the fund's existence, you must have played through 3 rate cycles, up, down, up, and now down again, and possibly up now. What has been the performance of the debt portfolio when rates have gone up?
See, in the short-term mark-to-market point of view, obviously, running 2.5 year duration, if the rates move up, you will have mark-to-market losses. You need to. There will be there. But since we are looking at, on a 3-5 year rolling return basis, in a fixed income with that kind of duration, you will accrue, whatever yield you have entered into, provided you continue to hold to maturity. And since most of the portfolio is hold to maturity and, as I said, the duration roll down. So yes, on the intermediate basis, there can be some mark-to-market gain or loss both ways, depending on the rate cycle which you are. But yes, on 3-5 year basis, your contracted yield typically translate into your return. So on average, I think we have been able to have around 7 to 8% kind of return profile for our debt allocation.
Okay, fair point. We'll pause it here, Mr. Singh. What a pleasure listening to a very educative interview as far as mid-cap, small-cap and debt is concerned. This is an unusual fund, and it has done amazingly well for its long-term shareholders. Here's wishing you all the best, and we hope to chat again on many other parts of the market. Have a nice day, sir.
Thank you very much. Thank you for inviting.
That, ladies and gentlemen, was Mr. Alok Singh, CIO at Bank of India Asset Management Company. Thank you for watching.
The National Stock Exchange is in the headlines, and it's in the headlines not just because of the fact that the markets and stocks are moving, as we all know, moving in a certain direction on account of certain worries around our IT stocks. But today, what we are going to do is to get into the National Stock Exchange and its own IPO, initial public offering, which is expected to be India's largest so far at 30,000 crore rupees. And this has been a long story, a long saga. It's seen many twists and turns. And today, me and my colleagues, Shailendra Bhatnagar, are going to discuss the turnaround and the man behind this turnaround, Ashish Kumar Chauhan. Shail, welcome to this chat. The numbers and why this IPO is important for our markets and in the journey of India's markets to where they have reached and where they are expected to eventually go. You've also written a story. Please do go and read that story on businesstoday.in. But Shell, before we get into the facts and the market details, I want to start this chat with an observation which I don't know how many of our viewers know about. I can't easily recall of any other executive professional who has done as many listings in the financial space that Ashish Kumar Chauhan has done. Business promoters, family businesses may have done many more listings, but this is a pretty unique instance. Ashish Kumar Chauhan, who joined the National Stock Exchange 4 years ago in July 2022, will now, once NSE lists, have a fifth company that he has taken public. And before that, if you are wondering, those companies, the Bombay Stock Exchange, followed by CDSL, followed by Protean Technologies and NSDL. So 2 in BSC, 2 so far in NSC, and now the mothership also being listed. Shell, what does it kind of tell you? How unique or significant is this?
Siddharth, firstly, thank you for having me over. And this is uniquely Mr. Chauhan. I don't know whether I should start with this example or not, but just today our research team was looking at 5-year performance of multi-baggers, and Siddharth, which was the first one, it's the Bombay Stock Exchange. You will not be able to believe what I'm about to tell you. The Bombay Stock Exchange, ever since its listing, has given a return of 125 times in the last 5 years. It was, of course, listed in the middle of the previous decade, but all of his listings, whether it's
are you setting a
CDSL,
similar
whether it is,
expectation for NSE as well, Shell?
Well, not really, Siddharth, but definitely this is a multi-bagger stock to be listed, because you see, at 5 lakh crore rupees as your initial pop, to get it into 125 times would be, beating SpaceX at its own game. But remember, BSC started as a small cap, it is now a large cap, and I am sure Mr. Chauhan's magic will work. Similarly, CDSL is a multi-bagger many times over. I am making a very educated guess, at least 20 times is what people have made money from the IPO till today, and this is a corrected price on CDSL. NSDL and Protean are recent listings, but they've also done phenomenally well, Siddharth. So the man with the magic and golden touch is now helming NSE, and he joined at a time when NSE was actually going through his worst phase when it came to corporate governance and many other issues that were surrounding the event, surrounding the exchange because of regulatory and other problems, all of which we know in great detail. Siddharth.
The comeback story of the National Stock Exchange from a listing point of view, viewers, because I would really encourage you to even check this link and the description. In that we have a small gist of what Shell has written about the internals of NSE's finances, but do check out that whole story on our website as well. But it's a very complicated comeback story, because somewhere this iconic institution that changed the way Indians trade, that introduced technology way back before it was known, and today I would say the National Stock Exchange, with the kind of expenditure it has on technology, I don't know how many of you know, in FY26 alone this company spent over 1300 crore rupees only on the technology function, and many people feel and describe it more as a technology company than just a stock exchange. So for this kind of company that was set up and represented the approach towards liberalization, opening up the economy, changing the way India does business and approaches business way back, all of that had come under a cloud because of the mismanagement, the mistakes, and there's a bunch of allegations out there which we need not go, but that eventually also ended up among other things being called the collocation scam. And Shell, that's been a very difficult, tedious journey for Ashish Kumar Chauhan to navigate, and he's pretty much spent the last 4 years of his life, he's 59 today, navigating that. How big a deal do you think was the repair of the relationship with the regulator in terms of where we stand today post the DRHP filing?
Siddharth, it was a very, very critical component when Mr. Chauhan helmed NSE. His mandate was to clean up and get this IPO up and running so that you have a global name when it comes to, pension funds, sovereign funds, and many other deep pocketed FIIs wanting to invest in India's financialization process. And it could not have happened unless you had clarity on what was the contingent liability on the NSE as far as the co-location issue is concerned. Now, SEBI, in its wisdom, and of course NSE in its practical outlook, went forward to look for a settlement, and all that is now in place in the last 4 or 5 years. Siddharth, I cannot even begin to emphasize the importance of this listing for not only Indian capital markets but for the broader economy, as also once in a decade kind of a situation happens. You and I have covered the listing of Bharti Airtel in February 2001, Maruti in 2004, TCS in 2004 August, so many other companies in the latter part of the previous decade. So this is, I am telling you, the biggest event that you can think of in the calendar of a decade as far as India's economic journey is concerned. It is difficult to get bigger than this.
Absolutely. And I once again come back to this point, viewers, those of you who have more than just a cursory interest in the stock markets, know that moving away from that antiquated, non-transparent legacy system of the stock exchange to a modern, technology-driven operation where time is counted in nanoseconds and not even in full seconds, is a very, very important story of India's IT prowess also. And Ashish Chauhan's foundational years have also been spent purely in that, not just as a leader of the institution, now taking the whole institution forward, but also from a tech stack and building it as a technology company and as a technology startup. So that's very, very significant. Coming back to the point that you are making, Shell, 1995, fully computerized, screen-based electronic trading platforms. I wonder if you can recall how many countries in the world would have had such a computerized system for share trading way back then?
Siddharth, I'll answer this in two parts. Even till now, the New York Stock Exchange till about 5 years ago used to have an open outcry system in on Wall Street. And in 1995, Siddharth, I am from the generation who went into the Bombay Stock Exchange ring to trade. This white shirt used to get dotted with pens because people used to hit you to buy Tisco, Telco, Reliance, SBI, Old World, Mafatlal, Nosil, so on and so forth. It was a painful process, and 90% of transactions of the Bombay Stock Exchange emanated from the city of Bombay, now Mumbai. With the advent of the automated NEET system, the entire country joined. There is something
so
called
that's the National Stock Exchange is actually national.
Absolutely. And Siddharth, it is really, really big. NSE started the 7-day settlement. On the Bombay Stock Exchange, the settlements would vary between 15 days to 3 months. There was no guarantee whether you would get your share that you had purchased or the share that you had sold on money at a given time. The beauty of NSE was the setting up of the Settlement Guarantee Fund, which ensured that any nameless, faceless investor who had an account with the NSE would definitely get either the money that he had sold shares for or the shares which were purchased by him. It did not matter if the opposing broker would default. It was the NSE's responsibility, Siddharth, to deliver either the money or the share. It was a game changer, believe me, from the legacy and the antiquated systems that regional exchanges offered at that point of time.
Let's also listen into Ashish Kumar Chauhan from our previous multiple conversations. Here's a slice from that in the past, just to give you a sense. And of course, we are going to reconnect with him. There is an entire process of media interactions, public commentary that comes into play after a DRHP, and you have to follow a regulatory process. But just a slice from the past on some of these points that Shell and I have been discussing, and then we continue this conversation.
India is in a unique position. We have now 12.7 crore investors being serviced through NSE, which is literally more than 30% of all households in India. And 99.85% of all PIN codes, almost I think 28 PIN codes don't have NSE investor today. If you go to Ladakh, we have investors. If you go to Andaman, Nicobar, I think the guys moving with the spears also have a demat account and are having mobile app of our brokers. And similarly from Dwarka to Arunachal Pradesh, we have investors who are investing into India's future, right, in the productive capital. Also the technology. India is also the youngest nation. It's the demographics which makes a lot of difference. The China grew from 1982 to almost 2015 on the back of a population which was building up. Today, they are suddenly going down. And in 2024, they had less number of people than 23. In next 70 years, they will become half the size today. That is true with Korea. In next 40 years, they will become half the size of the population today. India is going to grow even further. And that's where I'm going to remain young for very long.
Shell, as we wind down this conversation, let's also look at the broader picture, because we've kind of made it clear that how important this listing is, and as you are pointing out, it's going to be amongst the in fact the 10th largest stock by market cap if it's valued at 5 lakh crore, even ahead of another iconic stock like Infosys, for example, and it will clearly be a milestone. 2 points to that question. The approach of retail investors. We are not offering stock advice, viewers, be very clear on that. That's not our job. But in the current environment that we are seeing in the markets, the element of risk and the element of opportunity, what is in it for retail investors as far as this issue is concerned?
Siddharth, if you don't have the National Stock Exchange in your long-term wealth generating portfolio, which will be a generational purchase, I think you are missing the boat. See, in India, only a small percentage of people are in the world of finance, barely 7, 8, 9%. This is compared with 33-34% in the US, if not 50%. So this pie is going to expand. Now there will be no new exchanges coming up in India. You have 4, which is BSE, NSE, MCX and IEX. So this is a monopoly item with at least a 90% market share in cash and about a 50-60% share in futures, an absurd 90% share in options. So you are going to miss a monopoly which is priced very reasonably, 40 PE versus the 70 PE of BSE. So if you don't have this in your portfolio, you are going to make a mistake. Please consult a financial advisor rather than listening to me, and hold this stock for 15, 20, 30, 40, 50 years. Siddharth, it's a once in a lifetime opportunity. Remember, LIC is the biggest shareholder of NSE. It is not selling a single share. It knows it has a golden goose.
Well, you speak about a golden goose, and really the saga that started in 2015. Remember, this is a company that was founded in 1992. Trading commenced in 1995, but in 2015 and there forward, the last 10-11 years have been a mixed bag. But in the 4 years that Ashish Chauhan has been at the helm of this company, he's now set it up for a next phase. But Shell, if the stock market regulator finally, after a change in guard there as well, and we must note here that Mr. Tuhinkant Pandey has reformed even many aspects of SEBI as well, and we could well say that letting this move ahead and settling the matter and the settlement offer that is there, all of those technicalities we are not getting into, even that is movement forward. So in some ways, SEBI has told the National Stock Exchange कि जियो और आगे बढ़ो, काम करो. But the other big DRHP that's also been filed, and this is now going to be a question for institutional as well as retail investors, Shell, is who do you pick? Is it the NSE or will it be Jio? How should the average Joe on the street approach both NSE and the Jio offer with all that is now behind it and as is promised?
So, Siddharth, I will answer this question in two parts. I am sure the investment bankers of both these mega IPOs will be common to some extent, and they will very, very sensibly and practically sequence these IPOs to come after a gap of maybe 10, 15, 20, 30 days.
So not going head to head.
You and I have covered telecom, and no, they will not go head to head. It doesn't happen that way in Dalal Street. And as you would know definitely that the back end IT infrastructure of India's largest company by market capitalization was also set up by Mr. Ashish Chauhan.
Absolutely. And viewers, that's also I don't think it's by design, Shell. It's clearly something that has happened, and it's happened because this is going to be a seminal week, because the Jio document being filed today, the NSE document already filed. So when we look back at stock market history and pivotal milestone moments, days and weeks, this week of June 2026 will certainly be very, very significant. So wrap it up for us. What more can we tell our viewers at this stage about the details of the Jio offering?
So Siddharth, abhi nothing is finalized except for the fact that there is a DRHP in the offing, and of course it will also be a follow-on. It will also be a FPO, because several of the investors who got in during the COVID crisis will want to sort of in cash on the booty. We can, because you and I have covered telecom, we can keep Bharti Airtel, India's second largest provider of mobile and telephony services, as the base for Jio. Jio will be priced in sync with Bharti, if not higher, because Jio is a bigger player. So the kind of wealth creation that we have seen in Bharti over the last 25 years, Siddharth, Bharti was listed in February 2002. It came at 45 rupees, got listed at 42, fell all the way to 19. You and I have covered that journey as well. From 19 to 1800, this is a 1:1 bonus, so the price is actually 3600. So from the journey of 19 to 3600 is what Bharti has traversed in the last 25 years, when all sorts of uncertainty was there in telecom. From now on, you have a duopoly, which is Reliance Jio and Bharti Airtel. Therefore, these are must-haves in your portfolio. In a country of 140 crore people who are consuming data like nobody's business, it's a no-brainer, Siddharth. The maximum money in the market is made when you have uncertain times. We are completely in that uncertain phase, and two opportunities have come or will be coming, NSE and Jio. People who will miss them will remember for a lifetime what a wonderful party they missed.
Absolutely. And for professional, amateur investors, traders, I always end any market related conversation with the appeal and request. Yes. Please only follow proper registered advisors. Don't listen to tipbazi. Go to established credible platforms, people who know their business, because it's your money. Don't trade it, don't spend it, and don't fall for a call center scam or for some fake arrest or any of those scams where you get to read and hear every other day that crores have been lost due to such mistakes. Markets are serious business. It's about investment and following the details. And therefore, in a week where a very, very significant development as far as India's capital markets and public issues are concerned has taken place, it's all the more important to be cautious, reasonable, and certain about your approach towards the market. Shell, thank you very much. And once again, a wrap on this conversation. We'll see you again. Until then, goodbye.
Welcome, you're watching BTTV. This is Astha Chopra, and today we are at S&P Global Energy event. For more information, we have a very special guest with us, Mr. Premashish Das, who is the Executive Director of S&P Global and heads the research and analysis of oil markets. Thank you so much, Mr. Das, for speaking to us. We saw your keynote and it was very amazing. Let's start with a very basic question about the oil markets as well. So are the oil markets today more resilient to the geopolitical tensions which are happening, or is it like stable as always?
I think, if I think back maybe 20 years back, I think from that point, I think market is more resilient for basically two reasons. One part is there are more supply was already there. If you recall, like before this war happened, we were talking about a market like there's a significant surplus of oil. Essentially, that was the kind of situation we were because of more supply was there. And also another factor is that demand growth has been slowing down, particularly for the key refined products like gasoline, diesel. So with all that, actually, so if I look into that market as such, I think market has more shock absorbing capability now compared to maybe 20 years down the road. And one of the key difference, I would say, is the US situation. Yeah. US used to be an importer, now they're a huge exporter of energy. So, and in the meantime, I think China, India, their demand has increased, their requirement have increased, but I think still I think overall, I think the balance looks to be a lot easier compared to that time. So I think, yes, if I look into pure fundamentals, particularly coming to this part of this session, this part of this disruption, I think we are in a better position, and that is the reason I think some of the shocks which could have been much worse, we did not experience that.
Absolutely. So one thing I want to understand, there was a lot of tension if you talk about only India. There was fear of being locked down. What do you think that India will face a double inflation if the oil prices spark more in coming days?
Yeah, first thing is so far the developments are kind of favorable in that sense. So if this MOU which has been signed, so hopefully if next 60 days that discussion, if that is successful, I think chances of high oil price will be a lot less than otherwise. So from that angle, I guess India may not see that high price, but yes, always there is a possibility, because here we are talking of two countries who have been in kind of fight, or at least mentally fighting each other for almost 50 years.
Yeah, it's unpredictable.
So we don't know like how these discussions will take shape, but yeah, I mean that is what. I mean, if that thing really breaks down, actually, I mean, there could be a possibility that price can go up very high, and more so because I think first half of the last 3.5 months, actually, the world has consumed a lot of the buffers already. Means if there is a breakdown happens right now, I think the amount of buffer left is much less. So possibility of a spike on oil price could be a lot more.
That's true. That's true. That was my second question. According to the data, of course. So, what is the bigger risk to oil markets right now? Is it the geopolitical tensions, or like slowing the global economy growth? What is it?
I think the bigger challenge in my mind is still geopolitics. I think the clarity has to be there, like what is happening. I mean, I think inflation definitely is a consideration. I was reading like yesterday, I think the Fed discussion, they are now talking about increase of interest rate versus reduction. We are talking about reduction at the start of the year. Now they are talking of if the interest rate is increasing, essentially that means that they are feeling the inflationary pressure there too. So that is definitely not a good sign. Like when the interest rates are high, that means challenges for the economies will be a lot more. So I think, but again, both of the things are kind of related, like because of the economic, the geopolitical developments, I think economic activity could be impacted, like what has happened in last 3 months. Like it is a pure geopolitical driven kind of drawdown in the so-called economic activities demand. So yeah, I mean they are related, but geopolitics is always top of the thing, because that can drive a lot of stuff, I mean, which is outside a lot of people's control.
And what do you think about the OPEC's influence on oil?
I think, I mean, if this right now, obviously, OPEC has very limited capability to do anything because of the Strait of Hormuz is closed, right? Yeah. So once the Strait of Hormuz is open, I think then OPEC's action will be important. I think OPEC was kind of showing the intent to increase their production. So that is, if they continue that, of course, that is going to help on the short term. But on a longer term, actually, that could be a challenge for OPEC as well, because now UAE is outside the OPEC umbrella. So if UAE is increasing production and all others increasing production, so at some point of time, OPEC has to see like how the price impact versus how they want to kind of balance the market. So, but again, having said that, I mean, if I look into our balances, I don't see that that is coming anytime like next 6 to 12 months. I think the market will be still tight, I mean, we think. Yeah. And so with that, I think OPEC definitely will try to increase production, which will be helpful for the market.
So what if the barrel turns again at $100 per barrel? So what will be the consequences? Like, should we be ready for that, or it's like, are we seeing an ease on that?
No, I think I mean, as a country, I think India is a huge importer of crude oil, right? So from that angle, like if the oil price is high, that means there's a huge drawdown on our essentially in terms of the foreign reserves and the economy itself. Actually, inflation could be much higher. So high oil price is always a challenge, and although, as I'm saying, like there's a bit of positivity right now because of all these deals and signing, but I think we should be prepared always. There could be a challenge that the price could be at higher level, and so that means essentially obviously government cannot, I think in my mind, will continuously kind of shield the consumers So at some extent, to some extent, government has to kind of pass that some of the cost to the consumers, and that could be a challenge for the consumers, as you can think of, like it is essentially, it could be inflationary, it could be challenging, but if there is a high oil price, I don't think anything else can be done, because we are not a huge producers. India is not a huge producer of oil. So, and we are dependent significantly, 90% of our crude is imported. So we have limited control. Only thing, but from this disruption, I think one thing we learned, I guess, is essentially how to, perhaps what are the things we need to do differently to at least, there are two shocks typically. Generally one is price shock, another is volume shock actually. So I think the volume part we can control, price part we cannot control possibly. But the volumes part, I think we can plan properly, essentially, particularly the inventories, how we want to manage inventory, how we want to diversify our feedstock or crude sources, how we want to kind of set up our operating companies like trading, how we want to be involved in the trading activities, how we kind of look into our refineries and kind of do some, increase their flexibility so that they can process different type of crudes. All those things in our hand actually in a way. So I think we should do what we can do and focus on that. But price part is pretty much international. You never know what can happen, which is definitely not India's control.
Absolutely, we have to work on the solutions and just pray that this unpredictability ends soon. That's the only thing we can do right now. But yeah, you gave us a very clear picture of what's going to happen and what will be the consequences vice versa. Thank you so much, Mr. Das, for speaking to us. It was a pleasure to have you on our channel. Thank you so much. Thank you.
Thank you. Thank you.
Hello and a warm welcome on Business Today television. The geopolitical air is getting clearer and clearer with the US and Iran digitally signing a ceasefire agreement to finally draw a formal close on the West Asian conflict. That has cleared up three major hurdles for Indian equities. One, oil prices have slumped below a 200-day moving average to a 3-month low. They are likely to head down further. Gold and silver have also corrected now that the fear is out of the market, and therefore risk on trade for global equities is now back, especially for the Indian market that had a terrible 3 months. We are now at the cusp of fourth quarter earnings, and we have seen signs of green shoots in various parts of Dalal Street. How does the next 6 months or the remaining part of the calendar 2026 look? To discuss this and a lot more, we are joined by Mr. Devan Choksi, the MD at DR Private Wealth. Namaste Devan Bhai, always such a pleasure to host you. While today brings good news in terms of ceasefire, there is pain in the IT market. No 2 days are similar on Dalal Street. How are you reading sentiment?
Yeah, good morning, Shai. Well, I think it's a tossing of balls, I think, which are happening right now. If the Iran-US war ball has, I think, come down, I think now the monsoon-related, I think, worry has started. Now, the worry has also started on, I think, the other major dominant sectors like IT, as far as I think their outlook is concerned. So according to me, I think we are in a challenging times for sure. I think we cannot be saying that we are in a smoother times. Definitely, I think challenging time continues. But in my viewpoint, I think out of every challenges, you find some new thing, meaningful thing emerging, and that emerges very, very strongly. So I do like to believe that many of the Indian IT companies who are systematically adapting to the new era of computing, to the AI, into the data center, etc. In my viewpoint, I think this is going to be a game changer movement which has already started. And many of the IT companies which are actually adopting AI for building the business case, we are building the AI for coding, building the AI for generating the higher amount of what you call production environment through the use of agentic AI, etc. So in my viewpoint, I think that things are not looking bad, things are looking good. It's a transitionary process. Time and effort based revenue model is being shifted to outcome based revenue model for IT companies. And the leaders like TCS have already indicated that their order intake per quarter has already started moving from AI segment, and which was last quarter $2.5 billion. This quarter it is going to surpass the previous quarter's order intake on the IT side. So Indian IT companies relatively remain largely solution providers, enablers. So in my viewpoint, I think they should be having relatively better time, particularly the mid-tier IT companies.
Okay, Devan bhai. So let's drill it down. What would you prefer in mid-cap IT, and what are you avoiding in large-cap IT?
Well, I think large cap ITs, they remain single digit growth provider. So they remain anywhere between 5 to 10% kind of a growth provider position. Whereas mid cap IT companies, particularly the companies which are with the engineering and R&D spectrum along with, they are likely to grow between 15 to 20% or even about 20%. And they would include some of the compelling propositions in the area of automobiles, compelling propositions in the area of aviation, even in entertainment, and also industry automations. So in my viewpoint, I think some of the mid-tier IT companies like of Tata Technology, Tata Elxsi, LTM, LTTS, they are some of them which are looking relatively much better comparatively in form of growth visibility that they are offering right now.
Okay, fair point. Devan bhai, how are you seeing the weakness in crude oil prices? What opportunity, apart from a strong macro, do lower crude oil prices present on Dalal Street, given that they were the primary reason why we corrected so sharply?
So we are in a sweet spot as I see it today. Starting next month, we are basically starting our UK-based FTA agreement into execution, wherein majority of the items which we export will be duty-free in the UK territory, and India will continue to attract few items, I think, from their side, I think at a significantly lower rate of duty. So actually speaking, if you ask me, I think on one side, if the crude oil prices are down, and other side, I think the export prospects are becoming brighter, with 33 FTAs getting into action mode in FY 26-27 and 27-28 thereafter. In my viewpoint, I think the fundamentally one point I think which will remain very strong proposition would be the current account deficit situation. Current account deficit situation, as we talk today, in next 3 years' time, is going to become very comfortable for the country as a whole, and that should have a positive reflection onto the currency. And because of that, I think the inflationary pressure would remain low, and because of that, I think interest cost will remain low. So overall, the entire economy, I think as a country, we will see, I think, a low cost territory continuing with the lower crude oil prices to lower currency impact and the lower interest cost. So we remain distinctly positive across different companies where the opportunity is becoming bigger.
Okay, fair point. Then by another positivity that has emerged, at least for long-term equity holders, is the sheer, way silver and gold are correcting. Of course, they had run up very sharply, but it presents an opportunity for beaten down equities to probably attract more money. How do you see this conundrum?
Yeah, true. I think if the money shifted into the bullion assets, I think it's coming back into the growth assets like equity. Certainly, I think this is going to be fundamentally very positively seen across the globe. The larger part of the money from Indian equity also got shifted to the other markets of the world because of their dominance in the area of the new age sectors, as we call it, as be it data center, be it AI-based computing, or be it, I think, renewable segments and the ecosystem around that. So that's where probably I think the larger part of the money got shifted, which in my viewpoint I think is now becoming little bit more clearer for India, because India is now emerging stronger with some of the new age industries which are now coming up. We already started with the semiconductors. We have started with the data centers, and we should be seen soon, I think, having larger amount of returns across the AI part of the applications that we are talking about. So all in all put together, we hold a case of inviting significantly large money from the global players, and that's where we see the opportunity out here for the country as a whole. Maybe some of the structured products, I think, which could possibly take the role in this kind of a situation, that would invite larger part of the money.
Okay, Devan bhai, one major event that has happened is the National Stock Exchange filing its DRHP yesterday. As also today is the Reliance AGM. Let's take the AGM first. What are your 2 or 3 major, expectations from Mr. Ambani today as far as the future trajectory of Reliance Industries is concerned? It has been an underperformer.
Yeah, let me elaborate, I think, one by one. The Geo platform first, I think, because that is where all eyes are on, and that's where probably I think everybody is wanting to hear more about the developments. In my viewpoint, first and foremost, it's an 8 to 10 lakh crore worth of market value, which on listing will get unlocked. So that remains, I think, a very positive outcome that we are talking about, that the company is unlocking a value of around 10 lakh crore, which is not fully getting reflected into the stock price of Reliance Industries. So that is the first point. Second point, in Geo platform, from a 76,000 crore EBITDA making company, a roadmap next 5 years, I think, to become 1,60,000, 1,80,000 crore EBITDA making company is something which is one would expect it to come out from the company, largely because of the fact that they are rolling out different programs. Those programs which are fundamentally very strong. 5G monetization by way of usage of, I think, higher amount of application which will generate more amount of data is one such program. AI-based computing provided to SME, MSME, and also to individuals would be another such program. So, and all the fixed wireless bandwidth allocation, I think, to the homes as well as to the enterprises would be the third program, in which I think larger amount of revenue is expected from 2.7 crore customers to 10 crore customers. And the fourth program would be the GEO-LEO satellite-based communication, which is initially going to be or likely to be offered to the enterprise segment and then to the retail segment also, in as far as I think the offering is concerned. So these are some of the 4 large programs which are likely to probably unfold the possibility of how company is going to be generating the next level of revenue and the growth from what they are having currently. So it's a huge transformation that we can call it as, of 1,60,000 to 1,80,000 crore in next 5 years from 76,000 crore. So that's the first part of announcement that is expected. The second part of the announcement that one would like to understand from the company would be in the area of Reliance Renewables and Reliance Intelligence. Reliance Renewables is executing the program pertaining to creating a complete ecosystem for the renewable energy segment, which includes the solar power, which includes the green hydrogen power, which includes the battery storage, which includes the entire ecosystem pertaining to production of power, which is your solar panel manufacturing onwards. So that is one such area which the company is fundamentally operating in the renewables. And on the other side, the company is operating in the area of integrating renewables into further upstreams in form of Reliance Intelligence, which is setting up the data center business of about 1 gigawatt, which will be powered by the renewables. And at the same time, I think data center will be hyperscaler. So obviously, one part of the hyperscaler will be provided to some of the users like Google or Meta with whom they have tied up with. And the other part of the hyperscaler would be captively used by the company as far as I think their own group companies operations are concerned. Third part of the hyperscaler data center could be in the area of providing it, I think, across, I think, different applications, be it agri applications, entertainment applications, or gaming applications, etc., where they are expected to come up with. So in my and fourth part, of course, I think is offered to the government-owned infrastructure like ONDC among others. So Reliance Intelligence is basically likely to spell out at length about the entire Reliance Intelligence game plan, which is talking about investing 10 lakh crore plus in 7 years time into this entire territory. So I think this will become a very huge after Reliance in renewables. Reliance Intelligence would be the next level of growth provider as I see it.
Okay, perfect. Devin bhai, another event of epic proportions that has happened is the much awaited DRHP of NSE being filed. How do you see NSE as a stock over the next, let's hope it's listed by Diwali. How do you see it as a long-term, medium-term bet for sensible investors?
I think it's one of the most important, I think, listing that one will be experiencing in Indian markets, largely because of the fact that it's a size. It's a 5 lakh crore market capitalization size, first and foremost. Like Jio, I think, which is a 10 lakh crore market cap size, this is a 5 lakh crore market cap size. So why I give importance to this market cap? Because if you want to invite larger part of the money into the country from those funds which are having significantly large amount of money to invest, you need to throw up the opportunities which are large enough for those investors to come into the country. That's the first point. The second point for NSE is, though this particular IPO is going to be in form of FPO, OFS, it is more important to understand that there is 30,000 crore worth of fundraise that they want to provide to their existing investors, is largely going to invite some of the larger investors into the company, be it sovereign fund, be it insurance fund, be it pension fund. And why would they look at exchange business? Because exchange business is not a common business. A, there is an entry barrier. B, most importantly, exchange business is an annuity business because every day it generates cash. And some of the long-term investors who take horizon of 25 to 50 years, they like to buy those businesses which are cash generating business. And no wonder they are having 65% plus kind of EBITDA margin on that. The third most important part, I think, for the exchange business argument, $5 trillion market cap of Indian market is expected to become $12 to $15 trillion market cap fast forward next 10 years. So by 35, 36, if it is becoming $12 to $15 trillion market cap economy, then in such situation, exchange business is likely to grow big and grow significantly big. Because in 10 years time, if we are talking about 3x growth in market cap, the volume growth is going to be significantly larger. And last but not the least, I think the different products, I think, or the segments which are traded on the exchange platform. Currently, the larger part of the trading is equity, and more than equity, it is equity derivatives. Now the exchange is moving into one more level up, I think, which is commodities. So they already started building the commodity piece, and I think the larger amount of business growth could come from some of the specialized commodities. The third part which government of India is definitely insisting is the area of debt trading coming onto the equity. Debt trading would be, I think, at least few many times more than the equity segment per se. And that is where probably I think we remain distinctly bullish about NSE's prospect. And last but not the least, the currency platform, I think, also getting a larger amount of business for trading, which is currently OTC. So in my viewpoint, systematically in next 10 years, apart from equity market capitalization growing, the growth coming in due to different other segments coming up onto the exchange platform. So that's where the reason for remaining bullish about the business.
Okay. Devin bhai, I'm sure it's not a large possibility that both Reliance Jio and NSE will be raising funds together. You don't think that is happening. I'm sure investment bankers will ensure this does not happen.
Well, I think that is a fear that we always have, that I think when the large IPO comes, they would disrupt the existing rhythm in the market. But most importantly, we are 30,000 crore plus SIP market today, already on a monthly basis. So yearly we are collecting about 3.5 lakh to 3.75 lakh crore as far as I think the new fresh money is concerned from the existing investors in the SIP business of mutual fund. Similarly, the growth is also happening in the insurance fund collection, especially after the GST tax moderation. I guess I think the insurance also looks I think pretty handsome from the perspective of collecting larger money for investing. And so is the situation with provident fund investing higher stake into the equity. So in my viewpoint, I think the larger the company, larger the market cap, more would be the opportunity for some of these large funds to, I think, invest money into, and some of the global foreign investors also to invest money into. So I don't think that I think it is going to polarize the market in favor of only few stocks, and I think rest of the stocks will be neglected. I think the rest of the stocks also would find its own flavor in the marketplace, though it may not be, I think, universal, but selective stocks will continue to dominate the market in the small and mid caps as well, apart from large caps.
Okay, Devan bhai, we'll call it time here. And I'm sure as one of the founding members of the Bombay Stock Exchange, your immediate family looks forward to the listing of the National Stock Exchange as well. It is going to be an event of immense proportions for those whose livelihoods have come from the world of broking, from investment, and of course from wealth creation. Devan bhai, final comment.
Yeah, I think very happy to find the NSE listing on BSE, and that's where I think you are going to see the true spirit of both exchanges coexisting at one level, which is fundamentally very, very important. In my viewpoint, BSE is doing incredibly good job in form of also creating a large investment portal in form of the BSE Star, which is mutual fund portal, apart from its own existence in the cash market with the highest number of listing, and also I think with the derivative market share, which they lost but they covered it up. So in my viewpoint, I think BSE deserves to remain, I think, a very competitive source as far as I think the NSE is concerned, and NSE is I think going to be the larger player, institutionalized player, which is going to
Hello and a warm welcome on Business Today Television, ladies and gentlemen. The markets are in fine shape. We are starting the week on a strong footing. 24,100, 24,000 is with the bulls. Oil is below 200-day moving average, and all seems to be working in favor of mid caps and small caps at least. However, there are pain points after a fairly strong rally in the markets. What should you be looking forward to? And how should your asset tilt be towards equities, towards debt, towards gold? To discuss this and a lot more, we are now joined by Mr. Amit Goyal, co-founder and chief global strategist at Pace 360. Good afternoon to you, Amit ji, and a very warm welcome. How are you characterizing the state of play on Dalal Street today?
Shell, a very good afternoon, and thanks for having me on. My understanding is that equity markets have come some distance in the last week to 10 days. And of course, the fact that at least we have got some semblance of peace and stability from Iran and Middle East has played a good factor. And of course, crude oil prices have come down. My understanding is that there is still room for the markets to go up, and uh, I definitely feel that large caps will do very well from this point, because while small cap index, some of these small cap indices are at all time highs, and some of the mid cap indices are very close to all time highs. But if you look at the large cap indices, they are still quite a distance short from their highs that were made in January of this year. And my understanding is that even large cap indices could make new all time highs. Of course, it will take some time. It will probably take a couple of months for that to happen. But my base case at this point is that Nifty could go all the way up to 27,000, and Bank Nifty could go all the way up to 63, 64,000. And in the meanwhile, small cap and mid caps will continue to do well. But relatively speaking, large caps should do better from this point onwards.
Okay, fair point. So how are you positioning yourself at this point of time? You are primarily a risk taker via the ETF route. What is it in your portfolio so far on Indian equities, and what is the percentage of Indian equities to total portfolio?
Perfect. That is absolutely correct, Shell, that we are at the moment about 55 to 60% in equities, and these are all Indian equities at this point. And you are right about ETFs. Most of this money is invested into ETFs, particularly Bank Nifty ETF is an instrument that we are very heavyweight on at this point, because the price earning ratios are very compelling.
Okay, that's
And
interesting.
I think the story is still pretty good as far as the banking is concerned. And the latest scheme from RBI on the FCNR, that also helps the banks. The rupee having appreciated a little, bond yields having come down a little. All this is a very favorable backdrop for the banks. So we are at the moment about 55 to 60% in equities, and we might even take it up further over the next few days, because we do believe that a goodish 10 to 12% rally is still pretty much on the table. And even though it will take a couple of months for that to happen, so we might take the percentage from 55 to 60% at this point to about maybe 70 odd percent. And then hopefully we want to book our profits sometime in August or sometime before Diwali, where we feel that Indian markets could hit all-time highs even on the large cap indices.
That's a very welcome change in your outlook, Amit. What drove this change of heart?
So basically, we turned bullish in March. So we were quite pessimistic on the markets till about February, not because we knew that tensions are going to come up in the Middle East, but we just found the valuations not very compelling in January and early Feb. So in March, when markets went down a lot, we started buying, and we kept buying between March, April, May, and even June. We have not bought much in the last few days ever since the markets took off on the upside. So the change of heart basically came from a couple of factors. One, the valuations got a lot more compelling in March. And second, we were absolutely of the view that at some point, this war is going to de-escalate and crude oil prices will come down. So it was more a macro call coming from the fact that INR had depreciated a lot, crude oil had gone up a lot, Indian markets had come down a lot, Indian markets had underperformed a lot. And our basic macro understanding is that the world is still pretty much in a good place as of now. And Indian markets, having underperformed so much in the last 2 years, probably are getting ready for some kind of outperformance. and I'm hoping that outperformance should unfold over the next couple of months. So these were the factors because of which we went up from practically 5% invested in equities to about 55 to 60% at this point. And if we get a correction in the next week to 2 weeks, or maybe 3 weeks, we might increase this stake a little more. But if we do not get a correction, we'll probably just hold on to our existing positions and wait for a far better time to sell and book profits.
Okay. What has this position come up against? Have you reduced your cash, or have you exited from other points of assets? What created this overweight in Indian equities?
Excellent point, Shell. So basically, we had practically nothing in cash in Feb and March. So what we did was that the amount which was invested in corporate bonds, where we were getting a yield of about 10 to 11%, we took money off the table from those corporate bonds because we felt that Indian markets from that point onwards could deliver a lot more than just 10 to 11% annualized return. And so far, that has played out well because on the equity side, we are doing well, and we are up almost 8 to 10% from where we started investing in March. But we still believe that this is not an exit point, and we still believe that there is a better scenario that could play out, and particularly it could happen once the bulk of the quarterly earnings are behind us, because obviously this quarterly earnings are going to be a little under the weather because of the influence of high crude oil prices, high logistical costs, and margin pressures. But once the quarterly earnings season is predominantly over, we believe that the outlook is going to look a lot better, because going forward, with costs having come down, and margins getting resurrected, we believe that there could be a rally sometime in the next 2 to 3 months, which could take us to all-time highs.
Okay, fair point. That's an interesting point that you make. So apart from banking, is there anything else that attracts you on the Indian geography?
We do have some small caps and mid caps, which are basically opportunistic buys that we did because we thought that these particular stocks had very little downside and probably a reasonably good upside in them. And for example, I can tell you about IDFC Bank. I can tell you about Saman Capital, and a few of those kind of stocks we bought. IDFC came down because of the banking, because of that scam which they experienced. So we thought that it was a good entry point. And Saman Capital was available at a massive discount to its book value, and we thought that this discount is going to narrow over a period of time. So we just bought some stocks opportunistically, but predominantly it is Bank Nifty, which really appeals to us at this point. We got a great opportunity to buy Bank Nifty because of the fact that yields were going up and inflation was high, and everybody thought that RBI is going to take up the interest rates. We did not believe that RBI would take up the interest rates by 50 basis points over the next 6 to 8 months. And then, of course, the FCNR came along, and that has obviously added to the sentiment. So we are most bullish on Bank Nifty at this point. But of course, opportunistically, we do have some small caps and mid caps where we think that the downsides are still not much, and there could be a goodish 15 to 20% upside from the current levels.
Okay. You are primarily a value buyer or a distress buyer when it comes to equity assets, in the sense that you buy pain. Has IT reached your zone of pain, or is it still a value trap?
Basically, I agree with you that IT at this point is looking somewhat attractive. It's just that the upsides are probably not that promising for us. So I do believe that the downsides on IT, particularly after the fall that happened after Accenture guidance last week, I think that was pretty brutal. And IT index, as your chart is showing, it is just massively down over the last 1 year. But we do have exposure to IT through our investment in Nifty ETFs. But beyond that, at this point, we are not very enthusiastic buyers, even though I completely submit to your point that the downsides are probably not that big because the worst is pretty much discounted. And but it's just that we are quite happy with whatever little exposure that we have to IT at this point through our Nifty holdings.
A view perhaps on gold and silver?
Yeah. So, Shell, gold and silver have obviously underperformed a lot over the last few weeks. And even I did not think, while we did think that when it went up to $90, silver went up to $90 in middle of May, we did think that the upsides are very, very limited from that point. But I did not think that the price would come down to $62, $63 so easily and so fast. I am pretty bullish on silver at this point because the fear readings that we track on silver, which is a Bloomberg proprietary measure, they have hit all-time highs. So in the sense that the fear is the most intense in silver ever since they started tracking that sentiment indicator about 12 years back. So it's the worst point in last 12 years. And I do believe that silver could go up back to about $80 over the next month or couple of months. But I don't think that silver is going to go anywhere close to its all-time high that was made in January of this year. And same I can say for gold. So they are opportunistic buys at this point, but nothing more than that. Longer term, we have concerns, and longer term, we still believe that gold and silver are going to make lower lows. And we believe that by 2027 or 28, silver could come down to $30 or lower, and gold could come down to 2,800 to $3,000. But at this point, I think they have just about started a rally. This rally has more to offer, but not that much.
Why would gold and silver correct so substantially?
That's a very, very good question, Shell. And this is somewhere where we are at a divergence compared to pretty much the consensus that appears from experts and economists all over the world. And for this, and the reason is very simple. All of them are looking at a inflationary world economy, while we are looking at a deflationary spiral. Starting from, let's say, it could take a month or two or maybe 3 months for that to take a hold. But eventually, we believe that we are headed for a deflationary spiral because of the huge amount of debt and because of the disinflationary and deflationary impact of AI. So when that deflationary spiral comes, then gold and silver will also go down. And we believe that that is going to unfold over the next 1 to 2 years. And but apart from that deflationary spiral, I think the sheer enthusiasm, and I might call it madness, that we experienced in January of this year for precious metals, that kind of madness happens just once in a few decades. And whenever that has happened, any point of time in last 500 years, then post that, the next 1 to 2 years have been pretty brutal for gold and silver, and I don't think that it would be an exception this time. So 2027 to 2028, you can expect some pretty brutal bottoms in gold and silver. And at that point, maybe gold will become a great long-term asset to buy once again. But at the moment, you can have opportunistic calls where you can make about 10, 12% in a month or two, but nothing beyond that. I would not recommend anybody buying gold and silver from a longer term point of view at this time, but you could buy them from a, let's say, a near term standpoint.
So this deflationary spiral, while the world is globally linked and therefore India would be impacted as well, how are you structuring your long-term portfolios to be that, to benefit from that possible deflation?
That's a great question again. So basically, whenever in the last 200 years we've had a deflationary spiral, and there have been quite a few notable points even in the last 25 years. So there was a deflationary spiral in 2001-2 when tech bubble burst. There was a deflationary spiral in 2008-9 when GFC struck. There was a deflationary spiral in 2015-16 when China devalued its currency. And there was a short deflationary spiral in 2020 because of COVID. So at all those points, the best performing asset class in the world is long-term sovereign bonds. So we are already holding substantial amounts of US government's 20 and 30-year bonds in our global portfolios. In our Indian portfolios, we've still not started buying Indian 30-year and 40-year government bonds. But I can assure you, Shell, that in the next 2 to 3 months, there would come a point where that would become a very big asset class for us, and we would buy them substantially in our portfolios and in all our products. And my understanding is that the 30-year Indian bond yield, which is at the moment about 7.50%, over the next 2 years, when this deflationary spiral unfolds, this could come down to even 6%. And US 30-year yield, which at the moment is about 4.9%, could come all the way to 2.5 to 2.75% over the next 2 years. So those asset classes are just going to deliver us humongous returns, maybe 15 to 20% CAGR. But of course, you need to buy them at the right point. And then when the deflationary spiral happens, which is a very, very high base case scenario, high probability base case scenario for us, then you need to sell them also at the right point. So we are going to ride this journey, and hopefully we would be able to sort of share this with your audience as and when we sort of navigate this journey.
Fair point. So it's difficult for retail investors to buy Indian sovereign bonds because of the ticket size. So what would you suggest they buy from the mutual fund stable?
Absolutely brilliant question, Shell. So there are plenty of options. For example, there is a fund from Axis, which is a rolled on maturity fund where it's called Axis Long Bond, if I'm not mistaken. And there are a few funds from HDFC. Then there is one from Bandhan. So there are enough options that we have on funds where the current maturity is pretty long. It is like 30 years or something. So and you could just hold them. And some of them are not actively managed funds. So which means that your expense ratios are very, very modest. And you could just hold them, and you could enjoy those returns. We will share the exact names of those funds maybe in our next conversation, because at the moment I do not have the exact names, but I can safely tell you that there are enough options within the mutual fund in the ETF industry.
Okay, fair point. We'll pause it here. Amit, and I have always believed that gentlemen in the market have always preferred bonds. Let us see how this really worrisome deflationary spiral comes into being. Be that as it may, it is our job to inform investors and it is their job to safeguard their financial health. Thank you for being with us. As always, it's such a pleasure.
Thank you so much for the opportunity, Shail. Thank you so much.
That, ladies and gentlemen, was Mr. Amit Goyal, founder and chief strategist at Pace 360. It's a global PMS working out of Delhi. Thank you for watching. Stay glued. We are back on news just after this break.
In the 12 years as the Indian Prime Minister, Narendra Modi had to deal with 4 US presidencies under 3 presidents. 2 of them were Democrats, Barack Obama and Joe Biden, and twice with Republicans, while Donald Trump presided over the Oval Office. Narendra Modi was just sworn in as the Prime Minister of India in 2014 May. When Barack Obama, as the President of the United States of America, had roughly a year and a half left in his second term. In that brief period, they seemed to be working well. There were 2 landmark Modi-Obama summits held in that period. The first one was at the White House on 30th September 2014. And the second one happened when the US President came to attend the Indian Republic Day celebration as the chief guest in January 2015 in New Delhi. Together, they achieved a breakthrough on the long-stalled civil nuclear deal through an insurance risk pool and renewed a 10-year defense framework.
Our 2 nations are prepared to step forward firmly to accept the responsibility of this global partnership for our 2 countries and for shaping the character of this century. The promise and potential of this relationship has never been in doubt. This is a natural global partnership.
Mirroring this warmth, President Obama concluded the joint briefing by declaring,
India and the United States are not just natural partners. I believe America can be India's best partner.
But a bilateral investment treaty and concrete climate emission caps remained unresolved between the 2 partners. Then came the first term of Republican President Donald Trump. This Trump-Modi era redefined the US-India relations through a mix of historic defense alignments and intense trade friction. The standard-bearer achievements, including the signing of foundational military pacts like Kamkasa and Becca, alongside a major $3 billion defense deal for Apache and MH-60R helicopters. Though the partnership was heavily anchored by personal camaraderie, famously captured during 2 massive joint rallies, Howdy Modi in Houston in September 2019,
My friend, a friend of India, a great American president, Mr. Donald Trump.
followed by Namaste Trump rally in Ahmedabad next year.
The First Lady and I have just traveled 8,000 miles around the globe to deliver a message to every citizen across this nation. America loves India. America respects India. And America will always be faithful and loyal friends to the Indian people.
Mr. President, this morning in Houston, you can hear the heartbeat of this great partnership in this celebration of the world's two largest democracies.
But when it came to a comprehensive trade package, the two leaders could not come to an agreement. It remained unresolved after the US revoked India's GSP preferential trade status and sparred over tariffs. Post the first Modi-Trump era, US President Joe Biden and Indian Prime Minister Narendra Modi seemed to be working on a better business footing. In the 9 meetings spread across 4 years, together they finalized landmark agreements, solidifying a new semiconductor fabrication plant for national security and expanding defense ties under the ICT framework.
Toast to our partnership, to our people, to the possibilities that lie ahead, to two great friends, two great nations, and two great powers. Cheers.
आप बोलने में सॉफ्ट है, पर एक्शन में पूरी तरह स्ट्रांग है.
Yet critical differences between the nations remained unresolved. The leaders struggled to bridge divisions over India's continued purchase of Russian oil and navigated friction surrounding human rights and democratic values. From day one, the return of Donald Trump in the Oval Office for the second term has been a tumultuous journey in the relationship between the two countries. The era of MAGA plus MEGA has redefined geopolitics. Marking Donald Trump's second term and Narendra Modi's third, bilateral ties between the two have gone through periodic blow-hot and cold situations as trade, tariff and immigration remain main friction points between the two countries. The two leaders launched Trust, or transforming relationship utilizing strategic technology to secure critical mineral supply chains, and doubled bilateral trade targets to $500 billion by 2030. But tariff remained the bone of contention between the two throughout this period so far.
Who was a tougher negotiator today and who has a better negotiating tactic when it comes to tariffs?
Oh, he's a much tougher negotiator than me, and he's a much better negotiator than me. There's not even a contest. Okay?
The US imposed as high as 50% tariff on India imports by the last quarter of 2025. After strong negotiations and a few turns of negotiation tables, it has climbed down to 18%. Despite a framework agreement, a final comprehensive trade deal remains elusive due to disputes over H-1B visa restrictions and reciprocal tariffs. Bureau Report, India Today.
Hello and a very warm welcome on Business Today Television. Ladies and gentlemen, the markets are in fine shape. It's a 3-4 day rally which has added 1,000 points to the Nifty. We are well on our way to hit 200-day moving average in a couple of sessions, as also the banking and the financial space is doing immensely well. Now 3,300 points have been added in the previous 4 sessions on the Nifty Bank. Things are looking better for the mid-cap and the small-cap index as well. And the rupee, ladies and gentlemen, the star of the show, is appreciating versus the dollar. Oil prices have slumped below 200-day DMA. It is looking as good as it can be for equities. To discuss the way forward, we are now joined by Mr. Alok Singh. He's the Chief Investment Officer at Bank of India Mutual Fund. Mr. Singh oversees 22 open-ended funds, 2 closed-ended funds, and manages about 60,000 crore rupees in equity and debt. Namaste, Mr. Singh. A very warm welcome. How are you reading sentiment these days on Dalal Street?
Namaskar. See, the thing is, after last week news flow about some settlement emerging between US and Iran, there is a sigh of relief, and that is getting reflected in the way the markets have rebounded, or there is some amount of cheerfulness what we are seeing. While it is coming with a bit amount of caution, because the conduct of these two parties in last 3-4 months have not been very encouraging in terms of holding on to their words. So, while we have seen some rebound, there is some optimism, but we are not seeing excessive amount of optimism right now. Maybe once they sign it on Friday and some time lapse, probably market will become more confident that yes, the peace which they are talking about is here to stay. And also then some amount of disruption which got caused because of this start getting unwinded over next 3-4 months. And I think that will then getting reflected into earnings margins. And I think which is a positive sign. But I believe that the market is optimistically cautious, as they say right now.
I think we live with this caution, Mr. Singh. We've seen terrible times in the last 3 months, and many an equity investor has had his or her faith shaken in the Indian long-term story, although it remains intact in many parts. Because you also manage debt within BOI mutual fund, how are you looking at this government's steps to buttress the rupee, in particular the FCNR fixed deposit scheme that it has launched for NRIs and PIOs? You yourself represent a bank indirectly. How is the AMC and the broader bank looking at this scheme?
In our view, I think it's a very positive move, because yes, it has an implication on rupee per se, that the flows will help rupee stabilize. But having said that, if you look at with increased amount of Indian savers looking to invest in other financial instrument other than the deposit only, the banking system has been scrambling for getting deposit growth. And as you see, our lending growth has been higher than the deposit growth, and these concerns have been emerging often that, how will the bank sustain this kind of growth if the deposit does not catch up? So I think this also solves that purpose, because you get the liability raised from third-party sources outside India. And then I think that creates that equilibrium between lending growth and the deposit growth, which is very healthy for the economy in terms of the, especially at this growth phase where you don't want the credit growth to slow down and the, the new fixed asset formation to slow down, because those are the building blocks for higher growth rate in coming times. So I think it's a good decision taken at the right time. It solves two purposes, not only the rupee but also the liability crunch which Indian banking system was facing.
Fair point. And it is for the government to address this anomaly. And you are very rightly pointing out, of course, money is coming into SIPs and mutual funds. That gladdens your heart, but it's coming at the cost of fixed deposits. That's very rightly put. And a balance has to be reached, because you can't have booming stock markets and banks out with a begging bowl. Be that as it may, Mr. Singh, what has the research team at BOI Mutual Fund concluded at the fag end of this conflict? What worked well for the AMC? What wasn't so good?
So if we look at from our point of view, and I suppose you are asking from our portfolio,
yes.
Which made what. So basically, if you look at, we have been quite optimistic about few things like the lending financials. We were quite optimistic in financials, and the capital market names, we were quite positive. We were positive on auto as a consumption thing. We were positive on healthcare as a defensive play. We were not so positive on IT, and that's an underweight. Oil and gas has been an underweight for us. So far, those things worked for us. But as we say that, things are never permanent in nature. Now with the evolving situation, especially if this agreement actually gets signed, right, and some of the negatives get unwound, I think some of these things, maybe like oil and gas, may give a positive divergence over there. I think that could be looked at, but that is case to case. The team will work around it. But so far, these were the sectors where we had major sectors where we had overweight and underweight. So far, it has worked for us. Luckily, we didn't have sectoral allocation wise, we didn't have much of misses, so to say. But yes, it's a continuous job. We need to relook at things again.
Fair point. What are the opportunities that are in front of BOI Mutual Fund when it comes to the correction in valuations that we've seen? Nifty, of course, now well below the 10-year average in terms of PE and price to book. Are you actually looking at opportunities to deploy fresh money at this point, or what is the overall level of cash in the portfolio?
So currently our cash levels have come down. We would be on aggregate 3-4% of cash, which was far higher in the month of February. We were on aggregate having some 20% or thereabout kind of cash level, which we have invested, and it has helped us. So currently our cash levels are not that great. As you rightly pointed out, that with the earnings getting added, the markets on FY 27 and 28 basis, especially 28, are looking quite attractive because, whatever earnings disruption we may see in Q1 and Q2 may start getting normalizing in Q3, 4. And hopefully FY 28 will be a normalized year. And in that case, we may see, say on a BSC 500, we may see a 14-15% kind of earnings growth. That is quite possible. So I think overall the valuations are looking okay. And I would say they are fair. I would not say they are mouth-watering. They are fairly valued. But what has happened is that, because of the fact that we had a lot of disruptions coming from technology side, from the geopolitics side, some of the behavioral changes, the markets is increasingly becoming more bottoms up, right? So it is becoming very, very difficult to take broader sectoral calls, and I think that trend will continue for some time. So the focus is to identify individual stocks and build portfolios around that. That's how we are looking at right now. Increasingly, I think most of the market is fairly priced, so there is no larger pockets of undervaluations which you are seeing right now for us to plunge into something of that sort at a what you call top-down approach. So I think we believe that increasingly we are moving into a bottom-up thing, and that's where we would like to concentrate our energies on.
Ladies and gentlemen, this is as good a time as any to look at a fund that's managed by Mr. Singh. This is Bank of India Mid and Small Cap Equity and Debt Fund. It's just completed a decade of existence and has given a wonderful 16% CAGR each year since 2016. A lot of details will come in front of you. 45.33 is the net asset value, so 10 has become 45 in a span of about 10 odd years, and the returns are also fantastic. If you look at the 10,000 rupee SIP that you may have done in the direct route over a period of last 3 years, the returns have been to the extent of about 17% CAGR. So let's discuss this particular fund. Mr. Singh, what's the philosophy of marrying debt to mid and small? One would presume that mid and small cap funds would be used for wealth creation and creating multi-bagger returns, but you've added a talka of debt. What was the logic?
So the logic was very simple that, as you rightly pointed out, that mid and small cap, if invested well, help in wealth creation, and they are faster growth segments. Having said that, they are also married with a very large amount of volatility. And that volatility actually dissuade people to hold on for a longer period of time, or get out of these segments at the bottom of the cycle typically. So what we looking at this behavior 10 years back, we decided what if we can reduce some amount of volatility so that the holding period of people becomes longer, because they're not worried about the volatility as such. And then the compounding will do the magic. And I think that's what, if we look at 10 years back, we have been able to achieve, that the volatility has been quite lower. In fact, if the index which we follow for this is a 70% mid-small 400 and 30% CRISIL short-term index, the standard deviation of that index is actually lower than Nifty 100 index, right? So, we are able to have a lower volatility product with a propensity to deliver higher return, because you are majorly invested in mid and small cap over the medium to long term, provided you are able to hold on, and the debt portion allows you to bridge that gap. So I think that was the reason to cut the volatility and help people to have, because we have seen that many people avoid mid and small cap just because of volatility. So I think this solves that purpose, and I think that's where we thought of this.
Okay, and this has worked fabulously well for long-term wealth creators. If you look at the 7-year performance of this particular fund, the return is 20% CAGR, and Mr. Singh ranks second amongst 36 funds. A 5-year return is 17% CAGR. It's handsomely beaten the aggressive hybrid index. Again, ranked 4th out of 42. 3-year rank is 3rd, 1-year rank is 5th, 6-month rank is 1st, and 3-month rank is 2nd. Fabulous performance, Mr. Singh, and it is consistent whether you see short term 3 or 6 or whether you extend into the longer term 1, 3, 5, and 7. What is the philosophy when you look at stock picking? These are unusual stocks that are there in your portfolio.
The basic principle is that, since we have introduced debt and we are still a mid and small cap oriented fund, so anybody who is ready to invest in mid and small cap typically can question that, why should I take 20% debt and I not invest in mid and small cap 100% fund. Now, that means that, we need to have a portfolio which is 80%, on average it has been 75%, is able to do the heavy lifting for the balance 20%. So it's a bit of a barbell strategy over there, and that means that you have to have a bottoms-up approach over there, because you can't, do the heavy lifting only by beta. So basically, then you have to generate alpha, and for that you have to have, on the selection side, you need to have some bottoms-up stock picking, and that's where we have been concentrating, and that is what has helped us achieve the outperformance over the benchmark over almost 10 years now.
Okay, fair point. Let's look at the stock pickings that are there. Another point I'd like to ask Mr. Singh is, how do you ride the interest rate cycle vis-a-vis debt in this portfolio? Now that, cycle is mostly paused and you might see an interest rate hike, will the debt component change, or is it a constant 20%?
So, the debt typically while the debt allocation can be anything between 20 to 35%, and equity can be anything between 65 to 80%. But if I look at last 10-year average, roughly equity has been around 75% and debt has been around 20%. So we have, I think we will continue to manage that way. On the debt side, we are not looking to, take any aggressive either interest rate call or the credit call, so to say. Typically, we like to have a duration of around 2.5 years, because we are asking investors to invest in because it's a equity-oriented hybrid fund. So typically, you should invest for 3-5 years at least. So if my debt, if I run a 2.5 year duration on a roll down basis, most likely I will have a decent accrual based earnings from there. And the idea of debt is not that much of alpha generation, but more of the risk balancing, right? So I think that's where we try to do it with more of duration roll down and very little of, so to say, interest rate trading over there. So in that scenario, the rise in interest rates is not going to impact the fund too much, and nor we are looking to change our duration strategy substantially. Maybe we may reduce it a bit. We come more like 1.5, 2, but that's about it in case the rate starts moving up, but nothing substantial. It will remain accrual-based duration roll strategy.
Okay. In the last 10 years of the fund's existence, you must have played through 3 rate cycles, up, and now down again, and possibly up now. What has been the performance of the debt portfolio when rates have gone up?
See, in the short-term mark-to-market point of view, obviously, running 2.5 year duration, if the rates move up, you will have mark-to-market losses. You need to, there will be there. But since we are looking at, on a 3-5 year rolling return basis, in a fixed income with that kind of duration, you will accrue whatever yield you have entered into, provided you continue to hold to maturity. And since most of the portfolio is hold to maturity, and as I said, the duration roll down. So yes, on the intermediate basis, there can be some mark-to-market gain or loss both ways, depending on the rate cycle which you are. But yes, on 3-5 year basis, your contracted yield typically translate into your return. So on average, I think we have been able to have around 7 to 8% kind of return profile for our debt allocation.
Okay, fair point. We'll pause it here, Mr. Singh. What a pleasure listening to a very educative interview as far as mid cap, small cap and debt is concerned. This is an unusual fund, and it has done amazingly well for its long-term shareholders. Here's wishing you all the best, and we hope to chat again on many other parts of the market. Have a nice day, sir.
Thank you very much. Thank you for inviting.
That, ladies and gentlemen, was Mr. Alok Singh, CIO at Bank of India Asset Management Company. Thank you for watching.
The National Stock Exchange is in the
presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news. We've got your morning game plan covered. Watch me, Abha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
Presented by National Stock Exchange.
is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Dear viewers, you're watching the Business Today show with me, Sakshi Batra. This is where I get you all the closing action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. D Street is in buying mode. You can see benchmark indices trading firmly higher, with the Sensex now up by over 400 points. The Nifty crossing 24,100 mark. There is strength in IT stocks, pharma index, as well as the oil and gas counters, which are helping the market shrug off Friday's profit taking. Worst is behind us. Quant's Sandeep Tandon has expected that market highs by November could be seen. He also says foreign investors are also near its selling exhaustion. He also sees opportunity in small caps, power, telecom, and infrastructure. Gold and silver trade higher on the MCX. Gold gains 1,300 rupees, now to trade at 1.48 lakh rupees per 10 grams. Silver prices surge 5,000 rupees intraday to now trade at 2.38 lakh rupees a kilo. There are reports of progress in US-Iran peace talks triggering fresh buying interest. India's EV boom shows no signs of slowing down. According to Vahan registration data, EV registrations have now touched 2.02 lakh units by June 21st, already higher than June's 2025's full month figure. Overall vehicle registrations are also up nearly 20% year on year. The American dream may get tougher for Indian students. A major US visa overhaul will replace flexible student stays with fixed timelines, potentially increasing compliance requirements, extension requests, and immigration uncertainty. We'll straight away look at how the markets are trading at this point in time. We're just about 27 minutes away from the day's close, 100 points higher, holding on to the opening gains as well as far as the markets are concerned. But it's been a narrow band of trade and some choppiness in that space as well. Now, when we look at the Nifty Bank, that's in fact inched to the day's high level. That's where some more buying is emerging, about 0.5% higher for this one. IT stocks are coming back out of an underperformance of last week. You're also seeing pharma index trending higher. Barring FMCG, rest all of the sectors are in fact trading up. You can see India VIX also down by about 2%. That's also supporting the current sentiments of risk on trade onto the D Street as well. When we look at the kind of key stocks that are gaining as far as the Nifty movers and Nifty laggards are concerned, let's pull up some of those big gainers in front of you. We have Cipla from the pharma pack, Infosys, Dr. Reddy's again from the pharma pack, IT pharma, the defensives definitely looking up.
Reliance Industries is up by 1.3%. Remember, this is right after the OFS has been, the DRHP has been filed for Jio IPO. You're also looking at the big laggards at this point: IndusInd Bank, Asian Paints, Titan. These are the stocks that are down by 1 to 2.5% in the session today. You're looking at Trent Power Grid and Nestle, some kind of a profit taking that is being seen at this point in time. But let's welcome our guest on board. We have Kshitij Mahajan joining in on this program with us to share with us a fresh take on the markets. Let's welcome Kshitij. Hi, warm welcome to you, Kshitij. Good to have you with us. First up, your take on the markets at this point in time. We are holding up above 24,100. Where do you see the markets headed? We are now more or less discounting the kind of worries and overhangs that the markets had in terms of the war, in terms of the trade talks, in terms of the domestic worries as well. A lot seems to be coming together. Does it augur well? And now we have these big bang announcements of IPOs of NSE and Jio as well. Will that augur well for the markets?
Well, good afternoon, Sakshi, and I totally 100% echo what you are saying. Couple of things I think which can be a game spoiler here. One is obviously we have Brent around 78, 79. If it can hold up sub 80, I think that's very, very positive for us, because 85% crude we import, and it's a big dent on our CAD, and it create a lot of question mark on our currency also, because every time we spend a lot of dollars to buy that crude. Second, obviously, when you have big IPOs coming your way, which in the size of Reliance Jio or NSE. So every time a big IPO comes, it broad-based your market. So it's widen your markets. New investors come. If you remember any of the big name when they come in the market, you see a lot of demat accounts getting open, new accounts, new people come to the market. So I think these are two names which most of the street was waiting for quite some time. Now they are there. I think it will further broad base the market. Third important aspect is if we can put some halt to this crisis on the Middle East side, I think that can be a big game changer for Indian capital market. Also. And one other thing, I think the results were for the entire quarterly numbers on many of the sector side were really very good. So I see that, yes, to some extent valuations are lucrative. You will see much more flows towards small and mid cap space, because they have been really bashed badly after October 2024, and we have seen month of April where we have seen very good flows. And my sense is further we'll see flows. And at the same time, the entire construct of Nifty getting changed over the next 3-4 years time, that's what you'll see. So you'll have many players, when many new entities, my sense is with regard to power, with regard to AI, with regard to data centers coming in the fold of Nifty in the next 3 to 4 years time.
Okay, all right. So those are the kind of important triggers that you need to watch out for, viewers, in case you're an equity investor. But let's also talk about how the American dream may get tougher for Indian students. The US is replacing its long-standing flexible F1 student visa system with fixed admission periods, a change that could actually bring more paperwork, higher costs, and greater uncertainty for thousands who are pursuing higher education in America. So what exactly is changing, and why are lawmakers really pushing back? We have Pranay Upadhyay joining in with all those details. Warm welcome to you, Pranay. Good to have you with us. But this is not good news coming in for Indian students having that American dream. Slowly and gradually, the stance is getting tougher. Several steps have been initiated over the last 6 months of Trump's tenure as well. Give us an understanding how big is this impact going to be for Indian students at large?
Sakshi, first of all, we have to understand that what Trump administration is trying to do is a major overhaul of their visa policy. This is not directed against Indian student per se or Indian nationals per se, but certainly since Indian students are the biggest beneficiary, the number of Indian students registered in US university is over 3.5 lakhs. So you can very well imagine that how big chunk of the US visa system, especially the student visa, is being taken by the Indian students. So definitely any change will impact the student community, those who are aspiring to join the US universities. What Trump administration is trying to do here, they are trying to change they are trying to make the visa scrutiny more stringent. The scrutiny of their paperwork, their documents, their background, everything very stricter. And that's why, and also now the proposed change in the new visa system, especially the F visas, which is the student visa, or the J visas, which is for the exchange program, or the I visa, which is for journalists like us. They're trying to change the various rules and regulation. But as far as the F visas are concerned, they're trying to change the entire visa regime for the students from student status to tenure-based system. As in, like for any course which you are trying to get enrolled, they are going to make it specific to that course. And for a further extension, say about someone who tries and join the undergrad program, and you now or after completion of the undergrad program want to join another university for the postgrad program, he or she has to apply again, and that it will involve that will incur more cost in terms of more uncertainty. And even if someone doesn't or if someone failed to complete the course, then they will add to their uncertainty. So there are many things which will augur more insecurity among the student community from India, or like for the international student community.
Absolutely, this is definitely not coming in as good news. If you perhaps fail to complete a semester, then this uncertainty rises. In case you complete it on time, but you have to reapply, because if you're looking at job scenario, that will also be under question now. So all of those things will pan out. We'll continue to get more details on this from you as and when more clarity emerges there. Pranay, thanks a lot for that. But there's another big breaking news coming in, viewers, and this is with regards to how the UAE could be latest BrahMos customer of India. This is as per Reuters that we are getting to know. India is in talks with the UAE for sales and talks on the sale of flagship defense systems. Reuters has also pointed out that the talks could include BrahMos missiles. Akshatir, also one of the systems being discussed at this point in time. Let me go across to our senior executive editor, Gaurav Sawant from India Today, to give us an understanding of how to really look at this entire space at this point in time. What does it mean for India, Gaurav? And how big is this situation? This has not been reported before. What is the state of the talks that are happening between US, UAE and India at this point in time? What would it mean?
So the United Arab Emirates has shown tremendous interest, not just in the BrahMos supersonic cruise missile, but as India and UAE intensify their comprehensive security partnership. It's the Akash surface-to-air missile system, the Akash Tir integrated air defense system, which is AI-enabled, and BrahMos supersonic cruise missiles. The two countries, they've realized that their close partnership holds both countries in great stead, especially after Operation Sindoor, when the world saw the superb performance of the BrahMos supersonic cruise missile that decimated multiple Pakistani air bases and terrorist launch pads and training centers. There is a tremendous demand for BrahMos. As you well know, initially it was just the Philippines, the first customer for BrahMos supersonic cruise missiles, and then Indonesia showed interest, Vietnam showed interest. They are buying the BrahMos cruise missiles, and BrahMos, as you well know, is a land, sea and air launched missile. It's a supersonic cruise missile. The export version is about 290 kilometers. It's 2.8 times the speed of sound. Nothing can intercept this missile, nothing in the world. India, of course, for our own self, is making the BrahMos missile that the air launched version can go hit a target 800 kilometers away, 3 times the speed of sound, so nothing can intercept it. And since it's a cruise missile, very difficult for it, the way it's shaped, very difficult for any radar to intercept it. But it's not just the UAE, there are other countries that are also showing interest in the BrahMos supersonic cruise missile and the Akash Tir system and Akash surface-to-air missile system. So a lot of Indian exports, and if I may, for business, it's really good, because if I take you back to 2013-14, India's exports, and especially military exports, they were just about $81 million, but now they've shot up to almost $4.2 billion between 2013-14 and 25-26.
Gaurav, could you also highlight, does it put India directly in competition with the US influence? How would you look at that aspect now?
So India's always believed especially since this government came to power, in being able to export military hardware, manufacture military hardware in India and then export it, because then your sphere of influence grows in an area, that your dependencies and interdependencies with those countries, they increase. And especially across this region, if countries were to buy Indian military hardware, made in India military hardware, it's not only much cheaper than what comes from Western countries, it's also in many instances much better, readily available. And there is a partnership that's built for decades. I was just interviewing the head of the BrahMos systems, and he told me, so this is a missile, you're not only selling the missile, what you're also doing is you're making a partnership where you'll be servicing it, you'll be maintaining it, you'll be upgrading it, you will be giving it a life extension after 2 decades, 2.5 decades. So this is a partnership with those countries that is being established for the next 2 to 3 decades. And imagine rising from just 81 million 10 years ago, 12 years ago, to now $4.1 billion, and then going even higher. 35,000 crore is what you've achieved, and what you hope to achieve is much more in the decade ahead.
Absolutely, and Gaurav, we are already looking at the stock markets react sharply. Bharat Dynamics and BEL, both are these stocks that are at the day's high point. Over a % gain for BEL, and Bharat Dynamics also rallying in trade, with of course the discussions ongoing between UAE and India to acquire some of our flagship defense systems, including BrahMos supersonic cruise missile and Akash air defense network. Thank you so much, Gaurav, for sharing with us the importance of this big news development that's coming in. Of course, the defense space will be largely in focus. Let me go across to our guest, Kshitij Mahajan, CEO of Complete Circle, who's with us on the program. Kshitij, how would you look at this big news flow that's coming in? UAE now in talks with India to acquire BrahMos and Akash. What does it mean for the defense sector that has actually been largely consolidating for the last 6 months to 1 year? Not big bang returns have been seen here, but as and when, what Gaurav was saying is that our exports have multifold, from the times, if we look at in the last 10 years, looking at the government's focus now on Atmanirbhar Bharat in terms of defense and also on exports and the news flow that's coming in.
So it's a welcome news, Sakshi, and my sense is from importing everything with regard to defense now, we are able to manufacture more than 60% here in India only, and total push is there to Made in India campaign. And boss, this is just one of the opportunity which you are seeing from Philippines or Dubai. You'll have a lot more queries coming your way, and I think it's going to be a very big opportunity. They're talking about $5 billion of export on the defense side, and not only missile but defense system, your UV radar system, your drones, everything, and many marquee names are working in that field. I think it's a combination of each and every component, like in a car, that everything will work for India. And herein we have 5-year defense system if it comes to aerial strike, and that also works really in the best spirit. Now, in fact, that some part of the technology has been done by Russia on the BrahMos side, but they want us to make BrahMos for them also here in India. So I think we have to step up the facilities. I can tell you one thing from what I can make out while meeting and visiting these plants, that there's a clear mandate by the government that they have to step up the facility by 2 or 3 times in the next 3 to 4 years time, and they are doing that. And if it's a situation, and we have seen a situation where it was more like a two-way war, because China was supplying to India when Operation Sindoor was going on. China was supplying to Pakistan and Operation Sindoor was going on. So if it's a three-way war, let's say for example, we have a lot more to do as a defense within a country, and as well as there is an opportunity which will open up outside also. So multiple things will happen now. When it comes to small things like hand grenades, missiles, rocket system. So France is in talks with many of Indian companies for Pinaka rockets. They've done some testing also in Rajasthan. So every country doesn't require a 2,000 kilometer range or 1,000 kilometer range missile. For Dubai, all the Middle East subcontinent is captured in very small distance trajectory.
Absolutely.
I think with the given estimates what we are talking about, this is one of the best thing which has been made in the world, and I think we'll have a lot more things coming our way.
Yeah, over 1% gain for the defense index, viewers. It's at the day's high level, and you can clearly see now 1.5% higher, absolutely at the day's high momentum after this news flow that we've broken for you on India Today right here. Let's move forward, viewers, and try and understand more about markets. Markets have bounced back sharply from the April lows, and we have seen Quant Mutual Fund founder and CIO Sandeep Tandon, who believes now the worst may be already behind us. In a conversation with Business Today's Shail Patnagar, Sandeep Tandon has said that the market setup remains constructive and even also sees the possibility of a fresh all-time high by coming November. Let's listen into what he had to say.
So frankly speaking, for nearly from last 2.5 months, right from 1st April, we have been talking about that worst is behind us. And we said it's a time to capitalize the opportunity, not get capitulated. And thesis has been played out. So we have showcased that mid, micro, small cap has a potential to outperform. We turned positive in 1st April in these spaces where we have been negative from July 2024. I think the background is constructive. Now, if you say where everything is hunky-dory, everything looks good, the answer is no. But I think when we say worst is getting over or is largely over, then you have to keep a constructive mind. By December 2025, it looks far superior than what you're looking at January 2025, so something similar. I will not be surprised if you see market making all-time high maybe in November itself. So I think, but what is important, I said, the levels of the indices is non-important this year.
Okay, let's also shift focus to the auto sector now, viewers. India's auto market is accelerating sharply in the month of June. We are seeing vehicle registration surge 20% year on year. And the biggest surprise is that EV sales continue to break records, while passenger vehicles, two-wheelers, as well as commercial vehicles all have clocked in strong growth, pointing to robust consumer demand across the board. For more on this, I'm now joined by my colleague Chetan Bhutani, who's getting us all of those details. Chetan, seems like the auto sector is in the fast lane. Constantly every month we have been reporting higher numbers, and now the Vahan data points out to record numbers of EV sales and strong data across the board as well.
Well, absolutely, Sakshi. If all goes well, we still have about 8 days to end the month, probably because last month we saw growth of 27%, and till 22nd June we have already seen a growth of 20%. So in all, we're expecting the growth of June to surpass the month of May, because next 10 days we'll also see some buying. But however, passenger vehicles still remains the king of the board with 23% growth year on year, with 3.33 lakh units being sold. That's a massive number. Two-wheeler registrations have risen from 14% the previous month to 19% already, and we are seeing about 30% odd growth in the last month to about barely 20% already underway. So clearly, Maruti Suzuki, Mahindra would be leading the pack, as we are seeing along with Tata Motors, and of course in two-wheeler space, we would be seeing Ather Energy in the electric vehicle space, with Bajaj Auto also leading the pack along with TVS. Similarly, in the two-wheeler space, we are also seeing about 27% odd growth. So clearly, in the next 8 days, if a good buying happens, the party will be continuing on the auto sector as well, with robust sales going on.
Absolutely. Thanks a lot, Chetan, for getting us those details. Coming back to Kshitish now to take a fresh take on the auto sector as a whole. Kshitish, you just saw that data coming in for the auto sector. And I want to understand from you, one, on the EV space, what's your stance as a market participant, especially given what has happened over the last 2 to 3 weeks, extreme amount of debate and focus on the kind of fuels that we are having, flex fuels that we are looking at. People who were probably looking at their next purchase right now are thinking twice and thrice that whether they should go for ICE vehicles at all or just completely shift to EVs to avoid the hassle of what may come in next as far as ethanol blends are concerned. So how would you look at what's happening in the world of auto, and which are the segments you're most positive on?
So, Sakshi, first of all, I think manufacturing has to play a very important role. We are a very young nation, 31 years is the average age, and you'll see a lot of blue-collar jobs getting created. And auto is one field where you'll see a lot of momentum will happen on the manufacturing side. On the GDP side, also 9% contribution of manufacturing is through auto only, if you see. Not only domestic sale, as well as your international sales also, all these companies are doing really well. Second, coming on to whether EV or ICE, all I'm saying is right now, in terms of penetration, we have a long way. There's a very long runway ahead of us where we have to look at it that what type of numbers which we can target. So 27% you're talking about. If you ask me, my sense is this will grow at 40% plus because one, as you rightly mentioned, there's a big gap between the price of fuel which you are paying and EV charging. That's there. Second, there's a lot of gig economy through which operates now through your EV platform only. So I think this both combination will make things really good for India, as well as not only for India but for countries where they are exporting also, including Africa. So my sense is in auto, what we're looking at a value chain of companies which are making smart locking system. We're looking at a value chain of companies which are into giving EV solutions. We are looking at businesses which are providing IT solutions to various companies. We evaluate a company on the basis of per car kit value or per scooter or per bike kit value. That's what we are doing at our end. So I think there are many such businesses. Whenever you play a theme, as you said, that if auto is a theme, play through the entire value chain. Let's take for example on the car side, what's the best selling SUV car? What is in the company which is doing good into tractors? Someone who's doing good into EV car or EV bikes, as you said. Someone who's providing EV solutions. Someone who's actually looking at some smart locking system. Someone who's on the IT side. So just play the entire value chain and give some allocation, and you'll see this sector doing very well. We as a house, we are very bullish on auto sector.
Bullish on auto space as a whole. Okay, let me also come, we just lightly alluded to the big bang IPOs, but we must discuss this space very closely. Both NSE and Reliance Jio have filed their DRHPs with the SEBI, which means that they're inching closer to their D Street debut and launching of their IPOs as well. These are two mega IPOs, the size that we have never witnessed in the history of stock markets. Together, they are going to be raising somewhere around 65,000 odd crore rupees and mammoth valuations as well. Because they are also large conglomerates and there is also a heightened interest from global investors, from mutual funds, from retail investors, all alike at this point in time. I want to understand one thing. When such mega IPOs come in, what happens to the secondary markets? Do you see some kind of a liquidity extraction that will happen from secondary markets and go to the primary markets? Will people start saving up on cash? Therefore, what should be the understanding over the next couple of months till the time we see these IPOs come in?
So secondary market always expands when these type of IPOs come. As you know, there is enough buzz in the market. As I said in my initial statement, a lot of new people will come to capital market space. Moreover, now SBI is there, Sakshi. Your money gets logged in for 3, 4, maybe 5 days time. So yes, you need to park some money if you need to buy shares in capital markets, but at the same time, allocation is as per the given number. So for some time, maybe the liquidity will get sucked in, but there will be a lot of new money which will flow in also. So my sense is there will be a lot of domestic institution and foreign institution will be participating here. On a retail market size, yeah, the size is small. And you see the market getting expanded. A lot of people who are bidding on the sideline that maybe let's see market will get fine. Then maybe I'll start my allocation towards mutual fund or direct stocks. You will see those all type of clients will come in and jump in. Any big IPO which has come in the past, whether Reliance Industries, if you remember, Reliance Power was there. Although the company has not done well in 2008, but it led to opening of a lot of demat accounts at that point in time. So I think whenever there's a big name and good names when they hit the market, you'll have much more players coming to capital market. At the same time, market get expanded. At the same time, width of your capital market increases. Now you have single company which are more than Indian market cap. When you these type of IPOs coming and which will add, like my senses, your Jio will be around 130. That's what they are saying, 125 to 130 billion, and your NSE will be around, overall market cap will be around 50 billion USD. So I think that type of wealth, new $180 billion as a whole will come in the market and will broad base the market. So I think yes, obviously you will see shares trading which are free float, that's only getting traded, but overall depth of market increases a lot. So I think this is good for a country. Maybe it will again spark the ignition with regard to more and more IPOs companies getting listed, which was for some time now on the back foot.
Okay. Now, another question a lot of people would have is that we are seeing a worldwide phenomena of mega IPOs. We just witnessed SpaceX, getting launched in the US. We are also waiting OpenAI, Anthropic. Back home, we have NSE and Geo. In the US, what is being talked about is these mega IPOs could actually point out to a market top in the US, because these IPOs are coming in at a time when the markets in the US have already risen to record high levels and have been rallying. India, on the other side, has been underperforming since last 2 years vis-a-vis other developed and emerging markets. How would you see then the comparison between mega IPOs of India, what it presents for the Indian markets, and what happens in the world?
Little weird. What you see in US, you are ready to give 95 to 100 price to sales. In India, some company which is actually generating earning for you, we are not ready to give a multiple of 25, 30 also to a new IPO. Second, if you see, if someone raised capital in US, now NVIDIA is raising another $25 billion. It's a listed company which is more than $4 trillion of market cap. They're raising capital. You reward that company and you reward that market. You reward that company and you reward that company in that market. In India, if some company will raise capital to do some expansion, normally we see that market punishes that stock. So I think there's a difference of approach. But I think that day is not far when you will see in companies in India also, coming out with these big numbers, these big market caps.
Yeah.
And I think maybe it's a start with NSE and Geo.
Absolutely. The markets have shut shop, viewers. We are above 24,050 for sure. 24,087 is where we have ended this session at, about 0.3% higher, although we've cooled off from the day's high point. But when we look at the Nifty Bank, that's done a tad better than the Nifty. And we've seen most of the sectors end higher, barring FMCG today. We've seen the pharma index up by 1.3%. We've seen the oil and gas index about 0.8% higher, IT index up by 0.7%. Even the broader markets holding about 0.3% up in the session. FMCG, on the other hand, has dropped by about 0.5%. But the large sentiment has still stayed on the positive side. Remember, however, that this is a holiday shortened week and we just have 3 more sessions to go for the markets for this week. But we have a lot of questions coming in for Kshitij. Kshitij, we'll ask you the questions that our viewers have sent you. Our first question is from Varanasi. Ashok Singh has asked this question to you. He says, I've invested heavily in defense stocks. So is it a good time to add these stocks for the next 1 year or so?
So I think, sir, if you can track these companies personally, you understand the sector personally, you listen to their earning calls, go through the balance sheets, and if you know the overall understanding about this sector, then maybe it makes sense to add more. Otherwise, take a fund route. Take a fund route. But if you ask me, this sector is going to do very well over the next 5 to 10 years' time. And I think it has such an economic moat. Now, Sakshi, let's say if anybody will have some $1 million in their pocket and they want to start something new, we will talk about anybody will talk about fintech or food tech or some other tech. Nobody's going to talk about to have a plant in some jungle or remote area to make explosives. Okay. So I think just look at it, do a fund route if you don't understand much.
All right. Okay, we're completely out of time on this edition. Thank you so much, Kshitij, for being with us and for guiding all our viewers there on the insights and opportunities in the markets. Viewers, we'll wrap here. In case you have any questions about your mutual funds, stocks-related queries, send them to us on the WhatsApp number that's flashing on your screens. Till that time, thank you so much for watching in. We'll be back with morning coverage tomorrow morning at 9:05 a.m. Stay tuned for that.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is your favorite show, Daily Calls, a show that answers your specific stock questions on the program. This is where we will try and understand what top market experts have to guide you on the markets and on your specific stock questions as well. So in case you're here for the first time, the WhatsApp number is flashing on your screen. Send me your questions here along with your name, location, and your contact details, as we can give you an opportunity to speak